What's going on, guys? So, if you're a beginner trader and you're wondering how you could get started with day trading, like you see us do live, then this is the course for you.
Yeah, we've been getting a lot of questions on our live on TikTok and everything. And some people it's the first day, first week, first month. So we're gonna reveal everything you need to know just to get into trading. And this is one of our free courses that we give away on our YouTube. So we have a lot of courses that we're gonna wait for completely free. So be sure to subscribe and check out all our courses. So let's get into it. The tools you need to trade. Trading view. This is trading view right here. You're gonna see it. It's trading view. Firefox. Trading view. MetaTrader 4 or MetaTrader 5. MetaTrader 4 or 5 is a trading app where you can use to enter and exit trades for Forex. If you're trading stocks, you can use Webull, Robinhood, all these brokers. We'll list all the apps you can use to enter and exit trades below. The ones that we use, at least. You can go on Google and YouTube and find thousands of apps, maybe hundreds of apps. But we'll just put the ones that we use for trading if you want to check those out. But MetaTrader 4 or 5. It's an iPhone app, Android app. And it's also a web app. And then you need a broker. A broker is how you load money into your brokerage firm, and then you're able to place trades. Like before, you have to go down to Wall Street and put in orders with a piece of paper. Your broker takes your trades from your MetaTrader 4 and MetaTrader 5 app and communicates it directly to people on Wall Street and everything, so they can put your trades in and they put the trades in with the bank and everything. So the broker is the place between you and the bank, and the apps help you connect to the broker. So you view the charts on TradingView, place the trades on MetaTrader 5, and you upload the money in your broker, and your broker makes the trades go to the bank and away from the bank, so you're able to make money. And then the fourth and only thing you need is a trade. You just need a trade idea. A trade is, sorry, our group's going off right now. A trade is a buy or sell position that has a stop loss and take profit attached to it. All right, so let's get into that next.
And now, first, we want to cover TradingView. So, TradingView is a software app that we day traders use to look up any chart, whether it's stocks, Forex, or crypto, even options. And you can not only look it up, but you'll also be able to use the tools within TradingView to analyze charts and find different trade setups. And TradingView is also free, and you're able to download it. We have a QR code within the slide, but we also have a link where you can download the slides for this course, and then you'll be able to access it from there.
What is MetaTrader 5? As we spoke about before, MetaTrader 5 is an app where you'll be able to use MetaTrader 5 to connect to your broker and take live Forex and crypto trades. The broker is where you load up money and, more importantly, cash out your money and your earnings. And the brokers that we use, we'll post on Telegram. You can message us on Telegram, and we'll tell you what we use. You can go on Google, YouTube, type in brokers to use and do your research and find hundreds of brokers also. So there's lots of options for brokers. Again.
So and then step 3, I believe, or the third thing would be a broker. And broker is where you load up money at, and more importantly, cash out your money. So the broker we use is HeroFX, and we do have a sign up link within the slides. So check that out. And
on HeroFX also, I want to add in, bro. We got a copy trader on HeroFX, so this is really cool technology where you can sign up below your broker, and then you can subscribe to our trades at Robo Trading, and you can have your account automatically take every trade that we take. So you don't even have to trade really. You can just link the account to it and it copy the trades automatically, and it's free to use that tool. So that's really cool. That's why we use HeroFX, and the link to do that is going to be here, where you can copy our trades and everything and just take the same trades we take. If you're just starting out and you just want to watch an account grow and see how it's done, that's a good way to do it. Let's get to the next. What is the trade? The final piece of a puzzle is the trade. You need a reason to buy or sell whatever it is you plan on buying and selling, whether it's gold, silver, oil, Bitcoin, Ethereum, Apple stock, Tesla stock, Euro USD pairs, whatever it is you want to buy or sell. A trade is a reason that you have to buy or sell it. So for it to be a trade, you must have a stop loss price and a take profit price. Stop loss is how much you're willing to lose in that trade. If it goes wrong, if everything goes bad, how much you're willing to lose, you need to know that. And you need to have a take profit price, how much you want to take off the table when the trade goes good. So you need to have both those things. Without those two things, you're just gambling and you're not trading. You're just jumping in and you're hoping it goes to the moon. And we've seen that work for some people in the past. They bought Bitcoin at $1 and it went up to like 60K. And some people, they got out 60K. Some people didn't have a take profit and it came back down for them. But you want to have a take profit and stop loss, or else it's just gambling. So if you're trading with us live on TikTok and we say buy gold and the stop loss 1900, take profit 2000, you'll be able to set that trade in your MetaTrader 5 and let the trade run to completion. So you'll have your stop loss and take profit. And we'll always tell you stop loss and take profits when you're trading with us live and stuff. How to find.
And then there's also, you want to know how to find trades. So you can also, of course, use our free Telegram group where we give out some trade signals. And I'm sure some of you have seen it live on TikTok, YouTube, Twitch, Rumble, Kick. We're on like multiple platforms. And look at the charts, find the patterns, the chart patterns, I should say, indicators that tell you if a trade is incoming. Watch the charts to see which charts are taking off and jump in on the action. If you want to learn chart patterns and indicators, check out our YouTube videos. And our YouTube is at Real Bros Trading. So you also want to be able to use the trade copier, as Ty mentioned earlier, the trade copier that we have with HeroFX, and then that'll automatically have your broker copy the same trades that we're taking.
And congratulations, you now finished your first day of trading and you're ready to get out there and start trading. Get familiar with the apps that we mentioned and the broker, and practice, do demo account, open up a demo account, practice using it. And just get familiar with it and like all the different tools you have available. Like Book said, check out YouTube, everything, TikTok, ChatGPT Millionaire, YouTube at Verbose Trading, Telegram is t.me/Verbose Trading, but the links are going to be below in the description. And if you like this video and you're ready to take it a step farther in trading, if you get comfortable with those apps, click on the video here or there. It's going to be a video popping up somewhere, and that video will take you to the next course where you're ready to actually start learning more about trading. Peace.
Peace.
Definitely get funded, guys. Like when I first heard about getting funded, it was funny. I was like, oh man, like these people, they want me to get funded. I was watching other people on YouTube and stuff. I was like, oh, they want me to get funded just because they get paid from when I get funded. That's what I was thinking. I'm like, that's why they want me to get funded. And then when I learned, like, 1 week I could have like $1,000 in my name, and then in 3 days I could have 2.5 million to trade with, and my trading skills are high. I understand logically how to grow an account, and I can make 50K that week. My whole life can change like that. I can take, I'll do the math on it. I'm gonna remove these drawings. Let's say I have let's just say I have 1 mil. Like, I won't even use all the funding. Let's say I have 1 mil, right? I have 1 mil. 1% of a million is, drop all 2 zeros, 10K. All right, 1% of a mil is that, and then 10% of a mil is 100K. All right. So these brokers, these prop firms and stuff, like, they'll give you a mil because most traders don't know how to trade. They're not thinking logically, they're thinking emotionally. So the house always wins. So Like there's not gonna be a lot of viewers here. Like a lot of people are not gonna learn the stuff you guys are learning. And if it ever gets too mainstream, I may even take it down. I don't know, but the people who are learning it, it's gonna be great for you guys. Like you're just gonna learn a lot of secrets. But yeah. So you have $1 million, right? 1% of the 1 mil is $10,000. So beginning of the week you had $1,000 in your account or whatever you had, and then now 3 days later you have $1 million account. You're sitting with $1 million account, and let's say now your goal is just to grow that account 1% a week. If you're just growing your account 1% a week, and you see from the trades we hit yesterday, so we came through, we traded, and we hit this trade right here. This trade was 1.65% trade. And we hit two of those trades. We hit a trade on gold too, I think. Let's see how much that trade was. And gold's still going crazy. So the trade on gold, we hit another 1.19% trade. 1.20%. So I'll go right here. That's like 2.3%. Like I'm gonna take away some points because I don't do the math. Let's just say let's say that was 2%. I really don't want to do too much math. So we just made 2% in one day of trading. So we made 20K that day. Now most people don't make 20K for like half a year of work, 3 months of work. So to go from having $1,000 to making 20K in a day is huge. Only risking a small amount of your account. And if you were trading properly, if you were trading using what all the risk management I just taught you, you're risking 1% to make. So you risk that 1% to make 3%. So that 3% is 30K. So now you made 30K on first trade. And this is how you can change your life really quick, guys, from trading. Like, I may upload this video later. I actually will, because a lot of people, and then, like, I used to work hourly, and it's not the way ever to work. Because, I mean, you have to do it to get enough money to do stuff like this, and to pay for this knowledge. Just like, but once I pay for this knowledge, I can share it now. So trade 2, you hit that. So total, one day, you made 60K. Right? That's day 1. Now let's take day 2. Let's say day 2, we take a trade, right? Trade 1, we risk the same 10%, I mean 1%, which is 10K. So let's say we lose that trade, right? Let's say we lose both trades on the next day. Like, but that's not, that doesn't happen. Let's say we lose one trade though. We lose one trade, so now we're minus 10K. And now your account is what, 50K in profit still. So you're still 50K in profit. We could even lose a trade too. And we don't do this, but I try to give out the best signals for you guys. But just to show you guys how math works, then you can lose and still be profitable and make money. It's not about all being 100% right. Trading is never about that. It's about being 80%, 60%, 50%, being above 50% right. That's all trading is about. You can even be 30% right. There's a trader who's 10% right and he's up 400 million. He's only right 10% of the time or 4% of the time. I'll play his story and I'm going to do the math on him actually out there. And so let's say you lose that trade too, and now we're up $40,000 after day 2. Now day 3 comes, and copy this to make my life easier. And trade 1, we hit trade 1 for 30K. That brings us to 80K. And then we lose the second trade and brings us back down to 70K. And I'm not even gonna finish the week, but this is what your weeks start to look like when you get $1 million funded account. And then, so now you're up 70K for the week, and then they pay you, I think you get paid 80% of that. So if you do a 100K week, you're making 80K like paid out to your account in cash. all because you traded smart, you traded right, you just didn't get emotional, and you did everything the correct way. So that's how your life changes. This is why like you see a lot of traders give away money. I'm gonna be doing giveaways. I'm gonna give away money. I'm gonna be doing more fancy stuff. But I like to live like just a low key life and just chill out and take care of my family more than like chasing going to the Louis store and buying all these like brands that don't know my name. So I like to do stuff like that. But you can do whatever. Like I prefer you guys buy real estate. Once you start getting money, you just keep buying houses and real estate, and just invest it for a long term, and you build generational wealth. That's what I teach. But you can do whatever you want with the money, spend it however you like. Because once you're making this type of money, your whole life is a little bit different. You pay your taxes, make sure you're paying your taxes and stuff. And this is how life can change when you have $1 million account. So I want to show you guys the guy who he's 4% accurate. He's up 200 million. Alright, so I can't find him. So basically it's like this guy, this trader, he only hits 4% of his trades. He's 4% right. He's up 400 million in his trading career. Now let's go to a simulator right here. This is how it works. If he's only 4% right, let's say he got a 100K account, and then go 35 trades. I know he's going for like at least 50 X's or more. So he's risking his doing proper risk. So this shows you can be 4% correct on your trades. If you go for huge trades, you're going to be able to go up over time. Like these equity curves are like, he's actually going for bigger trades. Oh, I know why actually. I gotta do 100 trades. Yeah, so this is how his account grows. He's prepared. He takes his 100 trades always. You gotta take your 100 trades because you're 4% right. So you can't just take 20 trades. You have to take 100 trades, and this is going for 200x on your trades. Like he's probably going for like 50x. That he can't even go for 50x. He's probably going for 100. Nope, he's going for 200x. So he's 200% return on his money, or he's going for 200x return. So he puts in $1, he wants to see back $200 every time he trades, and he made 400 million following that strategy. So he looked for trades where he can make 20 bucks off of $1, or 20,000 off 1,000, whatever it is. And he looks for those trades all day. That's not his whole account. He's prepared to lose 96 trades out of 100 just to make those 4 trades. And when he makes those 4 trades, his account goes up always. So he's using math. Like all the top traders understand this. They understand math. What you guys are learning is very advanced right now. Like you're learning very advanced stuff, and it's gonna be able to change your life. So, but he uses math, and his money always goes up. So I thought it was cool. Like I found the story like on Instagram. I was watching a story. I wanted to show you guys. Let me see if I saved it actually. I want to show you guys this video. YouTube, don't flag me. I don't own this. But let's Let's see if I can find a video for you guys. I'm pretty sure I saved it. Yeah, I didn't save it. But yeah, like, you don't have to be 100% trader. You really don't. So I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok and links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make $60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leveraged and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you get funded for 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts 10% a week. If we do a 10% a week on 2.5 mil, you're getting 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains. And you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Gotta drink water. See what else we got. This is the leverage trading. 1000x leverage they give. So you get 1000x leverage and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I have typed up the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But 1 pip equals 10 ticks. And a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to... a tick is each time the chart moves 1 click up and down. So you want to look at the chart and see how it's moving and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is. And if you're a beginner trader and you want to become a profitable trader, this is how to day trade in Forex for beginners, step by step. You're not gonna want to miss this. This is one of our more advanced courses. So if you didn't check out the beginner courses, check them out. And let's get into it. What is
So yeah, first we want to start with what is trading. So trading is basically a battle between buyers and sellers, or more commonly called bulls and bears. So bulls are the buyers and bears are the sellers. And they're battling to find a fair price for an asset, be it Bitcoin or be it a metal like gold, a stock like Apple, etc. And then you can use a broker or exchange to buy or sell if you think the price is too low or too high. The broker we use will be in the description below this video.
So that's trading, guys. That's the charts. You got a chart, and they're trying to find a fair price always. Alright, let's go into our time frames. So time frames determine the price movement in each candle. So I'll open up the chart for this. So we're going to our time frames. We got longer time frames. We got shorter time frames. So let's start at the longer time frames. We're going to a year. So we got our year chart. This is gold. Over time, it's just been uptrending, as you guys can see. And it's just gold has always been going up. That's why it's one of the top assets on the planet. Alright. And then you got other time frames, like you got your month chart. See your month chart, it's the same chart, but it's just spread out. Each candle now, each of these candles right here represent 1 month in time. And normally when you guys see charts, you guys are gonna see like I don't know how system or something. Let me see. When most people see charts, they look like this. Let me see. How do I go to default colors? Alright, so when you're just starting out, your charts are gonna look like this, guys. And let me just delete everything. So this is how it looks when you're just starting out. Charts are gonna look like this. You know, you got your green candles for the buyers, red candles for the sellers. And each candle right here represents 1 month at a time. So right now, for this month, it's red, so the sellers are in control at this point, or the bears are in control at this point. This is a bullish month, bearish month, bullish month, bear. So, and these are month candles. Then you got your week candles. Same chart. If I zoom all the way out, uptrending over time. Each candle now represents 1 week. So this is 1 week. This is the week we're in right now. This is last week, the week before that, etc. Then you got your day chart. You got bull days, bear days. You know, it's your day chart. Each candle represents 1 day in time. Same chart, but now it's just spread out longer. I can't even zoom all the way out because it's too many days. And then you can go down. You got 4-hour time frames. You got 1-hour time frames. You got 5-minute time frames. You got 1-minute time frames. You even got 5-second time frames. 1 second. Every second. This is go to every second. So you got all these time frames. These are your time frames. There's no, you know, like, you're not gonna see me trade on this time frame. These are your time frames, guys. Each candle represents a second on a time frame.
So the next slide that we want to cover is support and resistance. These are price levels that have an abnormal amount of buyers or sellers.
Yeah, so to add on to that, because we didn't go too crazy on the slides, let's talk about it. So I'm going to show you guys with this live chart right here examples of support and resistance. So I'm going to use this tool right here. We call the horizontal line, and right here would be the area of support. Price had trouble, came down, it just couldn't get below it, and it kind of formed like a floor, and it bounced off this floor, and it's bouncing off the floor going up right now. And it's going crazy. If we weren't shooting this course right now, we'd be trading right now, and it kind of pains us not to be growing our accounts and taking trades, but this is for you guys. You know what I'm saying? Just want to help out. So this example of support, you can see it came here, bounced off the support, went up into the 2000s or 1950s. Again, support. Let's talk about resistance. So I'm gonna call that support. But support could also be resistance. While this is support right here, if I go back in time, this support was probably a resistance level. Like, for example, over here, it came to this level, it kind of got above, and then it came back below the level, and it rejected it and shot down. You can see it right here. So this is an example of resistance. The same support line can become resistance. So it was support, it just couldn't hold the support, and it broke down and became resistance from the same line. And then it even come over here, tried to come above again, broke down again, eventually got over the support. It got over the resistance, and then that resistance became support for movements upward. So that's pretty much support and resistance, guys. And how you guys want to draw your support and resistance lines, you want to look at the chart, and you want to see which price is price rejecting from, or what prices is price rejecting from the most. Like on any chart, you can choose any time frame you like. Go hour, 30 minutes, whatever time frame, 5 minutes. Even if I go down to the second or whatever time frame I choose. But that was just hour. So this would be hourly support. And I'll show you more examples. This right here, price came up here, rejected once, rejected twice, rejected 3 times. That is resistance for this, and then it eventually became support. Up here, you got another example. Price came up, rejected, came up again, rejected, came up again, rejected, came up again, it couldn't hold it, and came back down, eventually came down. That's resistance right now. And that resistance can become support in the future. Alright, I think that covers support and resistance. And we cover more advanced too in the Discord and stuff as you guys keep going more and more advanced. This is a good lesson on it.
The next part we want to cover are major areas, and these are levels where the market's 50-50 between the buyers and sellers.
Yeah, so I'm gonna pull back up the charts to add on to that. Like right here, again, literally support and resistance areas. But now an area is not a line. An area would be a box. Oh, I got my tools right here. An area would be a box. So this is an area. This is a major area where prices have been bouncing up and down, and I'll give you another example. Price has been bouncing up and down in this area. Price right here, up and down, market's 50-50. It's just like if you took a buy here, it came down. If you took a sell here, it came up. It's 50-50 market between buyers and sellers, and eventually the sellers took control and bring us down to the next major area. So, just some food for thoughts. The market goes to 50-50 and it starts. Buyers and sellers are battling, and then they're trying to move the price over. And then it's so crazy, if you bring this over, you can see this major area right here. Same thing happening over here in this major area. So a lot of 50-50 movements between buyers and sellers happen in the major areas. This is not as major, but this one is very major, as you can tell from the history. So every time you see price in the area, you're gonna be looking to, you're gonna want to be very careful in these areas when you're trading. And we teach you guys how to trade major areas when you trade with us live and on Telegram and Discord. You see us trade major areas live and stuff. So take advantage of seeing us trade live. This is just giving you guys definitions. Let's go back to the slide. I hate seeing our charts like this, guys. We don't really use these colors.
It's not us.
It's really it's a lot of noise. All right, let's go to the next one. Trend lines. So trend lines are lines used to see the angle of a trend, and some trades use trend lines to determine when a trend is weakening. Me and Hooks was just talking about this. Like was the best way to show you guys trend lines. And so we're gonna go back to our charts, and we're gonna show you some trend lines. So you guys got all this support, resistance, and the charts are starting to look like average traders charts with support, resistance lines. But let's delete everything real quick. We'll delete everything, and we'll show you some trend lines. So this is an example of trend line. This is our hour chart. You can be on any chart you want. I'll just do it on the hourly. Right here, I see a trend line right here. Price is coming up, and it bounced off, came up, bounced off again. So now I'm like, oh, this is it bounced one time, bounced two times, bounced. I'm like, okay, this is kind of a trend line. Came again, bounced off again. This trend line is holding. Now most traders, they'll go like this, and this is you guys are starting to learn how to trade using these tools right here. They'll see the price bounce once, twice, three. Oh man, this trend line is strong. They bounce off again, reject. They'll like, all right, let's try to take a trade. They'll take a trade, and they'll hold the trade until I mean, you can get out when you want, but most traders will hold the trade until the price breaks the trend line. So they'll hold the trade, and eventually right here, price breaks down the trend line. They'll get out the trade right here on this candle, catch a nice 5-to-1 trade. So you can use trend lines to trade. You can even come out here, catch the trade, and then get out when it hits. So it's a smaller trade, but that's how you use trend lines to trade. Like we said, like we were talking about, the trend is going to determine which way you're going. So right here, price is coming down and just falling down, tapping trend lines, tapping trend lines, tapping trend lines, and you see it hit. We'll take trades. We'll look for these trades. So these are what trend lines are, and this is how traders use them to trade. And eventually, when it breaks the trend line, everyone who took their shorts, they'll get out and stuff. And again, up here, they'll get out. And then right here, they got out. Boom. They started selling. They got out. And then these are trend lines, guys. So it's very useful, and we're happy that you guys can learn it with us, because it's very tricky. A lot of traders have trouble trading these trend lines. But let's go into the next topic.
Patterns. So yeah. Next topic is covering patterns, which are used to try to predict movements in price. So either it will reverse, the price will reverse, or it will continue.
Yeah, so we got some patterns right here. So we don't have to go into the charts. As you guys can see, I can kind of show. No, this doesn't really show. So the first one we got, bearish double top. And we'll give you guys all these patterns in the Telegram. We'll drop a list of all the patterns and stuff for you guys. So it's t.me/. The link will be below. It's at Rebels Trading. You can message us, and then we'll send you a list of patterns. Just send us a message and stuff. We'll give you all the pattern sheets, or you can come back. You can download the slides below, and you can just take a look at these. But if you guys want to see one right now in action, it's a lot to do. It's really a lot. Yeah, you guys can just get the list and see. And if you guys watch this trade live, you'll see us use these live. So, and then we'll go on to the next slide. Indicators. So, indicators are used to give you an indication on what is going on with the price of the asset you are trading. If you want to see the indicators, join us on Discord. Check out the videos that we shot on indicators. We shot a whole video teaching indicators, which ones we use, which ones we don't like to use, stuff like that. So you can go into that, because there's thousands of indicators, and there's a lot of indicators, and a lot of them are not good. So we shot a whole separate video on indicators. Check out our page at Rebels Trading. That covers indicators, right?
Yeah,
I think that covered.
Next, we want to talk about Fibonacci. So the Fibonacci is used to find 50% and 61.8%, which is the golden zone, retracement on a pullback, and also find price targets.
Yeah, so
I think we'll need the chart.
We can show you this on the chart, guys. But actually, in the next quarter's video, you guys are gonna see us use it live. This is one of our high probability setups. So we have like over 100 high probability setups, and every time the chart's set up in these patterns, it gives these setups, it gives high probability trades, and this is how we're able to trade profitably. So I definitely recommend watching us trade live and catching these setups live and stuff. But we'll go in the next course. I think it's called high probability trading, and it's free. It's on YouTube. It should be uploaded alongside. So just go check that out, or hit subscribe if it's not uploaded yet, and it'll be uploaded by the end of this week. So check that out. I should be uploaded as soon as this uploads though. But that's Fibonacci, guys. Like I'll show you guys the two right now. So we'll go back in the charts. Delete everything. I mean, we can keep it because it's gonna help us for the fib. So we got these trend lines, right? Boom. Now we're gonna take our fib tool, draw it from the bottom to the top of a move, and then we're gonna see price come and go down into between the 51 and 60%, which is the golden zone, which was another major area or supporters that you guys saw before, and the price came off the golden zone and shot up out of the golden zone. And we got, that's the golden zone live, guys. So we'll talk about that more. And this, you know what I'm saying, this is very important to know as a trader and stuff. It's gonna help you guys too. Charts. Let's do that later. Let's see what's next. Alright, so what's next? If you want to watch us trade live and take the same trades, you can join the free Telegram group. The link is right there. The link will be below. You can just join and we'll post we're trading live. You can watch us trade live and just, you know, get someone to help you trade live with, and what, because, you know, we trade live profitably. You can take the same trades and you can experience what it's like to be a trader who's been trading for over 5 years and we've been very profitable. So you can experience that, and you can message us on Telegram and stuff, like, you know. And if you got any questions, you need help trading, feel free to access, you know, take advantage and stuff, like. And all this knowledge is free. Like the Telegram's free, Signal Groups is free, these YouTubers are all free. So take advantage of it. You know, we really want to see a lot more profitable traders, and eventually be able to open up a school for profitable traders. So take advantage.
And then if you want to learn more about the high probability setups and get more of our trades and courses, you can join us on our Discord, which is accessible via our Patreon, and the link is on the
It'll be in the description or something.
yeah, it'll also be in the description below.
And if you want to take trading to the next level, watch this video below where it's going to be popping up here. Watch this video where we teach you how to go from a losing trader to become a profitable trader, and this video is going to pop up there soon, right there. So peace, guys, until the next video. If you're having trouble growing your trading account, catching profitable trades, and you don't know where to put your stop loss or take profit, you're going to want to check out this new indicator. Just came out today. We just created it. Been working on it for months, and it's going to tell you where exactly to put your stop loss, where to put your take profit, and which way the market is going, and pretty much it's going to help you trade on your own and be able to catch big trades, whether it's crypto, whether it's Forex, or whether it's stocks. So we're going to dive into the indicator right now, and we're going to show you guys exactly how we use this new revolutionary tool. Alright, so let's dive right into this tool. So the first feature we have in this indicator is we have our signal bars. So with the indicator, you get 4 indicators, and you can use every one of them to catch different high probability trades. So you're going to want to know how to use all 4 of them, and we're going to start one by one using all 4. So let's go to the charts, and I'm going to just wipe the charts fresh. I really don't want to lose all my progress, but let's see if I can open up a new chart. Yeah, we'll use this one. Oh yeah, this chart's horrible. Perfect. So take this chart for example. This is how you use the time wick signal bars indicator. You go on a time frame. You can be on a 2-hour, 4-hour. This is what I recommend. You can do it on lower time frames. It works on every time frame. You go, but the way I like to use it, I go on a 2-hour, 4-hour. I go look and see if we have 3 candles in a row of the same color. So 1, 2, 3 right here. 1, 2, 3 right here. So I'll show you with these two trades how we would have traded it. We see the 3 candles. We place our buy order here, and our stop loss will go below the second candle. So below this candle is where you place your stop loss, the second candle, and then you go for a trade that is 3 to 1. Boom. So this is a trade. You go in, you take this trade 3 to 1. This is 4,443 pips in one trade. So these are huge trades that this indicator is able to catch you. Even if you just caught a little piece of this trade, it'd be nice. Over here we have another example. We get 1, 2, 3 bars. Put our stop loss below the second bar. Boom. And we go for a 3 to 1 trade. When I say 3 to 1 trades, that means the risk reward ratio shows 3 to 1 risk reward. So we go catch another 3 to 1. And it even goes past it. Like you catch bigger trades, bigger moves. But your job is to catch, at least minimum 3 to 1. You can go 4 to 1, 5 to 1. Like this is a really good indicator. It gives you the move as soon as it happens, so you'll be up to date. So you just saw 2 setups. Let's see if we can find some shorts happening. So you go back. When you see price flickering, you just stay out of it. There's no need to even trade when price is doing this. It's just red, green, red, green, red, green, red, green. It helps you avoid the market when there's no 3 candles in a row. So let's say we were shorting right up here. We got 1, 2, 3 candles in a row. We come short position. We enter as soon as this third candle closes, enter at the closing price. Your stop loss goes past the second candle, and you catch your 3 to 1 trade. Boom, 3 to 1, and you're done. Now, if you want to catch more pips, like I said, it sets you up to catch more pips because you're getting the beginning of the move. Like these candles, when it's 3 in a row, it happens every time the trend turns around. You get like 3 in a row. So the move is gonna go for a long time. You can even stay in this trade until you see 3 green candles in a row. But just take your 3 to 1, take your 4 to 1, and, get out of there. You're done trading for it. This is huge pips. This is 1,300. This 1,300 pips right here. So you're getting huge pips, huge moves off the indicator. Right here we got another 3 in a row. And let's see. So catch 3 in a row. 1, 2, 3. This is a really fat middle candle. In this example, you won't even get it. We didn't get a 3 to 1 on this one actually. On this one, the farthest was 1.18 to 1. And after you see a big green candle like this, you probably should exit because this means there's a lot of huge buying pressures. The red and green colors of the candle mean that these candles are huge candles for the buyers or the sellers. And when you see them flickering back and forth, that means it's a trading range. So when you see this, you can really get out of your trade because it's flickering. But that's what the green candles represent, the red. If I was to turn the indicator off, my charts are normally black and white. So the black and white candles, just black is for bears, white is for bulls normally, and then the red and green shows you the ones that are actually meaning something in the charts. So this trade right here, this didn't go for the 3 to 1. You could have got out early, or you could have just, as soon as it went down, you could have moved your stop loss, break even. You could have got out break even, or you could have just let it hit your stop. So you would have hit 1 trade, lost 1, hit 2, hit 3. Let's go back and see if we can see more 3 candles in a row. Right here is 3 red in a row. It was kind of tough to see. Oh, they're all along this right here. So come here, 1, 2, 3 reds in a row. Entry, stop loss, 3 to 1. And you can use these trades on funded challenges too. Like you can pass your funded challenges with these. Catch that huge move right here, 800 pips. Because this is a 2-hour chart, guys. So on the 5-minute, these are big moves. They just look smaller on the 2-hour chart. Come right here, 1, 2, 3 again, 3 reds in a row. Same thing. Come at the end of the 3rd candle, entry, stop loss goes the end of the 2nd candle, and then you come and you catch your 3 to 1. So we call it 1 trade, 2 trade. Oh, right here is another 3. Oh, this is the one we call it. Yeah. So 1, 2, 3. Let's see. This is the 3. We caught that one. That one can even count as a fail or a take depending on how you traded it. But even if it's a failure, you caught so many 3-to-1s that your account is always going to be up in profit. But let's see if we got more of these. Let's just keep doing more to show you what a back test. We'll do 10 of them so you can see out of 10 trades how many trades you get. 1, 2, 3, 4, 5, 6. Let's find more. Come in. I'll zoom up. If we go on a smaller time frame, we'll find more of them too. But let's stay on this for now. No, 3 in a row. No, 3 in a row. Let me know if you see 3 in a row too, Woods. Right here, 3 in a row right here. Boom. So 3 in a row. And you can see that it helps you stay out of the market when the market doesn't have a trade. Like, you'll avoid the market in days where it's not a good day to trade. So 3 in a row right here. Entry right here. Stop loss going right here. 3-to-1. 3-to-1 right here. And this trade hits over here. And it goes a little farther too. So that's another 3-to-1 and done. Come again. We'll look for more trade setups. This one right here is 3 in a row. So you got 1, 2, 3. Buy it. Stop loss goes right here outside of that. And 3-to-1. And it hits TP right here. Literally hits TP and then turns around. So like a perfect trade. So we'll look for 2 more of these setups and then we should be done. So right here, we got another 3-to-1. Right here, the middle bar is a huge bar. And honestly, when your middle bar is huge, you can go for half of this as your stop loss. But we'll keep the same Ruko for the end of it. And this trade, it goes up. The most it goes 1-to-1, and then it cancels. So every time you see the second bar is really huge, it makes it tough for the trade to complete. That's what we're noticing. So we got 1 trade, 2 trades, 3 trades, 4 trades, 5 trades, 6 trades, 7 trades, 8 trades, 9 trades. We'll go for 1 more, and we'll see our percentage on this. And I'm just doing them all in order too, like to give you guys an idea. Is that a green? No, it's not a green bar.
No.
It's a black bar. Right here, 3 red. Come here for the short. 1, 2, 3. A huge second bar again, so you guys kind of know what that means. We'll go for 1 to 3. This trade fails and reverses. So let's see how many trades we hit out of 10 trades. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we hit 1, we hit 2, we hit 3, we hit 4, we hit 5, we hit 6, we hit 7, 8. No, we lost one of these down here. I know. Oh, right here.
Right
this
there.
one, it wasn't a 3-to-1. So we lost 3 out of 10. So this indicator hit for 70% of the trades on the 2-hour time frames. So 70% of the trades that hit. And then you guys already know from the other video, if you know about equity curves and everything, you guys already know that being 70% accurate at 3-to-1 is enough to grow your account. But I'll go into it right now just to show you guys the power of this indicator and how you really can use it. So I'll open up the equity curve. And this is our goal, to really make it so that everyone here can trade on their own and be, you know, high probability traders. Like, and the tool really does that on any time frame, which is crazy. We'll go to another time frame in a second. So I'll open up this. I gotta go Firefox. Okay, apply. Boom. So this right here, this is the equity curve simulator. I'll put it above our head so it doesn't block it. And so let's say you got like $100, $1,000. I don't know. I hear people starting with everything from 100 to 1,000. So the middle, I'll just put 300. Let's say you're starting with $300 trading. I can't even do 100. Just to show you guys, like, it's not about the money. It's really about the math. boom. Let's say right now you have $100, £100, and your win probability is 70%. And you're going for 3-to-1 trades. All the trades are 3-to-1. And you take 100 of those trades. You take 100 3-to-1 trades. We can do less too, but let's just say you do 100 3-to-1 trades, because you're gonna have this indicator. You can trade it anytime you want. You can go down to smaller time frames, and the same rules apply. You can catch. You can do 100 of them in a week. One trade, your risk per trade. Let's say you do 1% first. Your $100 is turned into $500, or $450. And every time we run the simulation, it's a profitable simulation. We wanted to make an indicator that had the ability to do this. And it took a lot of time to make sure that you never go down with your money. Now let's say you want to risk 3%, you want to go a little bit more risky. That $100 turned into $10,000, and after 100 trades, $25,000 in this simulation. And it's still gonna always be up. Let's say you even wanted to go more risk. Let's say you was like, yo, you know what, I'm going 5%. Screw it. You can go into 70K territories now, 25K, just off of taking 100 of these huge trades that you just saw. Same risk, same reward, and keeping it the same. Never goes down. Now, if you start risking like 50% of your account, if you risk half your account per trade, sometimes it's gonna look real good, like you're making a lot of money, but you're gonna come up and go back down ultimately. Like I never recommend risking more than half your account, even though being 70% accurate, you can take that risk and it still looks good. There's always gonna be that one scenario where you do come up and go down, so I don't recommend doing that. And that's what I offer $100. Like, you don't need much money to make money trading. You just need to take the same consistent setup every time and over, and you have a 70% probability setup, you'll be profitable. So this is our goal with the indicator. We wanted to make sure that everyone was able to be profitable traders, and we were able to do it. So let's go back into the indicator now. So you got to see that indicator. That's the time Wilk signal bars. That's our signal bars. You're gonna love that. You're really gonna love that. I'm gonna close the signal bars. I'm gonna delete it. Remove these trades, and we're gonna go to indicator number 2. We'll do the EMAs next. So this is our EMA settings, and then with the signal bars, you have settings and stuff. You can change the size of it, and you can tweak that type of stuff, and just adjust and do your back testing. So we're going to the EMAs now. Now the Time Wilks EMAs. This is how we set our EMAs up, and we made a different color so you guys can differentiate everything and make sense of it. But basically how we use it is when the EMAs is bunched up, we know we're in a trading range. Like over here is bunched up, trading range. And when the EMAs are spreading apart, like they're getting farther apart from each other, price is trending. And this is pretty much used to determine the trend. Once the price is above the red line, it's an uptrend. When it's below the red line, it's a downtrend. And this is how you use it. Oh, we're above the red line, always an uptrend. You're looking for buys. Everything's a buy until we get below the red line. Then we're going to sells. So this is why we have this indicator. It's to help you determine the trend. So, for example, when you combine it with signal bars and you see sell indicators on a downtrend, you got a definite downtrend. And they line up. Like, you really can use either or. They both work good. It's just an extra confluence. You want to have multiple confluences to increase your trades. So let me show you some trades I would catch with this. When all the prices cross each other like that, I'm looking to take trades. And I take trades until the prices bunch up again. So right here was the bunch up point. My stop loss would be under the red line. You can even do half of the bar, but you'll be under the red line. You take a buy until the price crosses the red line again. So this trade is still going on. We can't really do that one. We'll do it right here though. Price crossed below the red line. Stop loss over here. The bar right before it crossed, outside of it. And then you're taking the trade all the way until price crosses the red line, which is right down here. It doesn't cross it to over there. Over here, it tries to cross it, but it comes right back down one candle. So it has to come over it and close it out. So this is a 26-to-1 trade. These are huge trades. We'll find another trade right here. And this is the power of just trading with the trend and knowing which way the trend is going. We got a cross right here, price cross, stop loss outside of the bar, and the price doesn't cross the bar right here. Boom. That's a nice 3-to-1 trade, 3.28-to-1 trade. Right here, price crossed again. Price crosses, you put your stop loss outside the bar right there, and you get out when the price crosses right back and closes above it. That's a 2-to-1 trade. And you could have got out at the bottom, whatever you wanted to do, but the rule is you shouldn't be out when the price comes back above and closes above it. Just get out. Right here, price is just flickering on the EMAs. These are not trades. Price has to be below and close below it with 2 bars. So we'll find the next setup right here. Price came below it, closed below it, and 2 bars. Stop loss would be over here, the bar right before, and then it crosses the indicator and it stays above it, 1 bar right here. 3-to-1 trade. This bar would be to get out, comes back, gets above it, or get out over here like 3-to-1 trade. And I would literally get out right here on a 3-to-1. But we could do more trades like this, like all the EMAs cross right here, price comes above. I'll show you guys again. Price cross right here, stop loss above, or I think this bar right here was the cross. No, it has a cross stay above. It crosses stays above, and then we get the price crossing back and below right here. It's a 5-to-1 trade, and this is understanding the trend. You can combine this with the signal bars and stuff like that to really get a better confluence of what's going on, and it's going to take your trading to the next level. But this is how you use our EMAs, and we set them at specific points and stuff. So, like the exact way we use them, that's how it's set for everyone. So you guys don't have to take any guessing. And the probability of this this indicator is it's always gonna know the trend. Some trades are gonna bounce out, so I'll put it around like 70-80% just because you're gonna have some that bounce out, but it's a very high probability trading tool. And it's not lagging at all. It shows you exactly when price is doing what. So let's go into the next indicator. This is one of my favorite ones. So this is Ty and Wook's session trading time. So you get to see our best trading times when we take our trades with this indicator right here. And to see it, you have to be on the 5-minute chart or something below, and it shows you. So every time it's the Asian session, it shows you in blue. When there's a London session, you see it green, and when there's a New York session, you'll see it gray. So you can go back in time. You can track when we trade. This is the times we trade when it's the Asian session. This is where we catch our trades. This is where we trade during London. This is where we trade during New York. And that's how we trade. These are our trading times. And on Fridays, you're always going to see the market do something really astronomical, which is really cool. And basically how we use this indicator is like this. It's not going to show now because the sessions are already closed out, but it'll literally show a line right here. And I'll make this line Forex. It'll show you like a dash line. It'll be a dash line right there. And it'll show you a dash line right here at the bottom of the Asian session. And then it'll give you one more dash line. It'll give you one more dash line at the middle of the Asian session. So every day you have 3 dash lines every session. Blue for Asian. So once Asia comes and they set their prices and stuff, they put their high point, low point, and midpoint. What we do with this indicator is we wait for price to come. In the London session, like London's right here, price comes in London session, it touches the top, it comes here, and then it goes above that price. So this is where we take our entry. We see where price is going to close above or below a certain one of these support or resistance lines. We treat these as support or resistance based on where price is at. So then now we know price is above this major. It'll be support now. We see price above support during London session. So we're like, all right, everything's above support. That means price is pushing upward. We'll take our trades to the upside. And we'll use this in confluence with the signal bars and everything. So we'll see where we're at support, resistance. It's just no real trade. Price above it. And then we come in around New York session. But as long as price is above it, you can take buys above it. When price is below these, you can take sells below. So I'll show you right here on another day what I mean. Price is above this indicator. It'll give you 3 lines. You're going to see it when it's live. Like, it's not showing because the market is closed and it's about to close. Price comes, wicks in, pops above it, and then you just ride this trade up. We'll do it another day just to show you guys again. High, low, midpoint. So now we're waiting for price to get above or below. Above or below. Price chooses to go above, we take a buy. Price comes up. We'll do it again for another day. This is actually a really good day right here. So now some days you're gonna have the Asia session where they go super broad. I'm gonna delete every line just not to confuse myself. We'll have the price there, 1, 2, and in the middle should be like right here. Boom. So price opens, London comes, they go above it, they can't really get away, they come back below it, they come straight to the middle. Like, they have to, when they come in below, they're coming to the middle, and then they're trying to come down here, they can't come down here. And this, so price is not above or below these 2 lines, so this would be a no trade day. You can literally take no trade, or you can take that short, and you'll be happy taking no trade because it didn't set up how you wanted it to. Another day right here. Same 2 no trades in a row. Price there, and then the middle line is literally right here. Yesterday's low, which is crazy. Price comes, it doesn't get above or below. I wouldn't even trade this day, and you can see there's not really a trade, just going up and down, taking people's money. So it helps you stay out of the market. Now we'll come back to another day. We got our low, we got our high, then we got our midpoint. Boom. So London comes, they got price above it. Click, take the buy, it'll close you out. You get out, closed out. Boom. Price heading back down, so it's heading to the middle line. From the middle line, it tries to bounce back up. It's above it, it can't hold it. It crashed down through. It tried to fall down through, couldn't hold it, came back up. So this is just one of those days where, like, this is a bad trading day. It's very volatile. I think this was a Friday. Yeah, this is a Friday right here. So this is just a Friday NFP news. Like, they murdered everyone. Honestly, if it fell one time, I wouldn't even rely on this indicator. The best way to trade NFP days is wait for the 3 candles with the signal calculator. So you have your 3 candles right here. You would take that trade by. You had 3 candles here. This one fell. This one hit. And then this one even hit 2 right here. You got 1, 2. This one fell. Yeah, this is straight NFP. This is like murder scene. NFP. Some NFP days, like, they're just untradeable no matter what you do. You're not gonna have good trading experiences. And when you're up a lot of money, I recommend not even trading on Fridays. Like, if you make money, if you're up Monday through Thursday, you're just up a lot of money, just take Friday off. Like, you can make a little bit more money, yeah, but you can keep your money even better. So that's what I recommend. This whole week is like a trading range week, but price comes here, it gets below, it falls down. This is a nice little short. But this just gives you an idea of, like, the times we actually trade and look for setups. So this indicator is really cool. I really enjoy it. The setups are not as accurate as the other 2 indicators, but they give you setups, and they let you know what price is doing and how it's reacting to how Asia countries reacting to London and how London's reacting to New York. So you can get an idea of how the banks trade against each other. Like, oh, like Asia's right here, London took out the liquidity. Like, oh, we push the price up higher. New York came, they took all the liquidity from Asia. Asia's liquidity is down here, London's down here. They took London's liquidity and they took Asia. So it gives you an idea of what the banks are doing, which is most important. That's why we really like this indicator. And we'll go into our final indicator. This is the ultimate trading indicator. It's actually my favorite one. And we're gonna open up the settings. So you can have bar accounts available. Let me go right here. So if you guys are familiar with how to count bars and stuff, you guys have bar counting. If you don't know about bar counting, just there's no need to even use that feature. All right, so we got our weekly levels. It automatically maps out all the levels for you. You have a VWAP. VWAP is the average price, the weighted average price based on the session. So you always want to know what the average price is. Price is heavy above average, so you're taking buys. When price is below average, you're looking for sells. So you keep your average price. So you get right here. You got the info table right here. No, not labels. So, right here. So boom. This is one of my favorite features of the indicator. It tells you exactly what the session is doing. So remember we had the other indicator that shows you session ranges. It shows you exactly what the session is. I'll open it up for a second. So boom. This indicator tells you the average session range. So you know during around this time in this session, the average range is going to be 13 pips. And in the current session range is move 25 pips. So you're like, all right, move 25 pips. Average is 13, $25. Yeah, this is a big session. Actually moved a lot. $25 is a huge move. It came from down in the 1900s all the way up to like 25, 28. The gap size, it tells you the gap size percentage. The gap size is like how big, these are the gaps right here. Like how big these gaps are. Like, so right now you got a huge 154% gap. That means the buy is strong. And it tells you a deal scalping size, so you can know how much you want to scalp for. Right now, if you're looking for scalps, you're just looking for little 29 points and out, 29 points out, 29 points out. If you're scalping, if you're going for a swing trade, you can catch 5 points. And you can see how small the market is right now. It's very small. So you're only going to get you're going to get 20 points only in this. 20 ticks, a point is like a tick, 20 points. And you're going to get, if you're going for a swing, you're only looking to catch 5 pips to 4 pips. And you're going to see by the market how small these candles are. So that's why it's telling you this. When there's bigger candles, you'll get bigger pips and bigger swings. And it tells you to put your stop loss, have like a 2 pip stop loss, 2.6 pip stop loss to be safe. And that should keep you safe in this market. So it's a really good indicator. And then the way I like to use it is, so I'm going to explain the boxes first, and then I'll show you how I use all the indicators together in unison. So I'm going to show you some more features on this indicator. It's a whole lot of features. So this feature, we have our EMAs on this app also. We have EMAs, but I kind of just like to use these EMAs. So I use these EMAs in combination with it. So I'm going to delete that for now, just to show you guys what's going on. So I'm not going to show you the EMAs on the indicator because it shows you guys how to use them. But I'm going to show you guys how we use the boxes. And I'm going to go back to my settings because I don't need the bar count at this moment. All right. So how you want to trade it is every time you see a box, a green box, you want to take a buy from this green box. So price is shooting up. It's right here. It's going to fall back. This green box is going to form. And when you see a green box, all you do is come to the box. You put your stop loss right here outside the lowest point in the box. And when price breaks back out of the box, you take your entry. You go for your 3-to-1. You catch a nice 3-to-1 trade. That's all you do with this indicator. I'm going to show you again with this wick right here. So price came out the box, closed back above it. Stop loss right here below the wick. Entry right above it where it's at. And then you take your, this didn't even give a 3 to 1, this gave like a 2.6 to 1. That might mean price might still have about a little bit of bounce in it. It might not, but that's all you do. Yeah, price is still kind of going up, but so it's still not complete. And then you'll have smaller boxes like this. Price comes in a box, pushes down, and this candle was the only trade. You can see right here how this is the swing. You got a 5 pip swing. Really, you don't get much of a swing. Price came in this green box right here. I'll zoom in. Price came in. So this price pushed down. It formed a red box. Price formed green box down here. Push the price up. Push the price up. Pushing it up to this red box. From this red box, what you're gonna see is price come turn around. So I'll show you how I actually catch trades on it. I don't like to do it on the 5 minute because these are small moves. And this is considered scalping. I'll go to a time frame like an hour, 2 hour, and boom. These are the boxes that I like to catch for my trades. So I'm gonna show you guys how, and this is how I recommend everyone use it. Stay on the hour time frame above. You can be on a 63 time frame. It's cool. Hour, 30-minute time frame even works. I'm saying all these time frames are good, but the 2 hours is good. It's a lot of information in that. I'll go here. I'll wait for a box to appear on the 2 hour. And if you want to see more boxes too on the indicator, you can go in and you can number of boxes you want to show. I can have it show like the last 15 boxes. So I'll do the last 10 boxes so we can see how accurate it is on the last 10 trades. And we'll do a 10 trade thing. So we got a buy box here. Stop loss. You can put your stop loss outside the box. You can put your stop loss at the end of the move, either or. So this one trade, I would put all the stop loss outside the box. So we got a 3 to 1. This one hit. We'll go for the next trade. Let's see how this one did. Next trade right here. Stop loss there. Entry. 3 to 1. That hit TP. We'll do the next trade right here. It's a huge box. So you got a huge move to make. And that trade hit. So that's 1, 2, 3. This box right here. Can't forget that box. It literally murders the higher time frame. Yeah. We got here. I'll come up. I'll do 3 to 1. So that's 4 trades so far. Let's do our shorts. We got a short box. We come here. We put our stop here. Short. Stop outside. And we'll come. We'll catch a 3 to 1. Even zoom into even. Yeah. We'll catch a 3 to 1 right here. Another 3 to 1. These are smaller 3 to 1s, but on a 2 hour it looks small, but on a 5-minute chart, these are huge moves. Like this one right here is 300 pips, so it looks small, but these are good moves. That's 1, 2. This is another one. Stop entry. 3 to 1. And you see some of these trades go past 3 to 1 too, especially in a higher time frame. But I just want to show you the accuracy of this indicator. Like we work really hard to get it this accurate. Really hard. And 3 to 1. And this is like what, 500 pips. And I think that's 10 trades. So 1, 2, 3, 4, 5, 6, 7, 8. It's not even 10. Alright, we gotta catch some more trades. Let me here, settings. Just put some more boxes out. I have to reload it. I have to probably reload the chart. that's as far as the data can go back for us. So we got 1 trade, 2 trades, 3, 4, 5, 6, 7. Can't really see. 1, 2, 3, 4, 5, 6, 7, 8 trades. It hit 8 out of 8 trades. But we didn't get to take the last 2. We couldn't see them because it's not going to update. Maybe we can do it on another pair. Just go to that SPX or something. We'll pull this pair up and we'll do it on here. We'll take our last 2 on here. So, yeah, this actually was our last SPX trade. I'm going to just delete it. Let me just hit a TP. But, we'll take our last 2 trades here. Short. This one hit 3 to 1. This short right here. This also hit 3 to 1. And let's see if this buy. Well, it just came back in the buy box, so it's gonna push out of it. But let's see where we probably gonna go next with the price. Huge. So yeah, I mean the SPX probably about to make a move upward for 3 to 1. It hit these 2 trades. It's in this big buy box, so it's probably gonna be able to push the price up. The short box just hit it 3 to 1. So far it's been 100%, but like when we trade in here, we don't want to call anything 100% at all. So we're gonna label it as 90%, and we're gonna open up our simulator. And this is why this one's the ultimate indicator, just because the percentage is higher than even the other indicators we showed you before. We're going to 90% here. And me and Wilkes is working really long on these indicators.
Yeah.
So 90% right here. This is a $100 account, 90% trading on 100 trades. You turn it to $1,600 just using these indicator signals. It's like I'll do some more simulations just to show you, like, it's not a fluke. But every simulation, if you're trading at 90%, you're making 2K, 1,400, or for $100. Like, your money's never going. And this is risking at 1%. If you're like, hey, I want to earn 3%, which you can't do, now you're turning that to 20K. You're turning that to 200K after 100 trades. This literally the $100 challenge right here. That's what we're looking at. All these graphs go up, risking 3% per trade. This is how we're gonna actually trade the challenge, which is really dope. That's why we had to get the indicator finished first. Because you might have a day where you're tired. Like, as a trader, like we're human beings. Like, we might have days where we're tired, we're off, something's not feeling right, and it'll take us out of our trading zone. Like, we're emotional. Humans have emotions. Robots and bots and indicators don't have emotions, so it's always going to show you what it sees on the chart live, and you're always going to be able to take the same setup over and over. It's going to give you consistent results, just consistently. And like, you could do some more, but this is how you use the indicator. We're running over 40 minutes for the video. We'll find some more boxes and stuff. Look, all these shorts hit, buys hit. We're gonna do more pairs, like you can see buy boxes, short boxes. This is US 30. Short boxes, short. Like, even, and this pair is like hard for people to trade. People have trouble trading US 30. You're gonna be able to make child's play out of it just because you have this That's two. And we were gonna originally charge like, I believe it was like 500 flat, 1,000 flat, or
Yeah.
1,000 a year for this indicator. And we just really wanted to be a little bit more affordable for people to have this type of technology. So we went with the lower price, and we'll keep it there for a second. We might, I don't know, like I don't know if we're gonna keep it up forever. I really don't know how we're gonna do it, but just enjoy this, guys. Like use this indicator, like and enjoy it. Like you'll be able to trade in your own time, and it's gonna help you become a better trader too. Just understanding. And we didn't even combine we didn't show you the combination when you get both. We combine the signal bars with that and the EMAs and how we really trade. And then this will increase your probability because you're taking trades when you see only everything lined up. You know what I'm saying? Like right here, you're seeing there's two, two. Right here, you see three red with the gap. So that's like a more guaranteed trade. It's a whole bunch of stuff you can do with it, guys. I won't run this video over an hour. Like, we thank you guys for watching. We appreciate everyone. We love all the support we've been getting. So that's why we've been working hard for y'all, and we're gonna continue to do it. Anything you want to say about the indicator before we leave, folks?
Yeah, definitely, man. I feel like this would be big for the fam, everyone with the Real Bros Network. Like, this will make trading easier for them. And then, like, if you want to get a feel for things like stop losses, it's in here. And
Yeah, that is huge. Yeah, because most traders, like, I get a lot of messages. No one knows where to put their stop loss. No one,
mm-hmm.
no one where to take the profit. This tells you exactly where your stop loss is going. Take a profit.
Yo, so
So
that's the questions we always get, like when we're streaming with trading, like stop loss, take profit. It's gonna be right here for you guys.
yeah, and then if you guys have any questions about the indicators, just feel free to hit us up on Telegram at ChatGPT Millionaire. Ask your questions there. Let us know. And if you guys want to grab the indicators, you can grab them. The link in the bio below. You can use them, test them out, have fun. I really want to see the results from everyone. That's what I can't wait to see. Like
Yeah.
now it's on the market. Like we already know our results with it. Like that's why we released it. We had a really good time with it. So I really want to see everyone's results, see the big trades everyone's making. Like, I'm excited. I'm really excited.
Yeah.
Like, if you guys shoot some videos of you guys using the indicator and results you guys have, like send them over. Might send you something back. Like we'll find something. We'll send you something back.
Yeah.
But thanks for watching. Thanks for watching Real Bros Network, Ty.
Mugs.
And this is Real Bros Network, Real Bros Trading. Another video. Peace.
Peace.
I can't wait. I can't wait myself, even from the last time we spoke. Because the first time, you didn't have the indicators.
Oh, I had to try to teach 5 years of knowledge and break it down. And it's a lot of knowledge. Now the indicators make it so simple. Like,
Right. This is my TradingView account right here.
right? It's perfect. Now go to hit the K in the corner, the top left corner. All right. Now we're gonna get the indicator set up and we're gonna fix your charts because right now your charts are they're not gonna work with indicators because the colors are red and green. So you're not gonna be able to see the signal bars, you know. So go you see the settings wheel to the right side, take your mouse and scroll across to the right. It's a settings icon right there.
All the way to the right.
Mm-hmm.
This little thing right here. Okay, hold on. Right there. Chart settings.
Yep.
Mm-hmm.
You go to that settings wheel. And then from there, pull it up on mine. So the first box, the green box right there, you want to change that color to white. The second box right next to it, you want to change that color to black. Now below it, that green box below, you want to change that to black. The red box next to it, you want to change to black. The box below it, the green box, change to black also. And the red box goes to black also. All right, now that's perfect. Now you want to go to Canvas where it says Canvas to the left. It says
Canvas.
simple. Yeah,
Canvas.
Canvas. Now you click that button right there and solid color background. Yeah, that's perfect. Where it says grid lines, vertical and horizontal. You want to click that and then put none. After that's done, let me see the next step. I'm going to my settings.
This crosshair, watermark.
Yeah, that's all. That's all perfect. Crosshair is the next one. So actually, you want to change that to black. The color of that, change it to black.
Mm-hmm. There's like a little three little dots right here.
And then the three dots, change that three dots to a solid line.
Okay, solid. Okay. Mm-hmm.
Now, I'm pulling up my settings right now just to make sure that you got everything set.
Mm-hmm.
Go to status line to the top left. No, trading. Underneath canvas where you clicked before, it says trading.
Mm-hmm.
Now you see where it says buy sell buttons, click that. And yeah. Now
It's blank right now.
that's perfect. Now where it says status line,
That is not. Mm-hmm. So just leave that like that. Okay.
go to
Status line.
yeah,
Mm-hmm.
status line where it says OHLC values.
Yes. Mm-hmm.
You wanna take that off. And where it says bar change values, take that off. And then where it says open market status, you can take that off.
Mm-hmm.
Where it says title description, click the description button. And then click ticker. And the final change should be where it says
Go.
um no, that's all good. That's all good. Okay, in the bottom left corner where it says template, and it's a down arrow.
Bottom
That,
left.
yeah, click that down arrow right there
Template. Mm-hmm.
and save as.
Save as.
And
This
you
is
want to name
theme
that
name.
I call it newspaper. You can just type in newspaper. But
Newspaper.
yeah, that's what I name that theme. The reason why I name it newspaper is because you want to keep your charts as like standard and plan as a newspaper. So you're just there for the facts and details. There's no green and red, so it's just newspaper.
Okay.
Um,
It's save, obviously.
yep, save.
Mm-hmm.
Then when you're done with that, hit OK. All right, now in the top left corner where it says volume VOL, underneath with gold, yeah, right there, down a little bit, down two lines.
Mm-hmm.
Click on the X button. All right, perfect. Now the next thing we want to do is hit refresh.
Refresh right here.
Yep, refresh, reload. All right, now right click on that screen.
Right click anywhere.
Yeah, right there. And
Mm-hmm.
then scroll down where it says color theme
Color theme. Mm-hmm.
and hit newspaper. So now always you have it saved. Now go to volume and X out the volume again. That volume, take that off because that's all confusing indicator. All right. So now we want to access the indicators. So go to indicators up top. You gotta go up and to the right. Right.
Okay. Mm-hmm.
Yep. Click that and click invite only at the bottom left side of that screen.
By only scripts.
Yep.
Mhm.
All right. The first one we want to do
Okay.
is the signal bars. Yeah.
Okay.
Click that. And after you click that, you can X that screen out real quick. No, not the whole screen.
Access.
X out to the top, right.
All
Yeah.
right there.
Yeah.
Okay. Mm-hmm.
Now go to the signal bar indicator and to the left.
Big.
No, underneath go
Okay. Mm-hmm.
down. Now it says a settings icon. Click the settings icon right there.
Mm-hmm.
It's gonna allow you to edit it. Now where it says size of signal bar, change that to 1. All right, that's
Right there.
perfect.
You put okay.
Yep.
Mm-hmm.
So now everything's perfect there. On the right side of your screen where it shows that history, hit X, move the mouse over to your right side of your screen, more down a little, right there. Click that. Yeah. No, to the
Right there.
right. Yeah, click that. All right, perfect. It's gonna now we can focus on it here. The next thing you're gonna want to do is so this indicator is fully set up. I'm gonna break down this indicator too. But basically the way you want to use this indicator is the black and white bars, they represent bars where there's not a lot of price action to trade off of. So those bars I consider trading range bars. Like when you see a white or black bar, the price is indecisive, and those are not good bars to enter a trade on.
All right.
When you see the
The
red and
white
green
and the
bar,
black and the white. The black and the
yeah,
white are not good.
yeah, they're no good. Those are noise. I don't want to call it noise because every bar means something,
Mm-hmm.
but those are bars that confuse a lot of traders when traders take trades on those bars. So those bars are just trading range bars. When you see that thing trading range, the price is indecisive. It can go either
Okay.
way from there.
Okay. Mm-hmm.
Now, where the price starts getting a little bit more interesting is when you start seeing multiple green bars pile up, then you know the bulls are coming in. So for example, um, right there, those last 20 bars or so, you see it was black or white,
Mm-hmm.
and then now it's starting to see more green bars, and then price started to move up,
Now
move to the left
green,
more, to go to the left more.
green. Yeah.
Yeah.
Okay.
And I'm gonna show you from my screen. And then the price started to move up.
Mm-hmm.
But if you look at if you look at the whole screen, the price has moved down from the beginning of the screen to the end. So that would represent we're in a downtrend.
Yeah. Yeah. From here, yeah, all the way to here. Mm-hmm.
The price is lower from all the information you have. So now it's safe to assume that the price is in a downtrend. So when price is in a downtrend like that, you want to be careful. You don't want to really take too much buys. So you want to just stay patient and look for a good selling opportunity or a selling bar and take a
Mm-hmm.
sell. So we saw those green bars, but we still believe it's in a downtrend. So we don't take the buys there because we only follow the trend. So if you want to follow the trend, what you would do is when you see that red bar out there, you would take a sell there or the red bar right next to it. So either those two red bars are good sell bars with a
Mm-hmm.
tight stop loss. So
Okay.
I'm gonna go into I want to share my screen, but I
Mm-hmm.
also want to set up the other indicators first. So let's set up the other indicators first.
Okay.
So now go back to indicators on the top
Mm-hmm.
and click EMAs, the first one. Now we're gonna set that up.
Sell or no?
Um,
Okay.
yeah,
It's out of
and then exit out. You can exit out.
exit. Mhm.
All right, perfect. So
But now
you
you see the down trend
and you
follow
see
it. Mhm.
and you see the switch over. So that red line right there, that big red line, that's gonna
Mhm.
represent
This one
that's
right
gonna
here.
represent your trend.
Okay.
So you see downtrends. price is trending downward. So we're respected and we're seeing lower lows. Right now, the price is above that bar. So that it could be the start of an uptrend. We started seeing more green bars. It went above it. So now it's safe to assume that, okay, the bulls are fighting to take over control of this market. Will they get control? It's highly unlikely because the price right now is looking, it's going to go right back below the red line. So if that price goes below that red line, you can take your sell.
Now, when you say the price, where is the price?
So you see, the price right now is at 2069. You see the dotted line?
2069. Yeah,
So that represents the price right now.
like 2069.12.
That's the moving price. So that, as that moves, that represents the price. And as we know from the other indicator, we were looking for sells without even the EMAs. We were like, okay, safe to say it's a downtrend. We would have took a sell at that red bar or this red bar. We would have been in a sell right here, and we would be taking a sell downward. But before we start taking a trade, I want to just go into more detail about the indicators. So when you see a downtrend like this, what you want to do is if you're above the EMA line, but it's a downtrend, that means price is a little bit confused. So you're going to see a lot of wicks like you're seeing right now. And you're going to see a fight between the buyers and the sellers to control price. The buyers want to push the price up. The sellers want to push it down. So when you enter a trade in these type of areas, you're entering a trade with 50-50 probability. The probabilities of hitting this trade is going to be 50 to 60% because of the position of the candles. Whereas if you trade a red bar below, like you can't see my mouse, but if you look at the red bars that are below the red line, if you go to the
The red
left,
ones that are below the red line, there's like this one right here.
no, that's above it. So
Okay.
go to the
Oh,
left.
above this.
Yeah, go to the left
Mm-hmm. Mm-hmm.
until you see a red bar. So yeah, right there you see some red bars right there. It's a
Mm-hmm.
red
There's one
signal
here.
bar.
There's a
Yeah.
couple right here.
So those red bars that are below the red line are safe to enter on sells. You can take a sell there, you can take a sell there, you can take a sell there. The last one you
Right.
can even take a sell and it went below it with a stop loss.
Mm-hmm.
So those are safe bars to enter on sells when it's below. The safe bar to enter on buy is when the price is above the green line, above the red line, and you see a green bar.
And
So
now this is all in real time?
this is all real time trading. So as the bars form, once the bar closes, it'll change. It determines the color. It determines if it's a good bar or if it's a bar that you should not take a trade on, like a white or black bar.
Oh, really? Okay.
Yeah,
And I should take it at that time when it either turns the red or the green?
yeah. You should wait for the close of the bar. Wait for the bar to close and the next bar to start, and then you should trade off the previous bar and how that bar looked.
Okay.
So
Okay. But you're going to be able to show me that in Henko trade tonight?
we're gonna show
Okay.
you that Hingo trade. I'm gonna put it all together. So this is
Okay.
like this is how the signal bar is built on top of the EMAs. And I dropped I'm gonna release a video on signal bars that I just recorded too. But I just gave you the gist of it. Like and I'm in that video I go more in detail, but the signal bars show you good entry points where to enter. It gives you the signal, and this helps you determine the trend because as a
Okay.
trader, and this is taking like 5 years of trading knowledge and bringing out to simple indicators. This is a very simple plan. I'm very excited for it. That's why I'm excited to teach you right now because I feel like you're gonna be able to crush it in the market just knowing this.
Well, if that changes colors, that's like amazing. Like
Yeah,
the color changes, that's a game changer.
yeah. It makes takes complex knowledge and makes it like super simplified. So I'm excited. I'm excited to even go farther. So you see the EMAs. I'll go more into detail on it
And
right
now
now.
again, what does EMA stand for?
EMA stands for moving average, exponential moving average. So it's the average price across the last 20 or 100 bars. So that's just the average price across the
Okay.
last 200 bars, and each bar represents a certain amount. So you want to know the average price is important because we trade off for price action.
Okay, so basically that's the average price, the MA
Yeah.
stands for.
Because what trading is basically a group of people trying to find a fair price for an item, whether the item be gold, Bitcoin, or even on eBay or auction or something. It's just people trying to
Mhm.
find a fair price for this item.
Right.
So the buyers, like, if the buyers think it's not a fair price, they won't buy anymore and they'll wait for the price to go down. If the buyers think the price is a good sell, they'll buy it and the price will go up. If the sellers don't think it's a fair price, they won't sell. They'll wait for the price to go up and sell at a better price. And when the price is fair, it just goes sideways. When they
And
find a fair
that's when it's tricky. You can't really
price.
sideways. It's you don't really want to do it when it's sideways. You want it to be going either up or down.
Yeah, the market's at a standstill until a piece of news comes out or something like, oh, inflation rates go up or something. A piece of news comes out and then it makes the price unfair again. So
Okay.
that's pretty much what we're watching the market, and these indicators help track. So you see we're in a downtrend and the price is kind of in a 50-50 moment. It's above the EMA, but it's in a downtrend. So as a trader right here, I wouldn't even I wouldn't place a trade. If I did place a trade, it would be that sell over there that we saw. But
Hmm.
even that sell is like you would be in profit. If you took the first red candle, right,
Hmm.
move to the left right there, if you took that first red candle, what the one right over next to it. Yeah, if you took that red candle, you would be in profit. And you can make a good amount of money on that candle. Just on that one drop, you can make a lot of money.
Hmm.
However, it's not able to go below the red line. It's having trouble going below it. It's having trouble
Go
breaking that
below this
line.
red line right here. Hmm.
Yeah. So
Okay.
as soon as it breaks that line, it's gonna drop sharply. And it's looking like it's gonna break it out. So
Uh, Right here.
yeah.
Hmm.
So I wouldn't take a buy right here because
Now it just went black. The red went away.
yeah. So you gotta wait for the candle to completely close because
Okay.
sometimes they do that. Like the price may think it's still and then it'll go back. And this tricks traders. This is how they trap a lot of people. That's why you wait for the candle to completely close. And if it closes as a red candle, then you have a good entry. But you gotta wait for the 5 minute. You see the timer right there underneath the price? It says 11 seconds, 10 seconds, 9, 8.
9. Hmm.
That's gonna tell you the time of the candle close.
That's going to tell you. Okay. Now I see the red one is back.
And now the
That's,
candles, see it
okay.
isn't closed
Oh,
red.
so it's 5 minutes.
hmm
Well, I
Since
mean,
you're in a
okay.
5 minute chart, and you can change the time frame of your chart. So say you want to sit in a trade for 4 hours, you can catch a 4 hour candle that's turning red and just you exit after 4 hours. So
Hmm.
this is the 5 minute chart. So you'll be in a trade for at least 15 minutes to 30 minutes, and then you'll be done. Be done with trading for the day. You can make a lot of
Okay.
money in these small moves. You make a lot of money because
Okay.
you don't need a big move. You just need a high probability move. And
Right.
these are all high probability moves. So right now, the price is having trouble falling below the red line. So
Hmm.
then you can either sit through that in your sell because you see the downtrend, you saw the red candle, so you can sit through
Hmm.
that, or you can just wait for a better opportunity. You have either choice, but as
Hmm.
long as you're not risking 100% of your account, you'll be perfectly fine.
Now this is the line that we're referring to right here, correct?
The red line, oh, the price line or the
Yeah.
the red
Now,
line,
what does that line represent right there?
that's the price line.
That's the price.
Yeah.
Okay.
So,
Okay.
so that keeps track of the price for you.
Okay.
And that red line determines the strength of the trend.
This one right here.
Yep. The
Okay.
other lines, the other multicolored lines, those are smaller trend lines. And when you see them folding and bending and about to cross, you know
Hmm.
we're about to go down again. So, for example, if you move the mouse to the left right now, all
Hmm.
the way to the left, where the previous high was. So go back where the price was above the red line before. Go back
Oh,
farther, farther, left, 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 even more like the middle of the screen almost.
okay.
All right. So you see over there, right there,
Hmm.
those lines did the same thing it's doing now, and then it crossed that purple line, crossed the red line.
Hmm.
Once that purple line crossed the red line, the price shot down.
Okay.
And
And
every time,
that was a sell. That was a selling point
yeah,
right there.
that was a major selling point.
There you
Once the
sell.
purple, yeah. So when you see the purple line cross the line, you get a good opportunity also. Like if so when you see that purple line cross the red line before it shot up.
Okay. But like you said, you'll show me because I see, like you said, you have to wait for the candle to completely close
Mm-hmm.
and finish the
And
trend before I
we,
make.
yeah. And we would have already been in the sell because remember earlier we were supposed to, but right now we still have to set up the indicators.
Right.
But I the indicators are already showing a sell for us. It's already
Okay.
showing a sell.
And now, right now, this is gold right
Yeah,
now
this is
that
gold
we're
right
in.
now.
Okay. Okay.
This
And
is
like you said,
live.
this works with everything, Forex,
Mm-hmm.
everything.
The
Okay.
stock market index is NAS 100. So it's a game changer. It doesn't work on smaller things like penny stocks it won't work on or like stuff like that. But if it's a big thing like gold, Dow, NAS, maybe Apple stock and stuff, and if it's big like that, then it will work.
Forex. Okay.
So so right now the price is finally crossing that. What were you gonna say?
But I was gonna say, but now, in order for me, because like I said, I'm on Henkel Trade, so I have to see what's going on
Mm-hmm.
here at Trading View, and then
Enter your
go
trade on Henko Trade. So I
Henkel
want to show
Trade.
you how to enter a trade on Henko Trade. I'm gonna
Okay.
actually show
Now,
you.
is that gonna like? Does it have to be precise, or I'll have like a few
Oh,
minutes to go from.
yeah, yeah. You'll have a few minutes because each of these candles take 5 minutes. So
Okay.
you'll have 5 minutes to enter it. You'll have a lot of time.
Right.
Um,
Okay.
so and the way we
Okay.
trade, and the reason why I set it up to indicate like this because you want to trade bar by bar. Like let's say you took a sell right here. You took a sell in a red candle, and the price is going down, and then you see two green candles in a row, or three green candles in a row. You can exit your sell now because you're like, all right, the bulls are coming in because you see solid candles. You know what I'm saying? It'll give you warnings to exit. So I'm
Okay.
gonna try to exit trades also, which is very important. Um, you can even see it already on the screen, but I'm gonna teach. I'm gonna share my screen in a second too, just to
Okay.
go farther. All right, so this indicator is set up. Now we need to go to the next indicator. So go back to your indicators. So that's the EMA. Is there any questions on the EMA on that indicator?
For this one, nope, nothing that comes to mind right now.
And it's just trend tracking. It helps you keep track of the trend and what price is able to do with it. Is can the bulls take over or the bears take over? Once you know the trend, you can use the signal bars to enter on that trend.
Yeah. Yeah, that's what I'm gonna like I said, once we go to Henko trade, and like you said, I gotta wait for it to finish up or down.
Mm-hmm.
That's gonna be key.
Mm-hmm.
That's it.
And
That's it.
we'll have a live scenario too. So now go back to the indicators again, and we're gonna add the next indicator on top of this.
That's right here, right? No.
Also go to your EMA indicator actually and hit settings, go
Right
down,
here?
not go down, down, down one more, no up. Yeah, now hit that settings button right there to the right. Mm-hmm. All right, so the settings you want for this, scroll down on your input list, scroll down. You gotta scroll with the side there. Now you see where it says fixed time frame EMA right there, fixed TF EMA up, and right there to the left.
EMA 4, EMA 5. Oh, okay.
All right, click that button, check that checkbox. No, go to the checkbox first.
Okay.
Check that, and then resolution 1 hour,
Resolution for 1 hour.
and then where it says defaults, click on the defaults button.
Default. Okay. So and LEN says 20. That's fine.
Yeah, yeah, that's perfect.
Okay.
And it says default, click that,
Mm-hmm. Save
and
as default.
yeah, save as default. All right, everything perfect.
It just hit okay.
Yeah, hit okay. So now That price line is the stronger trend line right there. That's the strongest trend line. So this is how you know
It's
we're
right
still
here.
in the downtrend.
Ah,
That's the strongest trend line. Once it breaks above that and it's able to hold above that, then it's all buys from there. But, okay. Now,
okay.
now your EMAs is set up just like how I use mine. Now the next step, we want to go to indicators and set up the next indicator for the trading times. It's going to tell you your best trading times.
Okay. This one right here again, indicator.
Yep. Hit that.
Mm-hmm.
And you see trading sessions.
Trading. Uh-huh.
All right, click that one. Now this indicator is going to give you the best time to take trades. So hit the X button and we're going to get into this one. So you see the green, gray, and blue boxes on the screen?
I see the green one. Oh yeah, gray. Mm-hmm.
And
And
blue.
blue. Yes.
So
Mm-hmm.
those represent the best times to trade. That's when the biggest banks in the world are open and they start moving the market. So the green one is the London banks. Those are the London banks, top banks in London. They open up there and price makes a big move there. Um, the gray one is
I remember before you were giving me the Asian with the
mhm.
different colors. Mm-hmm. Like
Now
I have them written down in my notebook. Mm-hmm.
now this indicator does it, it does it automatically and you'll be able to trade off of it. And then the gray box is for New York sessions.
And now, right now, the Asian is what, the
It's
green or
blue. Asia is blue.
the blue one right here?
Yeah, so we're in Asia right now.
In the Asian right now. Okay.
And
Okay.
then you see that orange line, the dotted line?
The orange dotted line right here.
Mm-hmm. So that
Mm-hmm.
orange line, it represents the previous week high. So,
Previous week high.
mm-hmm.
Okay.
Like for
So,
last
and
week,
right now, this is the price right now, presently.
mm-hmm, the price is
Oh,
a little bit below last week's high.
okay.
And that's important to know because that's where a lot of liquidity is in the market. So that's why that line is there. And then the yellow line shows the previous day high, the yellow line.
Okay.
So right now the price is above yesterday's high. I mean yesterday's low
Mm-hmm.
and below last week's high. So it's just
Okay. This
important. Yeah.
last week's high,
Yeah.
and
Those are
that was yesterday's low or high. The yellow.
the yellow is yesterday's low.
It's low. So right now we're lower than it.
Right now we're above yesterday's low, but we just got liquidity. So those lines are important because they represent support and resistance. Um, those are your support and resistance lines. Basically, you need that because you want to be able to know where price is headed towards. Price it's like a magnet, it goes to support and resistance. The
Okay.
reason it does that is because a lot of traders place orders, market orders at those prices, like JP Morgan, for example. They don't trade using these charts. The way they trade is they'll say, all right, when gold goes to 20 2,100, put all my sells in right there. Or take me out of gold at 2050. Take me out of gold in 5 points. Like you ever watch the old Wall Street
Oh,
movies? That's
they just set a number.
yeah, they
Okay.
say their price number and then
Mm-hmm.
that's where they get out in and out. And those numbers are based off of how the market moved and according to the other banks. So they're like, all right, London closed at 2074. All right, buy me orders up to 2075. They trade against each other or sometimes work together. It's how the market flows. So right now, Asia looks like it's going up to get liquidity from New York. It already grabbed some liquidity actually. So Asia looks like it's trying to get liquidity from New York, and the price wasn't able to break below the red line. Remember we talked about the red line. Since price couldn't go below that red line, it tried. It keeps trying. It might keep trying, but it's looking like it's gonna bounce up right now. So we'll wait for
And
more.
now what line are you looking at right now that's telling you that is this that the thick red line right here?
That thick red line.
Mm-hmm.
If price
That
can't get below it, it's gonna try to get below it.
that's what you're following right now.
Yes.
Okay.
So if price can't get below it, that's a sign that we're probably gonna go above it. And I'm gonna show you from my screen exactly what I mean. So I'm gonna go
Hmm.
into I want to show you right here. So we got the red line right here
Hmm.
and right here. Two arrows. The price tried to get above the red line, but it rejected it 2 times. It just couldn't
Okay.
get it. It couldn't get it. So then it bounced off it and shot down
Yeah.
because all the bots, like a lot of some of the banks use bots now. The bots know the
Yeah, I
average.
see that. I see a lot of those like online.
Mhm.
People to use the bots.
Yeah, the online bots are okay, but the best bots in the like one of the top trading companies in the world, they use all bots and they have billions of dollars and maybe close to a trillion. They have a lot of money. So they use bots and they manage their clients' money with bots. Like if you go to Wall Street now, there's not traders running across the floor screaming prices anymore. They have bots doing it and AI and stuff. So the
Okay.
AI, they didn't understand the average prices. They know all this stuff. So they're trading off of is price above or below average? Is it a fair price? This questions that the bots are answering, and if price is not able to get above average, then it will sell it until it gets a better price to buy at.
So, would you recommend listening to a bot or no?
Um, I recommend these indicators, they trade off the bot. So what you want to do is you want to use the knowledge and you want to use it to your advantage. So if you're seeing that the bots are about to start going down, you want to jump in with the bots because they have all the money. They have the billions of dollars. They're gonna push the market and you just want to get along for the ride. So
Gotcha.
these red and green candles signify the bots movement.
Okay.
That's how you know the bots are moving. Like so you see when green the bots try to push the price above the red line, they couldn't
But
do it.
couldn't.
Yeah, it fell once. They even tried here. They tried, they fell, they tried, they fell, they tried, they fell the third time.
Mm-hmm.
When something fell 3 times in trading, normally it goes the other way. So then now you see a red candle here, you enter your sell right here, and you would have took your sell right here. You can put your stop loss at the red line, or just you can put your stop loss right above the candle, right above the red candle.
Mm-hmm.
And you can take a 3-to-1 trade. It even went to 5-to-1. Like you could have 5 extra money, Forex. But just take your 3x of your risk. So you risk $100 to make 300. Um, you get out. So 3-to-1 is right here. You get in. It fell 3 times. You get in. Price falls. You're out. Done trading in 15 to 20 minutes. This is most of my trading days now. I'm done really quick. I look at the indicators already track everything throughout the day for me. So I just come in, I look, I see what's price trying to do. Oh, it can't break below, or it can't. It's bouncing off this. It's bouncing to the upside. It's starting to uptrend, or it's continuing the downtrend. I wait for the candle color, and depending on the trend, and I jump in, and I'm done trading 20 minutes. I don't have to watch the charts all day anymore.
Mm.
So, so I'm really enjoying it, and I'm gonna
And
keep.
once you set your trade, you set the trade and that's it.
Yeah, I set my trade. I set my stop loss. So I'm going to teach you this when you put the trade in right now. You set your stop loss, you set your take profit, and then that's it. You don't even have to watch it. You just let it go.
Right.
Win or
Just
lose.
over it.
Yeah, win or lose, it doesn't matter because over 10 trades, you're going to hit 8 out of 10, and you're not risking your whole account on one trade. So, yeah, so the math works out over time. And I'll show you the equity curve, exactly what I mean. Like, I'll go through that, explain that again.
Okay, yeah. I remember you showed me that. Yes, that made total sense.
Yeah. So then
Mm-hmm.
when you're trading at 80%, I'll pull that one more time.
Mm-hmm.
All right, so we're right here in the simulator, our equity
Mm-hmm.
curve simulator.
Mm-hmm.
I'll start with 200 in there, and when you trade at 80%, and you're going for 3-to-1 trades, you can go for 4-to-1 and all that, but you're going for 3-to-1 trades. You take let's say you do one trade every day for a month. You do 30 trades.
Hmm.
And your risk per trade, you only risk 10% of your account per trade. That's what I would recommend. I recommend 1 to 3%, but you can with 80% accuracy, you can risk 10% of your account. So when you're risking 10% of your
10%.
account, yeah,
10%. Okay.
you can turn that right here to in 1 month. It's went to 70K. It's kept 10% risk off of 80% accuracy
70K from $200,
for $200.
winning at 80%.
Yeah, when that 80% taking one trade a day.
Hmm.
The
One
thing
trade a day.
is, the reason most traders are able to treat this because they'll hit 5 trades in a row and then they'll start risking 50% of their account. You know what I'm saying? They'll start risking more. Because look in the beginning of this equity right here, it
Mm-hmm.
doesn't look like it's gaining much. It's just kind of going sideways. So they
Mm-hmm.
get bored around this point and they never able to compound their account.
Mm-hmm.
But now let's say you're risking 5%. You don't want to risk 10%. It's too risky. You do 5% risk. That $200 went to 3K, 4K. It never down draws. Now let's say you go 70%. Let's say you put a margin for error. Like what if it goes 70%?
Mm-hmm.
That $200 still went to $1,600. Just one trade a day, one 15, 20 minute trade a day. You're
And
in.
that's for the month.
One trade a day.
Okay, 1,600 from 200. Okay.
One trade a day. Went to 3K over here. Because depending when you win or lose is gonna go to different heights. You don't know which of the trades are gonna be your losers. That's why you can never over risk. Because like Elon Musk can come and like I just want to put $1 billion in gold one day and then they can anything can happen. So you want to have that margin for error. So you can't
Mm-hmm.
you gotta say I don't know what trade is gonna win or lose. I'm just gonna stick to this strategy.
Mm-hmm.
Now you got your risk amount, you know how much you're risking per trade, and you got your indicator. So I would start with 5% comfortable with it and then increase it to 6, 7%. But
You better start off at 5%.
yeah.
Okay.
Like I only risk 1% per trade, but I'm on a bigger account and I'm able to make thousands a day just risking like that. So
Yeah.
you don't have to risk much. And then they have the funded accounts too. So you don't really have to risk much nowadays.
Right.
But
So I'm hoping with the indicators, once I get to know how to use it, I'll be able to get a funded account.
yep.
Originally, you had emailed me a couple of funded accounts, I think, in the Telegram
Mhm.
uh, that you use. So yeah, once I get the indicators
Get it down packed, get the wheel rolling.
back. Mm-hmm.
And every day you implement the strategy. It's gonna seem really simple and boring. You're gonna hit that one trade, and you might want to trade again, or you might want to over trade. I I wouldn't recommend. You can catch 3 trades a day per session, so you can catch a trade in the Asian session, one in London, one in New York, but you might be sleeping during one of those sessions. So realistically, you might catch Asia and then New York, and 2 trades a day. You're done.
That's all you do? Just one day, one trade a day?
Yeah, do one trade a day. I
That's
wake
it.
up, yeah, I wake up in the morning in New York. I see what New York is doing. Or they fell below here. They came back. They broke above. This this not a good New York session. This is actually a trading range. But I would have caught this move right here.
Okay. Well, I can't see your screen. I just see the
Oh,
simulator.
going back. So I would have told you how I would have traded for New York right here. And that's why like in the Discord, like I post that one trade a day. Like that's literally my trade. Just take that one, I'm done. Because you don't need to
Good.
take. You can make all your money in one trade. 15, 20 minutes, work is done.
Hmm.
You can see
I
the
mean
effect now.
that that would be great. You know what I mean? One
Even
trade.
when we first started, remember when I was like, all right, we would take a short right here. If we would have put that short in and let price fall from just us first starting,
Hmm.
when we just had the signal bar indicator, we would have just did that, put our stop loss here, and went for a 3-to-1 trade. We'll be almost at take profit.
Hmm. Okay. Yeah. See, I want to see how it works on the Henko trade.
Yeah. Like it's crazy. Like we're gonna watch the price. We're gonna watch the trade hit while we're live. I was gonna tell
Okay.
you just to put in the trade, but then I never explained the indicators and stuff, so
Mm,
I didn't. I wanted to properly do it, but
right.
we'll still be able to find a trade opportunity. There's always an opportunity in this market. It's infinite opportunities in this market. So
Yeah.
and 24/7 they always happen.
Right. Right. That's the one thing about day trading. That's one of the things that caught my interest. That you could make money pretty much around the clock. You
Hmm.
know, other than Saturday and Sunday afternoon.
Yeah, exactly. Take
You
those
know,
days off because you won't even need to trade those days.
right.
Um,
You could make money and or lose money.
yeah, no,
It's-
that's important. You said that your job as a trader is to make money and lose money. However, your losses have to be s- smaller than your wins. That's it. Like I can show you an example right now. I'll pull back up this I'll pull back up this the simulation for 1 second because
okay. Mhm,
all
mhm.
right. So let's say I'm only 20% accurate. I'm just a
Mm.
20% accurate trader. I'm not even a good trader. I'm the
Yeah.
worst. I'm only
I was gonna
20%
s-
accurate, right?
I was gonna say, yeah, that's not good.
Not good. But however, with the math of trading, if I go for 10 to 1 trades, if every trade I try to hit 10 to 1 risk reward trade and I risk my 5%, I probably have to risk 3%. I risk 3% per trade a month. After a month, I'm still making 500 bucks. This month I broke even, so I have to go less. I would have to be I'll have to go for 20 to 1 trades.
Even at 20%.
Yeah. Let's say I go for 20 to 1 trades. At 20%, I'm still making profit. I can turn that 200 bucks to 4K in a month. Some months are gonna be better than others, but I would never go. Oh, that one I broke even on. So I'll have to either risk less, so I have to risk 1%, and money always goes up. It's not as pretty, but even at 20%, you can make money. It's about
Wow.
having the right because your job as a trader is to take to be able to take wins and losses and be able to do it without messing up the equity curve over time. As most traders think trade by trade, the top traders they think over a series of trades. They think over this month, over this year, I'm going to be this profitable
Okay.
based on this equity curve numbers.
Okay.
So, and that separate that right there is a major shift that helped me once I started thinking over a series of trades. Like, all right, over the next 20 trades, over the next 30 trades, I'm going to aim to be 50% accurate, 60% accurate. Now I got it up to 80%, 90% accurate and stuff. So I'm able to make a lot more
Right.
in a faster period of time. But you can be 20% accurate as long as you're going for bigger trades. So
Mm.
so this is a 20% accurate. And then there's a trader who like makes billions of dollars and he's only right 20% of the time.
And makes billions.
Yeah. He goes for 100 to 1 trades.
Oh,
And
okay.
he has his losses and stuff, but when he hits him out the park. He's a billionaire
Mm.
trader.
Right, right, right.
And I'll show you
Mm.
what 100 to 1 trade. So I'll go back into the charts right now to show you what that looks like.
Mm-hmm. Wow.
Nah, yeah,
So yeah, so it's a marathon, not a sprint.
yeah. Trading is yeah. No, that's the best way to put it. Like Nipsey said, trade is infinite opportunity. So
Mm.
right here, this is a 100 to 1 trade. Let's say um I saw this red candle here. I saw an uptrend. I saw a price going to a trading range, kind of dip below the red line, come back up, and I took like a trade right here. Like I saw a red candle up here. I took this. Even this is not 100 to 1. This is a 20 to 1 trade. You could have just called this whole 20 to 1 trade.
Mm.
Because the 5 minute chart. I'll have to go to like a bigger chart for 100 to 1.
Mm-hmm.
Or I'll have to just,
Because I showed some of the trades that you showed on the Telegram with the
mhm.
gold. Those were big wins.
Yeah, those are giant, the big ones, yeah. So yeah, and that's all the same indicator. The way you catch the bigger trades and the bigger moves is I'll have this is how my screen normally looks. I have the smaller time frame chart open, the 5 minute chart. And then I'll
Mhm.
also be watching the week chart and the day chart. And sometimes I switch to like the month chart So,
Oh, so you have it broken down like
mhm.
on your computer, the three different, you have the indicators and the
So I use the same indicators,
mhm.
four indicators, and I watch it on different time frames. So on here, I see
Oh,
an uptrend on the month. I'm like, oh, it's an uptrend, and we just had a green month, so price is probably gonna push up more month this month. So then I set up my buy, that buy I called in the Telegram. You saw the big one. Set it up for the new month. December came in, price shot up, and that's off the same indicator because it works on every time frame. So you can catch, yeah, it's great. And on the big time frame, you catch the big moves. Like, yeah, I'm excited
wow.
for this new video series to drop. I break down all the indicators. Like, I really, that was,
I I can't wait. I can't wait myself, even from the last time we spoke. Because the first time you didn't have the indicators.
no, I had to try to teach 5 years of knowledge and break it down. And it's a lot of knowledge. Now the indicators make it so simple. Like,
Right.
I'll give you guys a good indicator right now. You want to see the scalping strategy? All right, I'll teach you the scalping strategy. So this is a strategy you guys can use for your scalping. This is how I scalp. So when I'm scalping, I do two things. And it's probably going to be an 8-to-1 trade right here. It's still going up, but whatever. When I'm scalping, you need to understand two things. What's your risk to reward, which we went over earlier. You know your risk to reward is 3-to-1 to 5-to-1. When you scalp, you want to go for the small. So I always go 3-to-1s for scalps. I'm like, all right, I'm gonna win 3 and then lose 1. So take my 3-to-1 simulator, take my $100 account, and now you guys should be at like a 60% accuracy with the trading. It's based off the stuff that you're learning in this video and the stuff you're gonna learn. So you'd be at 60% accuracy. You take your, let's say per week, let's say you're scalping now, so you're getting like 5 to 10 trades in a day. Like 10 is really pro. Like I can get in 10 to 15 trades a day and stuff. And I had the night where I did 100 trades at night. You can catch all those trades, but let's say you're going for 10 trades a night. No, let's say you're going for 5 trades a night for a week. So you got like 25 trades a week. If you trade a weekends with crypto, I'll put like 35 because you can catch crypto trades. So you're getting 35 trades a week scalping, and you're risking the same. You're risking 1%, and you guys can risk up to 3%. Like I'll show you with 3%, but this is how your equity curve will look, guys. The $100 account goes to 155 here, so you're up 55% for the week, up 40%, up 160%, up 70%, and all your equity curves are gonna always be up. So, and then if you go 3% risk, now that $100 turns to $500 in this 1 week. So you're up 500% for the week. This how in those videos I show you guys, like I get crazy returns, crazy numbers, because I understand exactly how much I can risk with keeping the account going. But let's keep doing it. They're all up. So you just make hundreds of dollars from a small account. All right, so now you understand that for scalping. I'm gonna teach you guys one of the ways I scalp, one of my setups, and then the rest of the setups you guys can catch inside the course. So, get my chart. What is this, BNB coin? I don't really like BNB because it's a lot of sideways action. I'll go XRP. So I'll look at the XRP chart on zoomed out, just like this, and I'll be like, okay. I see the price is falling down. I'm like, okay, it's falling, it's falling. It's not letting me draw it, but I see the price falling down, falling down, falling down, Went down again, fell down again. Tried to fall. Boom. So this would be one strategy I would take right here. So fall. So I know the price is continually falling, finding new bottoms. And then right here, from this to that, and I'll take a brush. It's called the head and shoulders. See a shoulder, head, shoulder pattern. This is in the chart patterns. So I'll see a head and shoulders pattern. It's upside down. I guess this would be the head. And this would be the person's shoulder. I don't know why they call it head and shoulder, but that'd be the person's shoulder, whatever. So shoulders and heads. Now I'll come zoom in. So now I want to do a replay for you guys, but just pretend I did a replay and all we can see is here. We see this. We see the price doing that, going up, going down. Now I'm like, all right, I see it falling here. I'm like, oh, the price is falling. First, once I see this price falling, I will take this trade right here. This is my first trade. Catch a short here. Catch my 3-to-1. They give me more anyway, but catch that 3-to-1 going down. Right, and then when we get down, I see the price reject this, and then the shoulder forms. Now I take my next trade, and this happens all day. I'll show you guys more of them. Rejection here. My stop loss will be here. My 3-to-1. Will be right here. So that'll be one trade. Next trade, 2 trades. 3-to-1, and then I see the price coming up. It's going up. I see it reject this high price. I'm like, okay, it rejected the high price. It rejected that price right here. So now I want to take 3-to-1 going down. From there. So. And it hit in 10 minutes. It hit in 10 minutes, fell down again, wick back up. Then I'm like, all right, it's trying to come up. And now it's sideways action. I'll be patient. You can see sideways action, you're patient. In market cycles, I teach this more. But this is how I'm able to trade the charts all day, no matter what time frame, what chart. I'll be like, all right, I call that a trading range. I'm like, all right. All these up, down, that's like a trading range for me. Then right here, it breaks below the trading range. It breaks below, and then it starts that pattern that we just talked about. Where's my brush? It starts this pattern right here. Breaks below, and then it goes 1 push, 2 push, 3 push. Like, can you guys see that? Let me zoom in more. All right. So we break out of the trading range right here. I'll see trading range right here. I'll hit my trade right here. So that's 3 trades hit, a close. Now I'm like, all right, the price is just going like these small moves. I can catch trades in these moves. To catch a trade in these, I'll have to use a shorter stop loss. So I'll show you guys what that looks like too. But I teach you guys how to trade trading ranges in the course. But to catch a trading range, you see the price come up here, reject there again, outside the trading range box, and 3-to-1 would be right here. So that's it. Move that over because that trade ended over there. This trade right here. So I'll be like, oh, it's in the trading range. And this is how I get a lot of trades too when I'm scalping all day. And then I'm gonna do it on a live chart too, so you guys can see. But all right, so you see the 3 to 1s going up, going down. I'm gonna remove that. Holy show. So catch that 3 to 1. In order to take this 3 to 1, since my risk is smaller on this because it's a little box, I can bet more money now because I have less ticks as my stop loss. So I can put in a decent sized bet. I can risk 1 lot size, 10 lot size, whatever. And I know I'm still risking 1% of my account to 3% of my account. And in that trade, I can make, how much ticks is this? This is what, 109. So if I'm going 10 lot size, I've made $1,000 in this little move. This move right here, it's given 750 on the loss, 1800. It's like 17K move right there with a 10 lot size. So there's so much money in trading. There's a lot of money in trading. There's ways to grow any size account. It's just understanding how to trade. So then, yeah. So go back to the move right here. It breaks below, and then we see the chart pattern. So 1 push, 2 push, 3 push, and then we see it right here, and that's a 3rd push down there. Then I'll come through. I'm like, oh, 3rd push. Catch my next trade. Stop loss. 3 to 1. It almost hits perfectly too, which is crazy. It hits the 3 to 1, and I would have took my profit. People who didn't take their profit, it comes all the way down, takes them out. Some people get greedy, whatever they want to do, and they'll get taken out and they'll lose their money. So now it hits the next trade, 3 to 1. And that's how I scalp all day, no matter where I'm at. Right here is, I'll put the trading range box on right now. It makes me want to trade right now, just even seeing the market. Every time I see the market, I just want to trade. So I'm like, all right, it's a trading range box for me. So when it comes down here, I can take a trade back up. So probably gonna see a rejection and then shoot up, and I'll take a buy right here. Actually, I like that area now, but yeah, this is pretty much how I trade, how I scalp, and you can see you can take a lot of scalps. So if you want to learn more about scalping, how to master the 5-minute chart, that has a lot. And then market cycles and chart patterns are very important to know too. Trading indicator, I'm gonna give you guys a free indicator right now that I love. Alright, so if you're having trouble trading and growing your account, becoming a profitable trader, which a lot of people are going through, you're going to want to check out the step-by-step guide how to take yourself from a negative trader to a positive trader, and be able to turn trading into a career. Hit your first million in trading, first 10 million, and then go on to the 100 million like we're headed towards. So it's going to help a lot of people how to go from a negative to positive trader step by step. I have Real Bros Trading. I'm Ty.
I'm Luke's.
And it's Real Bros Trading. Let's get into it.
Let's get into it, guys. And first, you want to ask yourself, why doesn't my account grow? And part of the reason why you're having trouble growing your account is because you're not trading mathematically. What you're doing is you're over risking. You're not risking 1 to 3% per trade. You're probably risking like 10%, 20, 50. I've heard people risk everything on one trade, and it's not good. 2, you have no strategy. So like, you're trading on bad setups and you're trading at the wrong times. So you're like FOMOing in on a trade. It's not good. And 3rd, trading emotionally, which also goes in with FOMO as well, is you don't want to be an emotional trader. If you want your account to grow, you got to be a logical trader.
My friend Chris, man,
So we got this friend called Chris, man.
Yeah.
You know, Chris has been trading for 5 years. 5 years.
Mm-hmm.
And he still works a 9 to 5 job. He is not profitable from trading. His friends and family doubt him that he will ever be a successful trader. Every time he tells them, "Yeah, I'm gonna be a trader," they doubt him. They crush him. They're like, "Yo, yeah, bro, you've been doing it for a while. Like, not gonna work out." You know, he knows it's possible because he sees that other people are profitable. He sees that we're profitable, and he sees other traders are profitable. So he knows it's possible, but he just doesn't know why he's not profitable. And we was talking to him the other night, and he brought up a lot of concerns, and was like, "Wow, this is like a lot of people who are in our trading group that we know and stuff. They're just having trouble. A lot of traders. When we first started, we were in the same boat as Chris. So this course right here, this is for Chris to turn Chris into a profitable trader. We got you, Chris. We're gonna take you,
Got your back, buddy.
we're gonna turn you profitable. So this is for Chris, and if any of you guys are going through the same things, this can help you too. So you're gonna want to check. You're gonna want to definitely pay attention to this course.
Definitely. And then the 3 steps will make Chris profitable. So first, we want to teach him what an equity curve is. Then we want to teach him how to control his fear and greed, so he becomes a logical trader. And then we want to teach him a high probability trading setup.
Very important for
Yeah.
Chris. So let's get into it. Equity curves. Let's go into our equity curves. So, our man Chris. So there's 3 types of traders, and you can find them by their equity curves. The first type of trader is Tom. Tom's right here. Tom just blows his account. Like he puts money in his account. He put $1,000 in his account. As you can see, Tom's the first one over there. He'll put $1,000 in his account. He'll go up, go down, go up, go down, go up, go down. And eventually, just goes down to 0 and blows his account. And that's a Tom. You know what I'm saying? There's a lot of Toms in trading, and it sucks because we used to be Toms. We started off, we were blowing our accounts. Everyone starts off as a Tom. And that's just someone who blows their account. Then you got Chris. You got our Chris. Chris been trading 5 years. He's not like Tom. He's not just completely blowing his account, but he's ended up break even. He's just breaking even. Like he'll go up, he'll go down, he'll go up, he'll go down, and he'll just either lose a little bit or just gain a little bit, but he's just not a consistently profitable trader over time. That's, shout out to Chris, shout out to Tom.
Shout out Chris, yeah.
You know what I'm saying? All Tom's and Chris's, this is just to help you guys become like us. This is how we grow our accounts on equity curve. We'll put money in our account, and then we'll watch our equity curve. We'll take losses. Look, everyone takes losses. We'll take losses too. But over time, our account always goes up because of what we're about to teach you. And by the end of this course, you're going to understand exactly what we do. To go from Tom to Chris to Ty and Williams. So
let's get into it. So first, let's cover Tom. So Tom, as we know it, he's just blowing his account, losing out on a majority of trades, and then eventually going to 0 on his account. And the reason why is because, one, he's over risking. So he's risking more than what we usually recommend, which is 1 to 3%. He's probably risking like 10, 20, 50, and then I've seen people risk their whole account on a trade that they thought would go through.
I seen someone sell their house and buy Bitcoin at 60K.
Yeah.
And now they don't have.
Yeah. And then they have no strategy. So like, if you have no strategy when it comes to trading, you're just gambling. And if you're gambling, you're just throwing away money because
Taking bad setups.
and then like just trading at the wrong time. And then Tom's also trading emotionally, so like he's not thinking through, he doesn't have the mathematics, he's not trading mathematically, he's just going with the flow.
He's just flowing. Tom's a bro.
He's a bro, but
Don't be Tom.
yeah, you don't want to be Tom.
You don't want to trade like Tom. why does Chris break even? Some people might ask, why is Chris breaking even if he's been trading for 5 years? And why? Well, Chris is also over risking his account. He may not be, risking as much as Tom, and we'll do a more detailed breakdown of each trader. But he's also over risking. He also doesn't have strategy that makes him a profitable trader. He's taking bad setups and he's trading at wrong times, just like Tom. He's trading emotionally, just like Tom. But you're gonna see the difference between Tom and Chris in a second, and it's gonna blow your mind. It's almost like they're the same,
Yeah.
but there's slight differences between the two, and you're gonna see. And
Then, so you want to know why we time books, why we grow our accounts? It's because we're sticking to the code. We're risking 1 to 5% per trade. We usually do 1 to 3% for our on our Telegram when we're no, we usually do 1 to 3% on like our live streams, but usually we'll risk 1 at most 5% per trade, and then we'll keep that same risk over time with like up to 20 trades. And then we have good setups, and we're always looking at good times. So to us, like, it doesn't matter if we win or lose the trade because we're just following step 1. We got our risk management unlocked, so we're just risking 1 to 3%. And then step 2, we got the good setups. And like, if we have good setups and good crisp risk management, then our equity curve is just going to go up over time, as you see like on the picture to the side.
there's no emotions with us either. Like, we don't care. It says we don't care. If we win or lose, we don't care.
Yup.
That's how you gotta be. Like, I hate to stress it. I don't want to sound emotionless, but you have to be emotionless when you're trading. You cannot care.
Definitely.
I see a lot of you guys just caring too much. Like, yo, if I lose this, I'll lose everything. Like, you're trading too much risk at that point. You're caring. You need to lower your risk and trade with less, so you not care about what you lose. So that give you the ability to gain. Because if you're scared, you'll miss out on good setups and good times. Because you're spending time being scared, Well, we'll go into it more. We can talk all day about this. But this is very important, guys. Like, if it seems simple, because we're trying to make it very simple, but this is very important. Very, very important topics, man. Let's see Tom's equity curve. So we're going to look at Tom. Let's look into Tom's equity curve real quick. We'll throw us in the corner.
Yeah.
We'll focus on Tom for a second. Tom's equity curve. Now, Tom, he has a 70% win probability. Even with a 70% win probability, though, he loses his money over time. See, right where I put the number 1, that's his win probability. This is an equity curve simulation where we're able to simulate his equity curve over time, and you guys will be able to use that. You can read down the slides below and join the Telegram and stuff. You'll have it's a free Telegram, everything's free, but you'll be able to have access to all this stuff. But Tom has a 70% win probability. He's winning 70% of his trades, but he still loses money over time. It's ridiculous. Like, it sucks. Look at number 2 right here. His risk per trade, Tom's risk per trade, number 2 is 30%. He's risking 30% of his account every time he takes a trade. He's not risking his whole account. He's not risking 50%. So at least not his whole account. At least not 50%, but he's still risking 30% of his money every time he takes a trade. He's putting 30% of his money in it, risking it. And he's 70% profitable. Like, he'll win 7 out of 10 trades, but being 70% and risking 30% just don't mix well. And then number 3, his risk to reward ratio, like, that's how much he risks per trade versus how much he's gonna make, is 1 to 1. What that means is he's risking 30% of his capital, 30% to make 30%, which is, it sounds cool. It may sound great to Tom, but the math of this makes sure that Tom will never be profitable. As you can see in his random simulation, number 4 is his equity curve. He's 70% profitable. He won 70% of these trades, but his money just goes down over time. And it sucks to be Tom. It's a lot of Toms out there. It's tough. Like, the life of Tom is very tough because he's probably going to work, put his check into the market, and he's risking too much. He's 70% profitable. He knows he's not a bad trader. He's a great trader. Tom's a great trader. I don't want you guys to think Tom is a bad trader, but there's certain things about the strategy that are never going to make him profitable. And it sucks. So, that's Tom. You know what I'm saying? It's tough, man. Then we got Chris's equity curve right here. And Chris's equity curve, he has a 60% win probability. As you can see with number 1 right here on the screen, it's pointing to 60%. 60% win probability. And his win probability is less than Tom actually. He's not, it's debatable, considered good and bad traders, but he's a less accurate trader than Tom. Tom is a better trader, but Tom still just loses all his money. Chris has a lower win probability, but he doesn't lose all his money. And the reason why he doesn't lose all his money, has a lower win probability, is because he risks 20% per trade, which is less than Tom. Tom's risking 30% of his account. Chris is like, I'm gonna do like Tom. He's gonna risk less. He's gonna risk 20% of his account, and he goes for a 2-to-1 risk to reward, as you can see, number 3, 2-to-1 risk to reward, and that means he risks 20% of his account to make 40% back. So the risk 1 to make 2. So that's actually helping. That's actually helping Chris a lot, but it's helping him not be a Tom, but it's not helping him become a profitable trader like Ty, like us. So the math of Chris makes sure he only breaks even over time. Like no matter how much trades he does in his lifetime, if Chris keeps it up at this pace, he'll always just break even or be slightly profitable or slightly negative. And it sucks, man. It sucks. It's really hard for Chris. Like, this is our homie. He's been trading 5 years. Trading 5 years, he explained his problem, and we broke it down with the math. We put it behind his trading style and everything, and we got to the bottom of it. And this is Chris. Man, but don't worry, Chris. We're gonna get you fixed. That's what we're here for. We got you, Chris. It doesn't end here for you.
Yeah,
We're gonna get you profitable.
definitely.
When we reveal our equity curve. So number 1, we got a 50. So Tom and Chris may be better traders than us. Like maybe, they're not. Like their probabilities are lower than ours. But just for this example, we've said that we were less accurate than Tom and Chris, but we're still profitable. Even if we're less accurate than Tom and Chris, we're still able to be more profitable than Tom and Chris. And that's weird right there, right? It's like, it's not about being the most accurate trader, right? Like,
Yeah.
It's not about that. Like, for this example, we was like, all right, Tom, we'll say we're only 50% profitable. Let's say we only like half the trades we take, and as you guys trade with us, you see like we're more like 80 to 90% profitable. Like, highly profitable, like high probability traders. We take high probability setups. But for this example, to help you guys out and to show you that you can still be profitable being a worse trader than Tom and Chris, they're great traders, but they'll never be profitable. The reason why is because while we're 50% probability, we only risk 5% per trade. We're not risking 30%. We're not risking 20%. We're not throwing our whole accounts out there to get demolished on those rare times that we do lose. You know what I'm saying? Like, why would we do that? There's no need for us to do that. We're not trying to get rich over one trade. If you guys need more psychology, watch the 10 Trade Commandments video where we talk about that. And, we're risking 5% per trade. On top of that, we do a 3-to-1 risk-reward ratio, or more even sometimes. We'll go for more. What that means is we're risking 5% to make back 50. Let me see one of your hands. To make back 15%. So we risk 5%, 5 to make back 15. Can't beat that. Can't beat that. So we're making more. We're making back more on every trade, even though let's say, for example, we're losing less trades than Tom and Chris. Tom and Chris are the best traders in the world, but they're just something off about their strategy that doesn't allow them to be good traders over time. And the math of us, the math of Wall Street traders that we use is Wall Street trading, and the math of us, it allows us to make sure that we are always profitable. It's weird talking about this in the third person. It's really weird, but the math of this makes sure that we're always profitable over time, over 100 years, over 1,000 years. You know what I'm saying? If we have AI and bots trading as us, those bots and AIs will always be profitable, and it's just based off the math and how our equity curve is set up.
So what can we learn from this? Well, first thing we can learn is you need to find your equity curve. And to find that, to help you guys out, we have a equity curve calculator. I believe the link will be in the description below the video. And then you also want to try out different settings so you can see if you have a profitable equity curve. You can test it out over 20 trades and it should always be profitable. You want to test it out 50 times as well to make sure that it never goes down. And then once you find a profitable equity curve, add it to your trading strategy and watch your account grow like a Wall Street trader.
Number one is major, guys. So let's get into it right now. Let's actually go into it. I'm going to pull up the equity curve simulator for you guys. But yeah, you guys are getting a full-fledged course right now for free on YouTube, so we're not holding back on this one. We got some more, but we got a lot more coming for you guys. I want to make sure everyone's able to be profitable. So let's go into the equity curve that Will was just talking about. Boom, you got your equity curve simulator right here, guys. And the link will be below. You guys feel free to use it and stuff. So let's say we start, we all got $1,000. Let's say you start with $10. Like, you don't even got to start with $1,000. A lot of euros. Let's say you start with just 10 euros, guys. You have 10 euros, right? And you're like, we want to be like Chris, Tom, and Woods. I'm not even gonna put 80%, guys. I'm not even gonna put it like, because then you're gonna be, some people are gonna say, oh, we gotta be 5 years traders just like you guys to even do this. And I want to show you guys that you don't have to be top level traders like us to be profitable. You just have to have the right strategy that we're teaching you guys. This course right here, we could have sold for thousands of dollars to teach you guys how to be profitable, but I want to make sure you guys understand this. You got a 50%. Let's say you got a 50% win probability. Going for 3 to 1, just like we said. Look, we clicked on an ad for you guys. You got a 3 to 1, right? 20 trades, right? 20 trades. Number of lines with the all-in-one. Risk per trade. How much risk? 5, 3%. What is our risk over here?
This is 1 to 5 issue, but let's say
we're doing 5%.
Yeah, let's say we do 5%.
Let's say we're doing 5%, guys. Let's go 3.
Alright.
So we're going even 3%. Our equity curve goes up over time. That $10 doubled. What's that? Another equity curve going up. Another equity curve going up. Another equity curve going up. Money tripled. All these scenarios, our money just goes up. Look, I'm clicking, guys. Even this scenario, it kind of just went. Now let's see if we put over 100 trades. We never see the account go back down. It's crazy, guys. Like, I can click this all day. I'll click this for an hour for you guys. These are all different simulations of our account growing over time. We're never gonna see it go down because the way we're trading is profitably trading, and this is over time. We're not worried about, oh, like one trade. I'll show you guys over one trade. Like, it's nothing but one trade. Like, no one cares about one trade, guys. Now let's say we're trading like we're trading like 80%. Now we're 80% profitable. Now we're jumping into number 80 to 90. We'll go 85 because we just put 80 for sakes,
80, yeah.
right? And then we look at over 80. This $10 just turned into 12K. And this is why you see our videos $10 turn into 4K. This is why you see in our videos we're taking $50 account, growing to like what 5,000, 3,000. You see in these videos, you're seeing crazy vids. You're seeing all this crazy stuff is because we understand how to grow accounts profitably, and it never goes down. So that's the equity curve simulator. You guys can play around with that and stuff. Go to the next slide. What is risk reward? Let's talk about it. Here's an example of 3-to-1 risk reward trade. That we actually called this trade when we were shooting the PowerPoint. Like we made money recording this, of course, so it's really cool. We got paid to make it. It's like, you know, every time I open a chart, it's a good trade. So we use a lot size that only risks 5% of our account. So if the trade was to hit the stop loss, guys, that red area over there, if the trade was to hit that red area and stop us out at 1947, we would have lost 5% of our account. But the trade did not hit our stop loss. And since it did not hit our stop loss, we gained 15% of our account when it hit profit. And we had 2-3 chances to even get out that trade. But we got out the first time it hit take profit. We just got out. And our account grew 15%. So, you know, win or lose on this one trade, though, we don't care about one trade. We only care about 20 trades, 100 trades. We don't care about one trade. Again, we're not worried about one trade. We're worried about, is our strategy going to be profitable over the next 20 trades, over the next year, over the next month, over the next 100 trades. We even think bigger than 20 trades, but sometimes it's hard for trades to even think past one trade. So we just want to get you from thinking from 1 to thinking of 20. And, you know, the Wall Street trading strategy keeps me profitable, trading like I'm on Wall Street. It keeps us living like we're on Wall Street. So it's really awesome, guys. Like, you guys are getting a lot of sauce. Like, this might be the top trading course on YouTube.
This is free game.
Again, for completely free. This is thousands of information. But we want to turn our boy Chris to profitable traders. So Chris is for you, and everyone in the comments below. Like, thanks Chris, and thanks Tom. Because without them, we'll be here. Make sure you guys subscribe too, because we got a lot more courses like this. Let's go deeper into it though.
So next, you want to remove fear. So you don't want to be scared to lose a trade. And the reason why is because you have proper risk management, so you're not risking your whole account. And then you're taking good trade setups. So that means you understand how the math's going to work out over time. And you're not scared to miss out on an entry because there are hundreds of different charts to trade, and there's an entry somewhere you didn't miss. So you're not going to focus on just one entry and then FOMO into it and risk a lot of your risk.
For poo putts.
Yeah,
that's for the poo putts.
Definitely. So you don't want to go out like that.
You don't want to be a poo putt trader, guys.
You don't want to watch the charts. Like, once you enter, you don't want to be watching the charts all day. Just like sitting there looking. I mean, we kind of do it because we on the stream, but we're also like answering questions, doing other stuff.
Like, that's one reason we don't like live trading, guys, because we don't have to watch charts. We put our trade in, we can go chill, we can be anywhere we want in the world.
We could be watching movies.
But now that we live stream, you guys get to see us, have to watch charts. But we do it for you guys.
Yeah.
We do it for you guys.
Definitely.
But you don't have to watch those charts.
But yeah, as long as you have like you have your stop losses and then you have your entries, you're good. And you don't get out of trades early because of fear. So you want to remove that fear, as we're saying. So you don't want to exit out of trades early. You want to have confidence in yourself. And then you also want to believe. You want to have to believe yourself. Like, you want to say, look in the mirror and then just say, I am a Wall Street trader. Like, just say that looking in the mirror. Affirm that like every morning or before you're about to hit a trade, just
You gotta become, you gotta embody it. Like if you follow these rules, you're gonna be a Wall Street trader. You don't have fair because Wall Street traders don't have fair. Watch The Big Short. Watch how that dude he takes the massive short and he's down billions of dollars and eventually goes up. He's down millions of dollars and eventually goes up. He sits through being down millions to reach profit. You want to have those type of emotion where you just headphones bumping, music chilling. You're not scared of nothing. You're just taking logical trades. You remove fear so you can enter a state of logic. That goes into removing greed, another emotion most traders have. Like you don't hold on to trades longer than take profit because you're not greedy and you only care about following a strategy. Like you're not like, oh, I want to change my whole life on trade. You're not thinking about all your bills you can pay off or in a trade. You have no greed whatsoever. You're just like, all right, I hit my TP, my 1 to 4, 1 to 3, 1 to 5, 1 to 7, 1 to 8, whatever you took. You hit these trades. You don't chase trades that you missed out because you need more money. Like, oh, I need some more money. Let me just force a trade out the market.
Yeah,
when the market's not giving a trade, or at least that peer game is not giving a trade. I don't try to trade to get back in a trade. I don't try to get back in a bad trade just because I'm greedy and always want to be in a trade. So a lot of traders, they can never not be in a trade. Like they get out of a profitable trade, they grow their accounts. I'll watch this live. They grow their accounts and they just rush back in another trade, even though it's not a good setup or anything, but just because they just gotta get a next trade because they just want more and more and more, and they just become greedy instead of being logical and like, where's my next logical setup? A lot of traders just worry about getting rid of fear, but they ignore the greed side. And then before, I don't trade bad setups at bad times because I'm not greedy. I will wait days for a trade if I have to. We never really have to because the trades happen all over. There's lots of stuff to trade. But if it would require me to wait days for a trade, like I'll wait those days. Like I'm like, all right, market is not there today for me. Let me wait tomorrow for the next day. Let me wait. It's like fishing. Like it's kind of like fishing. You want to be patient, have the patience of a fisher. But there's not such thing as good fish. Like, with trades, there's good trades, there's good setups. You want to wait for those good trades, and good setups. And we call those high probability trades and high probability setups. And that's what you guys are about to learn: high probability trading, high probability setups. So this is about to get super, super advanced. Like shout out to Chris, guys. Like, W Chris in the comments, because he's about to get you guys right. All right, I'll hold you.
Nah. So here we go. We're gonna have setup number 1 for a high probability trade. So an example before, like you saw, we put only 50% win probability on our trades, and we did that to show you that even in a worst case, we'll always be profitable as Wall Street traders. In reality, our trades are 70 to 90% accurate, depending on the setup we take. And if you've seen us live on TikTok, you've seen that we've just been crushing trades, and people are always asking, like, how do you do it? But it's just that experience that we have. And we also have like over 100 different high probability setups. So, but we're gonna save that for another course. But what we're gonna do right now, we're gonna equip you with a high probability setup you can master and grow your account with. And this is gonna be the golden zone rejection.
Yeah, so you guys are about to learn high probability setup number 1. Like I'm excited. Like now I'm excited to take you guys down the domain of being a high probability trader. Wow. That's what we're about. We're about high probability trading over here. None of that poop trading. Let's see. So here's the trade we call it this week live on TikTok. Yeah, we've been crushing TikTok, and you guys can join us on TikTok too. It's at ChatGPT Millionaire on TikTok. We trade live. We're on Twitch and all that. We trade live. Let's go into it. So step 1, you find a giant. And I'm gonna show you this on the live chart too, guys. But step 1, you find a giant bullish or bearish move. We found one. Step 2, we use the fib tool to draw a fib from the bottom to the top of the move, or top of the bottom. So right here was bottom to the top. Boom, we drew it. And then we had created a golden zone. Put our golden zone there. Step 3, we take a 3-to-1 trade when the price forms a rejection in the golden zone. This trade went as far as 6-to-1. So don't worry about being perfect or missing out. You have a lot of room to catch your 3-to-1, 5-to-1, 6. You have a lot of room. So You don't have to be perfect with this, guys. And let me show you this on the live chart too, because you know what I'm saying. Who cares about it on the chart? All right, so boom, we have gold right here. If you guys watched our last course video, it's on the YouTube page. You see we were breaking down gold, teaching how to use trend lines and stuff. So now I'm gonna take my fib tool, click it, boom. Come draw a fib from the top to the bottom of that bullish move, boom to boom. Then I'm going to take my golden box, draw the golden zone. The golden zone. All right, boom. So now we got our golden zone. All right, and as you guys can see, what did price come and do? It came up, went back down into our golden zone, and it came out of it. It came back in. So let's show the trade we will take. Boom. Right here, price is popping out of the golden zone. Go for a nice. I gotta kind of zoom in, guys. All right, so price came out of the golden zone on this candle right here, and then go for a nice 3-to-1. As you can see, we could have made more money on this trade. Really could have made a lot more. So price goes, pops out the golden zone, and then we put our stop outside the body of that candle. Then we let the price rise up, and it's probably going to keep running, guys. It's probably going to keep going. You can catch more than 3-to-1. You might be able to catch 5-to-1, 6-to-1, 10-to-1, 12. The major trades are high probability trade setups you guys are learning right now. But we can take our 3-to-1. We take our 3-to-1, gain 50% on our account. We're happy. When you have a big account, you're going to learn how to be happy with those type of gains. This is a live chart right here, guys. So this is all live. You've seen it live. Golden zone. Our charts normally don't look like this. We don't trade it like this, but it is what it is. So this is the golden. That's high probability setup number 1. Now we got more setups for you guys to learn too. I want you guys to learn all the setups. So make sure that you tap in on Telegram with us and on Discord. We really give away all the setups on our Discord. And if you watch the trade live, you'll be able to see those setups live and actually get caught. So, for sure. So you're gonna learn. Now, as you guys keep watching the trade, you get an idea of how we trade. So we're happy that we can do this course for everyone. Is there anything more in here? All right. So.
Yeah, when it comes to the setup, the golden zone rejection, you want to be able to practice the setup and back test it 20 times before doing it live. And you'll get really good at it. You'll be able to like spot it like a mile away. And then sometimes the golden zone will fail and it'll be okay, because as long as it works 50% of the time, you'll be profitable using that the Wall Street trading strategy that we just showed you. So don't worry about being perfect. As long as you're 60% sure, take the trade. And you can become a Wall Street trader with this one setup that we gave you as the first setup, because it is one of the easier setups to accomplish. It can be caught any time as long as there's a golden zone and there's a rejection.
Yeah, guys, easy. That's why we started off with number 1, and we wanted to make sure you guys got this, master this. You can grow an account fully with this. Like you see right now, like that same trade is breaking out from that golden zone rejection. This is live markets. So what's next? If you want to watch us trade live and take the same trades as us and learn from us, join the free Telegram. The link's there. It'll be below. Or you can message us on Telegram at ChatGPT Millionaire, or you can follow TikTok at ChatGPT Millionaire. You can subscribe to this page. We'll go live on the YouTube too. But make sure you're in the Telegram, because that's where you get the signal alerts that we're about to go live and stuff like that. And you guys can watch and take these high probability setups live. You can learn more high probability setups, because right now we'll give you one that's gonna make you. It can make you hundreds of thousands, millions of dollars. Like the millionaires only take the setup. So we actually made it. We cleared a lot of money. I think the first 500 was using the setup. First 500K was on the setup, just number 1. And there's lots of setups. So that's a really good setup, guys. What else?
And then if you want to learn our high probability setups and get more of our trades and courses, join us on our Discord, and you can join the Discord from our Patreon. The link is there, but it'll also probably be in the description below.
Yeah, and all the courses they're giving away as part of the Discord. So once you join it, you'll be able to have those. And if you want to take trading to the next level, watch this vid over here. It's going to be over here. Watch this vid over here. I'll show you the next video in our series. So I'm happy that we were able to teach you guys how to be profitable traders. It was very advanced. Like it's worth thousands of dollars.
Yeah.
And shout out to our boy Chris.
Yeah, shout out to Chris, man. This is for you.
Or everyone thank Chris in the comments.
Yeah.
And, make sure you guys subscribe and check out our next videos because we're going to keep you guys profitable and cutting edge of trading. And let's see how that goes going. Oh, yeah, it's still breaking out. Alright, yeah, so guys, we're going to start trading. So, yeah, boom, right there, next video. Click that video.
Check it out.
Peace.
Peace.
Go to 5 years of trading simplified, equity curve growth. Put that investment. As I told you guys how to do this again, like this is the first big turning point. Because once I realized this, I was able to take 50 bucks and make 30K in one night, and like, you know, go get a penthouse and all this type of stuff. I was just kind of burning through money once I was first learning this type of stuff, but I was able to go live lavishly. Like my whole lifestyle was able to change because when I was drop shipping and doing business like that, like you may make, you know, 30% profit margins, 70% profit margins, whatever profit margin you make. It's cool, but when you're trading and you're making all profit, it's just all profit. So my whole lifestyle was able to change. I didn't have to hire no one or none of that. I didn't have to ship out no products. I didn't have to do any of that type of stuff. So I was able to just, you know, spend that money. I was just spending money left and right. And it was so much money I wasn't used to spending this type of money. So I've got all my crazy spending out the way. Now I just kind of invest in properties. But, and, you know, charity and do give back and that's why I'm giving back now, teaching and stuff. Let's see what number, the next thing. So that's the biggest one, risk management. It's like changed my whole trading. My next was, psychology. I'll put psychology. I think that goes with risk management. That was major, but my next turning point for me was, so I hit those big trades, had big nights, and then what was the next giant one? I want to say crypto. Crypto being 24/7. So yeah, crypto was the next big one because stock market is closing at like what, 4 or 5 p.m. Monday through Friday, and then Forex is 5 days a week, 24/7, which was cool. But then crypto was just 24/7 nonstop. So once I started learning how to trade crypto and doing that made me able to trade anytime I want. I can trade from any place. Like I would trade from parties and stuff like that. It's crazy on my phone, but you trade from any place once you learn how to trade crypto. So definitely understanding how to trade crypto is cool. Investing in crypto long term and stuff is like, I rather invest in real estate long term. But if I do see a trade like for a year, if I'm looking at the year chart or something like that, and I see there's a bullish year, like I'll buy in at the bottom of the year and exit. But I always think in terms of trading, like where's my entry and where's my exit, where's my stop loss. Like most investors just buying it, they don't know where their stop loss is, they don't know where their take profit is, and they're just, oh, I'm buying Bitcoin to the moon, I'm gonna hold it for 30 years, and that's a cool style, and that's not a style that I personally understand. Like, but there's people who make money with it, like Warren Buffett, and there's all these people who do that type of stuff. But I'd rather hold like a piece of property for like 30 years than virtual currency and stuff, and stocks and companies, you know. But it's to each your own. There's people who make money doing it, so I'm not saying don't do it and all that type of stuff. Like if you would have bought gold 20 years ago and just rode the curve, you would have bought Apple 20 years ago and held it, you'd be, you know, super rich today. But I like to have my entries and exits, so I like to, if I'm gonna hold it 20 years, I just want to make sure I know where my exit is. Like I do want to have an exit plan when I go in. I want to have a stop loss and a take profit. So That's my advice on crypto investing long term. Let's see what the next big point for me was in this journey. It was a crazy journey. Market cycles. Yeah, this right here, and it's like no one taught this to me. Like I watched all this YouTube, 1,000 hours, paid for courses, did all this type of stuff. No one was teaching this until like my one mentor who got me to where I'm at today. He's the one who explained what market cycles is, and pretty much what market cycles is. Make sure I'm nice. Pretty much what market cycles is the market always moves in a cycle, 24/7, never ending cycle, and it just does one thing after the other, and it transitions through cycles in a certain way, and it's always cycle, never ending. So like once you understand that, like you understand. Once I understood market cycles, I understood I had to get out at a certain point, I had to take my profit at a certain point. I understand what part of the cycle is in. That's why when you guys see me trade live, like you see, I just open up any chart. I get to understand where it is at in the cycle, what it's doing, what's forming, and then just take my trades based on that. Like all day, every day, any chart, I just can do it over and over and over and over because the cycle is very, very simple. The cycle is only broken down into like it goes through 4 different cycles. So the market's always cycling through 4 different cycles, and it goes over and over. And then in those cycles, it does different patterns and stuff in the cycles. So over here, I go down into detail on all the cycles, and I break them down, show examples. So I definitely recommend doing that if you guys want to step up your market cycle game. But that right there took me to another level of my trading. Was the market cycles. Number 4. Drink some water before I go into tip 4. All right. Number 4, I had to understand too many indicators was bad. So once I understood like too many indicators can overcrowd you and was making your trading accuracy go down, and this is like super advanced. I didn't like this stuff that I've learned from people on Wall Street and stuff like that. But basically I was using all these indicators, and I had like 20 indicators, 30 indicators. I had like a giant list of indicators and all this type of stuff. RSIs, MACDs, watching all these indicator videos on YouTube where like this is the best indicator. This is the best. Every video is the best indicator, and like they're all 90% accurate, 95%. I went through the whole rabbit hole of indicators for like a year straight, maybe more, of just people trying to show me indicator after indicator after indicator, and the people who were doing it, like I always noticed, they wasn't really. I never seen them really slap trades live. They was go on indicators, like go backwards. That's why I like to hit trades live for you guys, so you guys can see it live play out and stuff, because that alone helped me sort through all the people who were not actual traders. So they're showing you all these indicators and stuff. RSI, use the RSI with the MACD combo, use this with that. And I'm not saying that these indicators are bad, but I would say this: the RSI, MACD, all these indicators are lagging indicators. Lagging meaning that they don't give you an indication until after something already happens. There's some indicators that are not lagging, but like for example, the one I just showed you guys earlier in the video, or I'll just clip it because I don't want to lose this part. But where I use the EMA indicator, the moving average. A moving average is not lagging. That's just an average price. So it's an average price. So it's nothing that's lagging about it. It's very simple, and it's just one indicator. The most indicators I use is 3 at all times. I don't use any more than 3 indicators, and it's really just one indicator, and the other ones are just like when you see in the indicator course, the other ones are just important for understanding where you're at in the chart, where you're at in the cycle. So it's just indicators that let me know stuff like that. But too many indicators, I would just lose all the indicators. Start at a blink chart, trade from a blink chart, and so that leads into my next point. Where was my next turning point? I'll have you keep your EMA on so you can know the trend and stuff. But on my live, you're never gonna see me like pull up a RSI and then chart a trade or anything like that. Like, you're never ever gonna see that because it doesn't work. For me, there's probably some RSI master out there, but I don't know. And the bots don't care about RSIs and MACDs. The bots move the market. Firstly, people don't move the markets with RSIs and stuff. There's not someone sitting at a computer with 10 billion, 100 billion, or 10 trillion like BlackRock or something. They're not sitting at a computer with an RSI, and every time the RSI cross, they're dumping in billions of dollars. That's not how it works. So they don't really care about that type of stuff. And then that leads into the next point. What do they care about is price action. Boom. That was the next big turning point for me, was understanding price action. Everything I teach is based around concepts of price action and stuff. I didn't flat out call this the price action course, but chart pattern mastery, market cycle mastery is all price action. I teach some price action in here. Tensor setups is price action. All the way I use all my charts are all price action based. So I teach price action. I just don't call it straight out a price action course. Maybe I should. But price action was like, this cut my trading curve. I may have still been in beginner stages if I didn't learn price action, because basically, like, when you're trading, before trading price action, what was I trading? Like someone was like institutional trading, or what was the names of it? Just indicator trading. There's all this types of trading. There's the ICT dudes. There's the IML guys. There's all these people who teaching all this type of stuff that just wasn't working for me personally. It just wasn't working for me. People have success with it, and that's great. But I found out the only thing that really matters is price action. Let me try to give you an example. Right here, this is a perfect example of price action. This is live trading. I can catch this trade. I should jump into this trade right now. That's why I don't do too much teaching vids, because I like to trade. And I don't want to be in a trade tracking it while I'm teaching. But here's an example of price action. Probably gonna watch this play out live. Right here, they hate this price. I see the price going down, 46664 going down. It hit 46600 or near there, and they hated that price. And I've seen the price action close up. So as soon as I see that, okay, they hate that price. Got my 50%. I hit my 3 to 1s. And that's price action live right there. Like, this is probably gonna go farther than that, which is crazy too. But okay, even take this up to the top. But like I said, you can get 3 to 1s and be profitable and grow your account. Sometimes I go for the 5s and go more, but this is price action in a nutshell. That's why I have the average price. This red line is the average price. Right now, it went below the average price. It tried to go lower, and it came back here. I don't know why it came back here. Maybe it can't hold the price on there, so it's trying to find a price up here now above the average price. So now it went from fair to now they're trying to find a price where they're too greedy, and then they're gonna go back to fair. And that's it. It's very important to understand. Is now I want to just watch the trade hit. Like, that's how it is. But we'll come back. We'll just scroll back over. So that's price action right there, guys. Yeah, I can move that over. Let's go into the next topic. Let's see. Was another major turning point for me. Scalping. I kind of went over that earlier. Scalping. When I say scalping, it's just 5-minute chart. Learning how to use that was like everything for me, because now I didn't have to sit in trades for a whole day, take a little bit of trades. Like when you're growing a small account, it's always better to take 20 trades than to take one trade. Then it's gonna just forever be better to think in terms of longer trades. So in order to take those 20 trades, I had to learn how to scalp effectively and properly. So scalping is amazing, and scalping definitely helped me on my journey. After scalping was swing trades, and that's probably the journey you guys are gonna have to go on. Swing trade on the 4 hour, so now I can go to sleep in a trade because I would just be trading. I didn't want to go to sleep. My sleep schedule was all messed up because I really love trading. I'm like really passionate about it. I love it, and my sleep schedule was messed up. I had to learn how to be sleeping in a trade. That's why the trade you guys saw we hit last night, those two trades that we hit, or I think we hit a couple. No, those two specifically that we hit on the live, those were swing trades. They hit by the next morning. I went to sleep, cut off live, woke up, made the post, showed you guys that we hit our take profits and we're in profit. Like went to sleep, woke up peacefully, no problem, slept like a baby, and just woke up in profit. That's that. Let me see what else I can teach. What was another? It's probably the final big turning point for me. I had to make a final major turning point. It really took me to that $1 million trading level. I covered equity curve. Oh, I don't know if I should. I don't think how to pay yourself is important. You gotta know how to take your money out the market too. But that's like, I don't know if you guys wanna. I'm trying to think what was a major turning point when I crossed. Risk management. I said that. Risk management goes into how to protect your capital, guys. I guess that's my final. To stay above an M and to grow to 2 M's and then 3 M's, you gotta learn how to protect your capital. How to protect capital, and I'm just gonna put that into 9. Is when to stop trading, and you gotta know what to do when you lose. So boom. So you gotta know how to protect your capital. What I mean by that, that's so crazy. This trade hit to the T. But what I mean by that is how to protect your capital is more now you're up, you have this big account, you're growing it, it's just so giant. Now you're like, you know what? I want to grow faster and faster. Like I have more money now, I can risk more. You start saying stuff like that, and now you increase your risk without remembering your equity curve and your risk management that we learned, and your account goes back down to zero, or it goes down drastically. You lose 30% of your account, 40% of your account. You just lose your account because you have more money. You didn't recalculate your risk management. You're not understanding all of that. The math changed up on you, but you didn't prepare to do the new math, and now you're back down where you started. And that happens to a lot of traders. I call it boom and bust. Go up, go down, go up, go down, go up. Too much risk, go down. They throw it. Like once you start making a lot of money, that's another thing about trading. You start making a lot of money. Money triggers your emotional brain. You just start feeling all these emotions, get hype. You just hype like all the time. You're hype. That's why I'm like kind of effortless about having money now. It's like I'm just calm. Like I don't care. I've done a lot of stuff with the money. It's cool, but I know to be a good trader. And when I'm in trading mode, I'm in front of these charts. I can't be super motivated. I can't be like throwing money in the air every time I hit a trade. And, when I used to trade, I used to do that. But once you cross your mill and you start having money, you can't get super emotional every time you hit a trade. You gotta treat every trade the same, win or lose, and you just following your equity curve over time. So it's super important. Like this trade broke out, guys. Like that's why I'm having trouble talking. Like I'm watching this trade shoot out, and it's just printing money. But this is price action. This is exactly what we were just talking about, and and that's on XRP live. So it's cool to see that type of stuff. How to protect your capital, when to stop trading. You gotta know when to stop. So, and what I mean by that is like, if the times you should stop trading is when you're feeling what is it called, emotional. Anytime you feel emotional, stop trading and just go take care of your emotions, calm down, chill out, and get back in your logical. Take your money out of the market. Don't if you put this amount of money in the trade and it's just too much, where before you even put the trade on, you're just emotional, put less money in. Always trade with a non-emotional amount. Trade it non-emotionally. So now your logical brain is, because you have two sections of your brain, two hemispheres, whatever. One is emotional, one is logical. Make sure you're back in your logical brain. And anytime you get too emotional, you get lost, you feel emotion or something. Some people can get their loss, stay level-headed, and get their next trade. That's how you're going to be when you get to the top levels. But if you're not able to do that, if you take a loss and just take a pause on trading, just stop trading for a second, and just relax, just relax, really, because you don't want to blow your whole account being emotional. Because when you're emotional, it's harder to do math in a moment. And the math you have to do, you're competing against all these bots. You're doing math against bots. Like bots, a robot does math like that. Like imagine you're doing math against a calculator. The calculator is calculating. So you want to be in calculator mode. You want to be a calculator. You want to sit there and calculate stuff like, all right, I'm doing that for this, to hit this, for this, to hit my 100K account is going to come out there. Okay, I have $100. It's going to take 500 trades or whatever it take. 30 trades, 100 trades. You know, as I told you guys earlier, you know exactly how much trades it's going to take to hit your goals. Everything is calculative, and so that's when to stop trading, is when you feel emotional and when you lose. So now, when you lose, what you should do is you should have already put in risk 1% of your account to 3% or whatever risk you chose that fits the equity curve that grows up your account. You choose that, and if you take a loss, you're just looking for your next trade. It's no big deal. Like, it doesn't matter. Losses don't matter. Wins don't matter. All that matters is following your strategy and growing your equity curve over time. And that's because you're trading to make money. You're not trading to win a trade. You're not trading to lose a trade. You're trading to make money. That's the only thing I'm at trading. Am I following my equity curve that makes me money? Yeah, I took my trade with my risk to reward. Everything was set properly. It's 3-1, and I want to make money. Like, I'm here. I did everything correct. I'm trading to make money, and that's it. You hit your money goals. So yeah, when you lose, just look for your next trade logically. Don't try to make back what you lost on that last trade. This trade is naturally going to happen because you're trading for 3-1, so you're going to make back what you lose plus profit on your next trade. But don't go looking for revenge. Like, I got to jump right back in the market right this second. Even I don't see a setup, but I hope this goes. Once you start trading off of hope, don't take the trade, because hope is an emotion. So you're trading with your logical brain. You're trading with your emotional brain when you're trading with hope, because it's emotion. You want to trade with logic. You want to use the chart patterns that I teach you. You want to use all the stuff that I teach you. I teach you all logical things. You want to use the logical things that you guys learn to trade with, and trade with logic. That's it. Like, those 10 tips right here, that's 5 years of trading simplified. So that can cut down your journey. It takes traders 5 years to do it. You can cut your journey down to easily, like, really a month, bro. It really shouldn't take longer than a month, like, because I'm really giving most traders who do the 5 years, they don't want to give away the secrets because it took them so long to learn, and they don't want to teach. They just don't want to teach the secret. That's why it takes other traders so long. But I'm just giving away this. I'm giving away enough to cut you guys' journey down. So in the future, who knows what's gonna happen if enough people learn this? But hopefully, I don't get slack from some of the other top traders about this, but it really doesn't matter to me. I like to be a part of the community, but it's more important that knowledge is shared instead of kept. Because keeping knowledge is like, I can die with all this knowledge. It's cool, but I really want my family in the future to be learning this. Like I want, my grandkids and all of them to watch these videos, learn how to trade, start killing the markets. So I'm making all of this content and preparing it really for my future family and everyone like that. And you guys are a family too, because you guys are learning stuff that I'm sharing with my family. So it's cool. Let's see what the next question is, and you guys can still drop questions in the chat if you guys have more questions you want to answer. But I'm gonna move to the next question that I was asked. How to get a funded account. I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok and the links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make $60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leverage and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you get funded for the 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts 10% a week. If we do a 10% week on 2.5 mil, you're gaining 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains. And you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Gotta drink water. See what else we got. This is the leverage trading. 1000x leverage they give. So you get 1000x leverage and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I've typed the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But 1 pip equals 10 ticks. And a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to... a tick is each time the chart moves 1 click up and down. So you want to look at the chart, see how it's moving, and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is. In a casino, let's see. House always wins. What else about a casino? House always wins. House. Some players hit big. Casino makes profit every year. So what you need to know about a casino. Let's see, casino profits. So they made 60 billion in profits. Nevada reported a gross gaming revenue of 14.84 billion US dollars in 2022. In the same year, the total gross gaming revenue of US casinos, all of them, $60 billion. So they had 60 billion in revenue coming in. Record breaking, record shattering, and 60 billion. Like, so the house always wins in casinos. Now, let's talk about trading. So, house always wins in trading. Some traders win big with edge or luck. Some traders get lucky. And then number 3, brokers or trading brokers profit every year. Boom. Now there's a 4th thing. Broker has an overall traders combined. So the house always wins in both. Some traders win big, hit jackpots. Some traders win with luck. Some traders have an edge. They can count cards. They know how to count cards. Some traders can read candlesticks a certain way. They have different edges and stuff. And trading and brokers, they profit every year. Casinos profit every year. And a broker has an edge over all the traders combined. So how do you trade like a casino? How do you become a casino? It's the next step. So throw that up there. Casino. Now let's go into you. See how you become a casino? You always win. That doesn't mean that you're 100% trader. It does not mean that. But it means over time your equity curve goes up. I'm going to go give you examples. That means you always win. Sometimes broker gets lucky on you. You profit every year. Boom. So now this mindset shift right here. Now you're thinking like a casino. You become the casino in a trading environment, or I wouldn't recommend a casino. I don't like. There's traders who have edges and stuff, and if you're really good with math, you can take on in these casinos. But the edges are pretty set in stone for them to win. But there's just some people who do it with sports betting I know about, and I actually enjoy learning the math behind that type of stuff. But math runs the world. Yeah, math definitely runs the world. But here's how you do it. You always win. You make sure you always win. What that means is no matter if the broker beats you one trade, you lose one trade here, you lose one trade here, and one trade here. Overall, in the year after year, every year you profit. You always win. So you're the house. Yeah, the house always wins. You become the house. You make sure you have an edge over your broker. Just how you become the house. You have an edge. And the brokers have an edge where out of 1,000,000 people trading, or out of 1,000 trades, they're gonna make profits of 5% or something, whatever the percentage is. They got it calculated down to a T. So how do you have an edge? Let's go. I'm gonna teach you guys how to build an edge right now in this video for free. It's free sauce. So when you guys build the edges, you take your money. Let's say you got $3,000. You got whatever you got. You got $3,000, right? You take your 3,000. You got $100. You can have $1. You can take $1. It does not matter. But you take your money, and now you're thinking like you got to think like a casino. You're like, all right. So the market either goes up or it goes down. So it's 50% odds. Like I only have two choices. I can buy it or sell it. So I have two choices. So it's a 50% chance for me. So now you're like, boom. You didn't do no research. You don't know nothing about no trading. You only know math and you know probabilities. This high thinking of probabilities right here. I have a 50% chance. So I have a 50% chance, and I can take trades where I risk $1 and I can make $2. I can take trades where I risk $1 and make $3. I risk $1 and make $10. So you choose a risk to reward ratio where that suits you as a casino. So let's say we was like, all right, I want to choose trades where I risk $1 and I make like $3, $4. Does the you know what I'm saying? You got to make sure you choose one that's profitable. We're gonna run a simulation right now so you can see if this gives you a casino edge. These are all the trades that I give away in the free signals group. It's trades that fit this, and they're house trades. So if you're trading, taking all those signals, following the premium trades and stuff, you're now trading like a casino. You're beating the edge, and now you have an edge. And every year you're gonna go home profitable. So, I'm throw a disclaimer, whatever you want in there too, because this is informational breakdown. But I trade using the edge only. Alright, I just got to so you got your 54 trades. Let's say we're trading for the year, so we got 365 trades. Every day we take one trade. And let's say we only have $100, just for math simplicity. $100, 365 trades, one trade a day. And every day I only I keep my risk in a way, because I don't know which is going to hit. If I run this simulation for my equity curve, at the end of the year, my $100 is $30,000. Run it again, $14,000. 14,025. So now I take the first two numbers and find somewhere in the middle. So estimating to make 20K that year as a house for my $100, just taking one trade a day, going for my 4-to-1 risk. Sometimes they're gonna win, sometimes the broker's gonna beat me, sometimes I'm gonna beat the broker. But overall, if I keep taking these trades with 50% accuracy, like flipping a coin, it's gonna go up or down. If I say it go up and it goes down, I lost. If I say it go up and it goes up, I win. It's 50%, 50-50 chances you have on your trades. And then you could find setups that are more than 50%. I teach you 60% setups, 70% setups, 80% setups. I teach you different setups. Over here, like on the site link below, I teach you guys how to increase your percentages so you can improve your trading now. Like jump up to 90% trader, join the club, enjoy it. Or just take the signal trades. You can go here, just catch the free signal trades, catch the paid trades. I'm gonna be calling out more trades in a second, but I just want to teach you guys some stuff. But so now, yeah, now you're trading like no matter what, you go up. Let's say you weren't trading like this. You're like, all right, I'm gonna go for it was, and I'm gonna put in. Now you're trading like this. It's big mess. Say you're trading like this. Up, down, up, down. I blew my account. There's some traders. This is how really what happens to most traders. I just blew my account. I put my money in. I blew my account because they're trading like this. I went up and I went back down. I went up to 2,000, went back down to 0, and it came back. They're blowing their accounts, blowing. Sometimes they get lucky. Look, got lucky. This person's got lucky, blew up. Now you're shooting a video. Look, I'm lucky. But this is not the people who trade like a casino. My phone's going off right now. This is my best price action strategy. You can use this right here, and this is how actually one of the top Japanese traders, BNF, became a millionaire from his bedroom trading every day. And a lot of traders see a lot of success with the strategy. Some traders fail with the strategy if they don't understand the math and all the other stuff I teach you guys. They don't understand that stuff. Some of them fail. But if you guys are doing everything correct, you're gonna enjoy using the strategy. So let's get into it. So my favorite price action strategy is, can't believe I'm giving this away for free, guys. I really can't. You see this line right here? That line right there is the EMA. That's the average price line. So we've seen the average price. The average price meaning that if a price goes up too high, far away from average, eventually it's gonna have to hit an average price. Like, you know what I'm saying? It gotta find the average price. Like, prices is looking for support, it's looking for resistance, it's looking for a good fair price. So the fair price line would be the average price. So now knowing price action, let's say you got nothing on your screen. So you guys see the average price. Now I know the average price is there. I would take a trade. I wouldn't jump in right just right now. I would plan it, wait for a better setup. But I would take a trade back to the average price. I'm gonna show you guys examples of this because it might not be clear. So this is a Bitcoin. This is what we did this week live, guys. We did this live on TikTok. I'm gonna repost the live videos for everyone to watch and stuff. But these are the trades we took live together. So, that's why. So right here, we had the price of Bitcoin right here. Right here, I saw the price come down just below average right here. Put a red circle so you can really see it. Right there, I was like, oh, the price is below average. It's below average. I called the buy. We took it up. We hit that trade. It had room to go, but it was sleeping. I woke up, saw the price all the way up here above average. I'm like, oh, snap. The price is way above average. And sometimes it can go up above average for a while, but it was above average, and I knew in a higher time frame that we was about to come back down to average. So I called this trade for you guys to come down. Called this sell. We called this sell perfectly. Like, it had more room to go, but we could call it perfectly. Like, we couldn't ask for a better trade. Called that sell. You guys so hit one trade, two trades. Then I came back. I was like, oh, the price is below average. It's acting weird below average. Like, it might have room to come up. It just might. So I called the buy. We took the buy. We hit the trade right here for Friday. This is our trading week. We slapped it. And for my premium, we're still in a buy. Actually, we're still going up a little bit. But that was a trade. We slapped our trades, and that's using this line right here. So this is using the price line, the average price. We trading off price action. Price was way too high, above the average price. It's going back down. So it's all based on price action. Yeah, so that's like my top price action strategy to use right there. If you use that alone, you set up your EMA and use an EMA indicator like I teach and everything, then you're gonna have a fun time. Like I can show you this guy right here, PNF. Let's do BNF trader.
Hey traders, Mike Sir here. I've been an active trader. So he's looking to buy all these beaten down stocks that have dropped.
I don't know about this dude. Actually, I didn't watch this video, but yeah, a lot of pro traders understand this concept right here. It's a very important concept, and I hope that helps someone. But I'm gonna get into my next tip right here. If you guys want to learn more about price action, go to the link, and you guys can check out my trades, my free trades, my paid trades, see all my trades. You guys can go to right here, chart pattern mastery, market cycle mastery. Actually, all these guides right here help. Sessions, 5-minute chart. So everything I teach is based off price action and a couple other stuff I learned too. But like how to beat bots and math. So I teach using stuff like that. So you guys can check that out because it definitely gets tough in the markets. 5-minute scalping, highest win rate. So if you want to know about how to scalp the 5-minute chart with the highest win rate, this is the 5-minute chart right here. Again, it's the strategy we use. So we have our average price, quarterback up to the average, quarterback down. Now the key, the detail that I teach and go over in the course is what I look for when I'm trading it back, because you see right here, it didn't go straight back to the average price, and I knew that. I didn't make the call for you guys until it was ready to actually go back, because a lot of traders mess up. They made the call too early and then blow their accounts, and that's where a lot of traders have trouble with this. But once you guys learn the small details, which I teach right here, chart pattern mastery, you're gonna be a killer on the charts. You're really gonna kill those charts. Let's see what else, other questions you guys have. I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok and links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make $60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leverage and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both, in 1 to 3 days you get funded for 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account, and you can grow it. We grow accounts 10% a week. If we do a 10% a week on 2.5 mil, you're gaining 250K on an account. If we do if you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains, and you guys see the trades we did on the free signals, they're bigger than that, but those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Got to drink water. See what else we got. This is the leverage trading. 1000x leverage they give. So you get 1000x leverage and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, you can put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I have typed the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But 1 pip equals 10 ticks, and a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to a tick is each time the chart moves 1 click up and down. So you want to look at the chart and see how it's moving and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is. Fibonacci stuff. You asked how to trade with the Fibonacci. I'll do it right here with this trade right here. So put a Fibonacci on here like that. This past the fib, so it's probably going to continue going down. Put a fib right here. It's not a big enough move for the fib. Let me find out. This move right here is big enough for the fib. So that's why I really don't. Alright, this move, I'm going to use this move up here. Fibs, firstly, you got to have a big move, so you got to make sure the move is giant. So this right here is a good move. The price was up here. It fell down to here. You did that wrong. So the price is up here, it fell down here. I'm doing this move right here. It fell down, and then right here, at the 0.618 level in the Fibonacci, it rejected that price. It's like nope, that price it went up from there. So now if I was just the Fibonacci, and I don't really care for the Fibonacci to trade, but it does work when you do it the right way. If you find a big move, go put my stop loss right there, and you catch it through the one trade. So boom, this would be a Fibonacci trade, easily caught, and it's 3-1. This trade went as much to 10-1, so you could have caught a way bigger move on this, but then now you got to sit through coming down, up, and everything. You can catch a 5-1 simply on this trade quickly. So, yeah. But using risk management, you guys want to make sure you go for the best return on your investment that's hittable. So yeah, Fibonacci tool, set the trade. You set your stop loss. Yeah, like a lot of people use the Fibonacci, but then you got people who like only trade with the Fibonacci, and then it's like they don't understand price action, they don't understand market cycles, so they're not able to like tell when the price is rejecting a price or anything. Fibonacci is a tool you use in confluence with the other stuff you know. So you want to have all your confluences. Like as you guys go through all the trainings, you're gonna get multiple confluences, and once those confluences add up, you got 7 different confluences. Check, 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 check. It's like you find a plane, you got a checklist. You're like, all right, that check, 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 check. The more check off you get on the box, the better your flight is gonna go as planned. So then it gets to the point where you don't really need your checklist. You're just looking, all right, check, check, check. That move checks off. You can do it. Let me see. I don't think there's a Fibonacci trade live right now because the market's in a range. It's in a little trading range right now. I think Asian session, yeah, it's about to take off now. So it looks like Asia we're about to decide which way they're going. I covered the Asian session earlier in the video, but I would say use the Fibonacci. The settings you want to have for your Fibonacci. I'm going to give you guys my settings right now. So you only want to have these levels. Your 0.5 level, your 0.618 level, and your 0.75 level. Any other levels past that is just noise really, and they're not important. So you want to have those levels set, and then when you see a rejection on those levels, if it came past this level down to here and it rejected, I really wouldn't take that trade. But this is the golden spot, and this is the golden spot. These two first ones, if they reject anywhere in them, you can take your trade. You can ride it up safely. Most traders, they put their stop loss down here and they'll go up. They try to catch a 3-1 like that, and I believe that's. Make sure I'm doing it correct with the stop. The stop loss would be at the 7.5 level, and then a 3-1 would be right there, and that's literally like right here perfectly. It like perfectly lines up. It's so crazy because the bots, they trade like this. They understand this, and this is how they trade. So like you're gonna see most of the time it's gonna hit the price right on the dot and turn around when you trade it using the proper stuff like this, the proper math. Let's see what else I can go into. Open my settings on it. This is my Fibonacci settings, guys. So if you guys can see that, you can take a screenshot, copy these. I'm gonna have a replay available, but those are my Fibonacci settings that I use. What is the best Forex trading strategy? I love that question. I really do. All right, let's get into it. The best strategy to trade. I'm gonna open up a new chart. Overcrowded this chart. I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok and the links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make $60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leverage and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you get funded for the 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts 10% a week. If we do a 10% a week on 2.5 mil, you're gaining 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains. And you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Got to drink water. See what else we got. This is the leverage trading. 1,000x leverage they give. So you get 1,000x leverage and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I have typed the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But 1 pip equals 10 ticks. And a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to... a tick is each time the chart moves 1 click up and down. So you want to look at the chart, see how it's moving, and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is. 3 secrets I learned trading. Let's get into it. The first secret I learned is indicators. Is the RSI indicator and the MACD indicator. They're lagging indicators. Because when I first started, everyone was like, yo, go put an RSI on your chart. Go look at this RSI. Like, the RSI says this, the MACD says this, it says that. And what I learned, by the time it would give me an indication of to take the trade, the entries that I would catch right now they're way farther away. Like, the worst entries is giving me the worst entry I could possibly get, and and it's just a load of baloney. Once I learned not to trust in the indicator so much, that's when I became a really profitable trader. Never before that. The only indicator I taught is 100% is right there, the EMA, the one I showed you, and then I give away the settings and stuff. I gave them away earlier already. I showed you guys all the settings for that. It's another major secret. Like, oh, trade like a casino. Casinos always win. I just broke down that. That's like major secrets. That's a major one. How to lose a trade. So this is a major secret right here. When I first started out, right. I would lose a trade, and I'll be so mad, like, oh, I just lost that trade. I just had my whole account in that trade, or I just had like so much money in that trade. I just lost so much money, and it would just kill me. It would throw me in an emotional roller coaster. And it's all because I wasn't trading the correct way. I was trading like an amateur. I was like over risking. First of all, risking way too much money, which you're not supposed to do. You're not supposed to risk all that money. You're not supposed to take these type of risks. So my risk is all off. I had no strategy, and when I lost, I'll get into this. My logical brain would switch off. I'm down money. I'm not able to just be down money and be logical. I'm on the get back, and once you revenge is an emotion. Get back. All these are emotions. Now, once you're emotional, your emotional brain kicks in. Like let's say, for example, like, I'll give you two scenarios. Let's say I'm taking a math test, or let's just say I'm typing numbers on a calculator. You're most likely going to be logical when you're doing that. You're just typing in numbers. All right, 1 + 1 is what? 2. 2 + 2 is what? 4. It's logical thinking. It sounds simple, but it's logical. Now, let's say you lose a trade and automatically go from your logical brain and you jump into your emotional brain. Now you're like, all right, I just lost 10K on that trade. Okay, I lost 10K. Oh man, like, I lost 10K. I gotta make that 10K back. I gotta make it back right now. I gotta hurry up and make it back. I'm gonna make it back right now in this next trade. Now that's not logical thinking no more. That's revenge. That's maybe greed. I don't know exactly which emotion, but it's an emotional trade. So now you're like, all right, you're trying to make back. You're trying to get back, and you're not using any logic. And once you stop using logic, the market beats you, because casinos, like, when someone hits a jackpot in the casino, the owner doesn't run out and start getting emotional, flipping tantrum. When someone hits a jackpot, the casino pays them. They pay the person and they collect money from the next people. Because when you're thinking like a casino, you trade it like a casino. You're okay with taking losses. So those two tie hand in hand. Those are like 3 secrets, and there's so much more secrets that I learned during trading that I give away. But those are 3 big ones. Someone talk about my $50 trade where I turned it to 3K on the TikTok page. All right, so with that right there, when I did that trade, guys, I was using this link is in the bio, so you guys can use it. I use this broker right here. 1000x leverage trading. So I had a 1000x leverage account with the $50. So what that means is, you have a 1000x leverage, you have $50. So that 50, when you put in the 50, they double the money. So they gave me $100. And with a 1000x leverage, you throw 3 more zeros behind 100. So it's like I had a 10K account with $50. So then now I understood the math, I understand my risk reward. I trade like a casino. I was like, okay, now I'm just gonna take. I think I took 50 trades that week. I got 50 trades in a week, and all with the proper risk reward, everything like that. Took my 50 trades. When it hits the profits set, the set take profits, I took my profits. It hit stop loss, I let it hit stop loss, everything. At the end of the week, my account was at 3,000, and that's what I show in the video. I think I show the trade setup step-by-step breakdown too. But you guys can see the history of the trades, everything. It's a brand new account, and that's it. Like that's pretty much how I flipped that account, just straight off math logic. It wasn't like I had some 100% accurate trade setup, and I really want you guys to understand that. Like it's not about like I'm, I do have 90% accuracy. Like I'm very accurate with trading. I'm very good. But when I did, it's not about having to be 100% to do this. And it's very important to understand because it keeps you out of being emotional. Like even thinking you're gonna be 100% is an emotion. It's like I'm gonna be the best. You're just looking for this optimism. It's a lot. I don't know what emotion it would be, but it's not logic. You know, it's like the person who like, oh, never say you're the smartest in the room because you don't learn anymore. So never say you're 100% because now you start over estimating your trades and your math numbers are all off. You put 100. If I put 100% in the simulator, it's gonna print out positive equity curves. But if I'm really trading like 50%, 60%, 70%, I'm never gonna be profitable because I'm overestimating myself. So you want to underestimate your trading abilities and build a formula for that. So even on your worst day, your account can go up. This is a huge point. But yeah, someone said to talk about the $50 to $30,000 a day. All right, that day was crazy. That day was really crazy. I had I actually bought like a penthouse from that day, like in the city, like very nice penthouse, all that type of stuff. But basically, let's say I was at $50. I had $50. I'm already living in the city, like I was already living really nice stuff, I'm chilling, and I found out about crypto. This is where I was getting to crypto. I found out about this crypto platform where every 5 minutes you could take a trade and doubles your money or 3x your money sometimes. So you're just taking trades and your money's going up. So now I'm like, okay, let me run a simulation. Let me show you guys the First, Seth, I saw you wanted to learn about risk management and leverage. So I'm gonna get a paint open. So leverage is the quickest way you guys can grow accounts. Like I highly recommend it if you're trading the right way. It's pretty much free money. If you're a beginner trader, it's a trap for beginner traders to put their money in and lose all their money. So I'm going to explain both sides to it. First, I'm going to start with beginner traders, and I'm going to show how advanced traders make money off of leverage and use it to hit their goals faster. So start for beginners. So for beginners, I guess I could just talk. So for beginners first, beginners when they see leverage, they see it as a chance to grow an account faster. They're like, oh, I can have 1,000x leverage, which the broker that we use gives you 1,000x leverage, so it's good. You can grow accounts super fast. I was able to, I've done 50x's in a week before, done that live and stuff like that. So you can grow your account super fast. You can have fast growth, and it's amazing. It's an amazing way to grow accounts. The bad thing about leverage is if you don't have proper risk management and stuff like that, then the leverage becomes a negative. It becomes something where like blow your account, like you're over risk, because if you're not sure of the math, and the math is complicated. The math is actually addition, subtraction, multiplication, but if you're not sure of the math, then you over leverage your account, and once you over leverage your account, you're putting way too much money in, and you're not have enough room to hit the stop loss. So that's going to go into the next topic I want to cover, which is risk management. But using leverage works like this. So I have $1. Let's say I have $100, right? I put it into my broker, and they give me a $100 bonus, so they'll give me $200, right? So the broker you guys that we use below, the link is on the page or wherever, they double the money you put in, so it's great for growing accounts. So you put your $100 in, they'll give you $200, and then with that $200, they give you 1,000x leverage. So now you can trade like a person who has $200,000 in their account from $100. So boom. Move that out the way for now. So leverage. They give you $100. The $100 turns to 200 with the bonus, and then they'll give you leverage on top of that, so you can trade. You can take the same amount of trade someone with $200,000 in an account can take. However, you don't have enough capital in your account to protect yourself. So here's where it becomes bad. I'm gonna use a charge probably. Let's say this is a trade right here. This is a trade we have to take right here. That box represents the trade. I'm sorry, you guys are not able to see that on Streamlabs. All right, everyone should be able to see it now. All right, so we're going over it. So we have leverage, right? And then you put $100 in your account. They give you 100% bonus, so they double your account. I have $200 in your account, and with the amount of leverage, they let you trade like an account with 200,000. So basically, what that means is you can put trades in where you can risk $100 per pip. So they'll let you trade $100 per pip, but if you pretty much have $200 account. So if you go 2 pips, then you blow your account. What is a pip? So let's go over what is a pip. What is a pip? 1 pip equals 10 ticks. So this is the format. This is the formula for a pip. If you guys are not sure what pips are, is 1 pip equals 10 ticks. So I'm zooming on the price wheel right here. You guys can see the price wheel. Right now, this price at 33.27. Price at 33.27. If this price moves 10 ticks, it's going to be at it's going to move up $1. So 33.27 all the way to 33.28 is 1 pip. So it's a dollar move on here, but on different pairs it'll be different. So if I go to, say we go to gold. So gold, the price says 19.25. Every time it moves one click, so like 10 cents, 1 cent. Every time it moves every time it moves 10 cents, it'll equal 1 pip. 1 tick, and every time it moves $1, it moves 1 whole pip. So that's how you convert your pips to ticks simply. And you're gonna have to remember that formula. And I break it down in full, like in detail, and like I teach a whole full lesson on it. But the math and trading is very important. If you need more information on what is a pip and what is a tick, which let me find out which course I break it down on. I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok and links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make 60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leverage and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you get funded for 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts 10% a week. If we do a 10% a week on 2.5 mil, you're gaining 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains, and you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Gotta drink water. See what else we got. This is the leverage trading. 1000x leverage they give. So you get 1000x leverage and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, you can put your money in and deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I have I've typed with the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. It'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But one pip equals 10 ticks, and a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to a tick is each time the chart moves one click up and down. So you want to look at the chart, see how it's moving, and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you know what a tick is. I'm gonna teach you guys 3 tips that you should know for trading psychology. So the first tip would be 2 brains, emotional and logical. Second would be colors, and these you can implement right now. You can implement all these tips right now, and they're gonna make you a way better trader. And the third tip is so if you do these 3 alone right here, my bad, you gotta do this or something. Minimize that, take that away. And Streamlabs, you guys can see it. Alright, so these are 3 tips that are gonna boost your psychology like right away and get you guys where you need to be. Thanks for the tip. Thanks for the tip. So the first tip is gonna be your 2 brains. You got your emotional brain and you got a logical brain. Now that's very important because trading is all meant to make you jump into your emotional brain. Like if I open up a chart, another chart. If I open up a chart and then let's say it's a brand new chart somewhere, and that's how most of you guys' charts look right now. This is the average person's chart looking like this. It's big red candles, giant green candles, and it's like giant spikes going up, giant spikes going down, and then when it drops down, it's dropping down really quick. It does things that make you react emotional because the markets move off of the overall human's emotions. That's why most traders, Warren Buffett even, he buys when people are fearful. And so I'll show you guys what that means. When you see a big red candle right here, that's fear right there. That's fear coming into the market. So he buys into fear. He sees people are fearful. Big red candles are fear. Warren Buffett's coming in and buying. And then he sells when people get too greedy. Oh, look at this giant green candle. People are super greedy, and that's greed. And greedy. Oh, people got too greedy, too greedy. So when he sees people too greedy, he sells. And if I go to a longer time frame chart, it's shooting up. people got too greedy. Warren Buffett sold, it dropped so hard that people got fearful, like, oh no, it can go to zero. Once you start saying, oh, Bitcoin's going to zero, you see news like that, it's going to zero, it's going to zero. It's called fear, and that's also a time to buy. For example, like, it's a lot of stuff going on in the news with like Fed rates hikes and wars and stuff that go on and all this stuff. Those are fear moments where it's like, is the market going to go to zero? Like, people, you can just look at people, see the type of stories they're running. Is it a fear story, like, or like it's fearful, or is it a story where it's like J.P. Morgan, like when crypto was up here, he's like, Bitcoin's going to 100K and it was up here. That's a greed story. You're seeing greed, and the market drops out the greed. So that's why psychology is important. Understand fear and greed, and knowing that. And here's a tip that you guys can do. This goes into the second tip: colors on your chart. So when you see all these colors on your chart, right now you guys have no money. Probably have no money in the trade right now. So you can see these colors all day. They won't. You have no emotions. You're in your logical brain. There's no money on the line. Now, if I take my money and I put 100K in a trade right now, right? I put 100K in this trade at the top, all the way up here. I buy it at 100K, and I see this big red candle right here, this big red one. Now my emotions just kicked in. It's like, oh snap! 30K, my money's down. Like, it's falling. Is it gonna fall to the zero? My emotions started kicking in, and every candle, every green candle, every red candle, you know what I'm saying? These colors are not good for psychology and emotions. And you can use them as an expert, but if you're a beginner and you just want to save yourself the emotional baggage, then what you should do is switch a color up on your chart. You can go to a color scheme where it's just black and white. And it's a trick that you guys can use right now. You can implement right now. You can change your charts like this. And it's almost like reading a newspaper. Like sometimes I'll even go on my background. I'll make the background like a gray, and it's just like a newspaper. So that helps a lot because I see no green, no red. So it's like it's no emotions behind it. It's just boring and logical, non-emotional. So using non-emotional colors definitely helps. And this will definitely increase your percentage from 50%. So now we're already going up. Now you got percentage are going up. You're past 50%. You're trading advanced. You understand risk management, equity curves. This is the final step now. It's all logic. The wigs, everything is very crystal clear and detailed. The next step is, and that's why you guys see me when I trade. Like, I really don't care for indicators too much. I have indicators that are like the top ones that are like apex indicators, but I'm not RSIs and MACDs and all this other type of stuff that mess up your percentage. Because what's the third tip? You have to test your strategy over 20 trades to see how accurate you are. So what that means is, let's say I put an RSI on my chart. I really don't want to do it because I don't like RSIs. Let me see. Let's say I put an RSI or MACD on my chart, or whatever. I'm just not gonna do it because it's annoying. But if I throw that on my chart, I won't know how accurate that MACD is until every time. Let's say this is the MACD right here. I'll just draw one or whatever. MACD with I think they have the crossing lines on it or whatever. It's like crazy. I say this is the MACD, whatever, right? And I know for my trade strategy, I'm like, all right, here's how I'm gonna trade. Every time I see this cross on my MACD, I'm gonna take the same exact trade, and this has to be the same exact setup here. So I can only trade every time this crosses. the red line crosses down, and the market looks like this or something. And all those trades I just take, and take them over 20 trades. And then you want to track after those 20 trades how accurate you are and your percentage, because when you're using proper trading psychology, you understand that one trade doesn't determine the next trade. But if you have a sample size of 20 trades, it could explain to you more about how accurate your strategy is. You know what I'm saying? So you guys want to use sample size. You guys want to understand that, like, what sample size am I using? How accurate am I over 20 trades? Don't think in terms of one trade. That's why you see expert traders are like, oh yeah, I'm up for the year, I'm up for the month. They think in terms of 30 trades, 300 trades. They don't think in terms of one trade. They're never like, I'm up for one trade, or yeah, this next trade is gonna be it. They never think in terms of one trade. They always think in terms of more than one trade, 20 trades, 30 trades. So you always want to think in terms of the month. Like, yeah, I traded the strategy for 20 trades and I'm up. And 20 trades can happen in 2 days, like, or even one day if you're scalping and stuff like that. I had one night where I did like, I actually got to count how much trades it was, but it was a trade every 5 minutes for like 10 hours. So it was like, let's say 10, like, it was like 100 trades in a night. And I grew this account from $50 to like 30K in one night. It was the craziest night I ever had growing an account. And I was just like, that's that's my second 30K in a night trade. Now it's more common because I have a big account, but from small accounts, it was just like, it's because I was taking a large amount of trades, and I was using this equity curve simulator, and I was making sure that all my trades lined up within the properties of I needed to make this amount of money I wanted to make in one night. So you guys can change your life in one night with trading. You can have that night, that giant night, where you go out. This is how I did the $50 thing. I had the $50 in the account, and my win probability was playing at 75% accuracy, and I was only going for a 2-to-1. I didn't understand too much about risk management back then, but I understood it enough. And I did 100 trades and one line, and every time I risked 10%. Or I think I did 25%, but some trade did 25, but I would just keep the same risk actually. I think it was at 25%. So I was risking 25%. So I knew that I would go up, 50. I know all my equity curves are gonna go up, because when you're trading at 75% accuracy, you can go for 2-to-1s, and it was a stressful way to trade. Like, it's not the best way to trade, like, all in one night. Making sure you're 75% accurate, it's a lot more stressful, especially when you have like 100K accounts, you got $1 million accounts, you got more money on the line. You don't want to really stress like that. So as you get more money, you're going to change your trading style to where you can go for you can have a way better risk to reward and stuff like that. But I'll probably have a night where I go on here, I'll do one night, I'll just do a crazy flip, and just get the video out there so people can see like how possible this stuff is. Like, trading is so possible when done right. It's like life-changing money. You can go get a little job somewhere, and you can trade up. Like, you can sell an old pair of sneakers or something, like, put it in an account, and you can trade up an account, so you can change your whole life trading. I definitely recommend trading the right way. Don't just take on trading if you guys don't know the math. But those are 3 tips for trading psychology. If you want to know more about trading psychology, where I go into full detail about everything I know, the Trading Psychology Mastery course right here is where I have everything for Trading Psychology Mastery. I got chart patterns. I can teach you guys some chart patterns right now. Hey, if you're looking to take your trading account from negative to positive and become a profitable trader, you're going to check out these 10 trade commandments and not miss a single one. So let's get into it right now.
And just for clarification, who this is for? This is for the people that have been in our free Telegram signals group. which is t.me/realgross trading, and the link will be in the description. And you're trading using our signals, so this is how you use them properly.
Yeah, so if you just start out trading, you can just look at our signals. There's only one right direction for a trade, so you can just look at our signals, and you follow these rules plus these signals, you'll be a profitable trader, and it's the fastest route. So if you checked out our course before, this is the next course in the series. Yeah, so if you follow these rules, you'll be profitable. It's the fastest way to success as a trader is to have good trades with a good set of rules to follow. So it's the fastest way you're going to have to be profitable and have success. So we shot this course just for you guys. We hope you guys like it.
So number one, which is very important, it goes with risk management. Only risk 1 to 3% per trade.
Yeah, that's super important right there. Like if you start over risking your account, you're gonna see in the course video after this where we go into we go a little bit more advanced each time. But that's rule one. Let's just keep it simple right now. Only risk 1 to 3% per trade. Don't over risk. No need to be a superhero. Just risk 1 to 3%. Next one. Account growth is seen over 20 trades, not one trade. So that builds upon the first one. We're not thinking about like how can we get rich with this one next trade. No, we don't think like that. We think like, all right, this year how can we see our accounts grow? This month how can we see our accounts grow? This week how can we see our accounts grow over the next 20 trades? If you're trading with us on Telegram and Discord, we're taking 5 to 10 trades a day. So over these next 2 days, how can I see my account grow instead of how can I see my account grow with just one trade? And most traders risk it all on just one trade, and that's why most traders are not profitable. So if you want to join the few traders who are profitable, you have to start changing that around and start doing what the profitable traders are doing. And don't worry about your account size too. If you got a small account, you can do things like you can go get funded accounts. You can go, you can save up your capital. You know, there's different ways to go about it, but this is the proper way to do it. Just keep your risk down, and you can go buy a funded account for like $60. You can get like 10K account or something, and you can go on Google, YouTube, find out, do your research, ones are good, and then now you have 10K from $60, and you can still risk your 1%, and everything would be perfect, and no time would be lost.
And then number three, if you're entering a trade late, lower the risk to under 1%.
That's super important. Yeah, so you're gonna see what our signals is again. Like you guys are trading with us live. You're gonna see us catch trades live and everything, all for free on TikTok. You're seeing all the free signals and stuff. Let's say you're late. Let's say you just wake up and we're already in a trade, and the trade didn't hit take profit yet, but it's between take profit and stop loss. You can, instead of risking 1 to 3%, you can risk lower than you would normally risk. So you're normally risking 3%, risk 1%. If you're normally risking 1%, risk 0.5% on that trade, and you can still catch it and have the same stop loss and everything. Number 4, if a trade hits take profit and you still want to sit in it, move your stop loss to break even and make it a free trade. So that way, if you just want to go to sleep in it and you just want to see how high it goes, I don't this is super advanced to be able to track the trade and know when to get out and stuff. We teach that in another course, but if you like, I think it's gonna go higher and you want to sit in it, which some traders we do, and you're by yourself and you just don't have access to us, and it already hit take profit, then feel free to take your stop loss, move it to break even. So if the trade goes back against you all the way back, you don't lose any money, and it's essentially a free trade, and it was just a lesson in there or something. And sometimes it might just keep running and double. So it's good to let your winners run, but that's a little bit more advanced. But some people do want to hold trades longer than take profit. We always take at take profit because it's take profit for a good reason.
Number 5, if a trade hits stop loss, close the trade and look for another trade. Don't keep extending stop loss.
Yeah, there's a good one right there. Like, let's say we got a stop loss on a trade, guys. Like, and it hits stop loss. A lot of people message us like, "Hey, should I keep holding on? Should I keep holding on?" And I would say don't keep holding on, because that's changing all your risk management strategies. Like, get out that trade and look for your next trade.
want to stick to the code. Like our strategy is, we want to win over the time with 20 trades, not get it all in like one.
Yeah, one trade losing doesn't matter because you only risk 1 to 3%. So you can lose that 1%, come back in another trade and make back 4%, 5%, 6%. So even up to 9%, you can make a lot of money per trade. So number 6, if you want to grow faster, this is advanced right here. If you want to grow faster, open 2 to 3 positions per trade. So you can turn 15 trades into 45 trades, and all will have proper risk management. So you're still risking 1 to 3%. So let's say we're all trading live together. We're like, all right, buy gold right here, guys. We're buying gold. We all jump in. We start buying gold. Instead of opening up one position at 1%, you can open up 2 or 3 positions at 1%, or 2 or 3 positions at 3%, and you're not putting all your money into this one trade, but you're able to take more trades off of fewer signals. So this is a way you can grow a lot faster, and practicing and demo, get used to doing this. It's more advanced to grow faster like this, but it's very helpful. Because say you want to do things like leave a trade running for free, you can close 2 of your positions, put your stop loss break even on the third, and let the other one run. So it does help out to do stuff like that. But again, it's more advanced if you want to do that.
Number 7. Never revenge trade if you're down. Follow the 10 commandments until your account is back in profit. Definitely.
Yeah.
Because once you get into revenge trading, that's when you're like emotional. You're not thinking logically. You don't have that trader mentality. So,
yeah, seeking revenge is not. It's not. I think that goes into the next commandment actually. That's keep all emotions away from trading time. Like the markets do not care how you feel. They don't care what's going on in your life. They don't care they don't care about you as a person. These markets do not care about any individual trader. They don't care if it's your birthday. They don't care if it's your last bit of money. They don't care about any of that. Markets do not follow your feelings and your emotions. They follow logic and risk management and buyers and sellers. So you don't want to take your emotions and put it in like, I feel like this is gonna go to the moon, like, or like I need this to work. It's my last bit of money. I'm scared if I lose it all. Like all these emotions and stuff. Trading, they do not mix at all, and it'll be a long dark path. So you have to separate your emotions from your logic and only trade logically. You know what I'm saying? This is a commandment for a reason.
definitely, yeah. Number 9, you always want to be learning and back testing. Definitely.
Yeah, stay learning, stay back testing. Check out the YouTube vids. We keep dropping a lot of free knowledge for everyone, so it can all be learned. You don't have to pay anything, and you can trade with us live for free. So just keep learning, keep back testing. Do your research, read books. It's a big one. And then number 10, set your trading goals according to your lifestyle and pay yourself accordingly. So let's say that you're in a trade, right? And let's say you normally make like say you make like 4K a month, like at your job or whatever. So that's like making like 50K a year or something, right? And you're in a trade, and in this trade in one day, you're already up 4K for that one day. And that's really a whole month's salary. But you want to hold the trade so it could be up 10K. And I would say, why don't you secure that month of your time that you would normally spend a month doing something, instead of trying to win it all in one trade. You know what I'm saying? So say your trading goes according to your lifestyle and pay yourself accordingly. Like if you're at the beginning levels, secure money, cash out, pay yourself. And then once you're at a higher level with your bankroll and everything is higher, go after bigger and bigger amounts of money and bigger trades. Don't just try to become a top trader all in overnight or anything. Like secure money, take time, take money out the market, pay yourself, cash outs, and pay yourself accordingly for your time. Like every day when I started trading, I set a goal. I would take out more than my original job I had. So I think I was making like 150 a day, like really like nothing. But every day I'm trading, I'll pay myself that 150. I'll pay myself that, and then I'll continue trading on top of that. So just pay yourself accordingly.
And then what's next? So you guys have the 10 trade commandments. If you do want to watch us trade live and take the same trades as us, learn from us, you can join our free Telegram signals group, which is t.me/RealBrosTrading, or you can message us on Telegram at ChatGPTMillionaire.
And what's also next, if you want to learn all our high probability setups and get more of our trades and courses, you can join us in Discord. You can join from the Patreon. You can do that.
You want to take your trading to the next level? Watch this video below. Oh wait, watch this video below where we teach you how to go from a losing trader to a profitable trader.
So the video's gonna be there. It's gonna be there. It's gonna pop up. Peace.
Peace.
All right, testing sound, testing sound. Check, mic check. Everything good. All right, we're about to get into it, guys. Yeah. Okay. So first thing I'm gonna teach, I'm gonna do some teaching today, and I'm gonna be doing some live trading, do charts, break down the charts, post the charts in the group, get ready for the week. It was a good Sunday, good morning trading. We had a good morning trading the premium, made some good money. All right, let's get started. I'll do some teaching right now. I'll do some charting right now. You guys can jump in trades with me live if you want to take the same trades. You'll be seeing the premium trades going right now if you're here. So that'd be cool. Market's on pause right now. Number 9. Bitcoin market looking great. Bitstamp. Make sure you guys see the right one. So Bitcoin's moving today, really nice. We caught the down move yesterday. We came back up in the premium, so that's a great trade. Let's see, the first thing I'm gonna teach. All right, so I have a list of questions from yesterday I have to teach. So first, I'm gonna get into risk management. Teach some risk management right now, and let's get into it. Open up something to teach that in. Okay, teaching risk management. Document editor. Docs. Doc. Risk management. So let me see what the best way to teach this is. risk management. I'm going to transfer this over so you guys can see it. On screen. We're going to get into risk management. So I think it's an important first lesson because without risk management, you're not going to be able to grow any accounts. You're not going to have any success trading. You're going to be going up. You're going to be going down. You're not going to know how much money to put in an account. You're going to be blowing your accounts. And you never leave beginner or intermediate level without it. So let's get into it. All right. So the first thing I want to teach in risk management is risk reward ratio. Second thing we're going to teach in risk management after risk reward ratio is going to be, let me go to my notes, lot size. After learning lot sizes, you have to know your risk reward ratio, you have to know your lot size, stop loss, take profit. So some of the stuff I'm going to teach is very advanced, but I'm going to teach it as if everyone is a beginner and you all should be able to learn something from it. So it's going to be really cool. You can ask questions while it's going along. This live lesson is not going to be reposted. This is going to be given away to the premium members. So it'll be a premium lesson live for you guys. Let me see. So let's start risk reward ratio. Now risk reward ratio is the most important thing because I have to teach equity curves too. Equity curve. So risk reward ratio is the most important thing. Basically, you got to know how much you're willing to risk per trade, how much you're willing to win per trade. That's the simple definition of it. So let's say you have a $10 account just for simple math, or a $100 account for simple math, and every trade you want to risk $1, and your reward is how much you want to make back. So you want to risk $1 every trade. So your stop loss total would be that $1 risk, and your reward is going to be how much you want to get back. So let's say you set it to $3, $4, $5. You can set the rewards that you want to get. So risk, how much you lose on trade. Reward, how much you want to win. And the reason why you need to know these two numbers is so you can build an equity curve. So example of risk reward ratio, I'll go here. Let's see, I'll go over here. So this trade right here, we have a risk of 4. We had a reward of a risk of 1, reward of 4. So we're risking $1. If we had a $100 account and we risk 1%, we're risking $1 to make $4. So the reason why that's important to know is when we go into our equity curve simulator and we check out how to grow our accounts properly, making sure everyone can see this. So the reason why you need to know your risk reward. So on that trade, we risk 4 to make 1. We have a $100 account. Let's say we're just 50-50. Let's say we're just we're flipping a coin and the market's either gonna go up or down. So we're flipping a coin, 50-50 odds on winning. We have no trading skills besides this. So I'm treating you guys like complete beginners wherever you're at. 50-50 odds. And when we trade together, we have higher odds because you're using better trades. But if you were just a beginner with 50-50 odds, you took 100 trades. I'll just put 30 trades for now. Say you take 1 trade a day for a month. And the risk per trade is 1%. And you have a $100 account. When you run your equity curves, at the end of the month, your account will be at 150. So you're up 50%. 60% here, and you will run a bunch of simulations. And you guys get this link so you can do all this in the course and stuff. You can run your own simulations, but the risk reward is important because you need to know how your equity curve is going to grow over time, how it's going to simulate out over time. And this is super important, and this alone will put you on an advanced level because you understand if you're trading a losing strategy or if you're trading a winning strategy before you even put the trade on. So that's why risk reward ratio is important, because you need to know that. After that, we're going to go into lot size. Your lot size is important because if you don't understand how much lot size to use to equal your risk, then you might put a big lot size, and it might make you over risk how much you actually need to risk in the trade. And now instead of risking 1% of your account or 3% or 5%, you're risking 60% of your account. You're risking 50% of your account, and you just end up risking too much. And because you risk too much, even if you hit that trade, over time of doing that, eventually your account will go up and come back down. For example, if I start risking 60% of my account on a trade, I can come up, but I can easily fall back down, or I can just go straight down to zero and stay at zero. And this is how a lot of people equity curves look. They just go up and down, up and down. Some trades you see on YouTube and stuff like that, they're just going up and down, up and down. A lot of traders go. Sometimes they get lucky, they shoot up, and eventually, after going up, come back down because their equity curve is never going to be right. It's a random distribution over time. It's a random distribution formula, so it's using random distribution over time when we talk about risk management. So lot size is important to understand. So if you're using a 0.01 lot size, this means that every time the chart moves one tick, just one click on your broker, whatever your broker is, it'll be different, but every time it moves just one click, you go up 1 penny. And every time it moves down, so if the price of a coin is $1 and it moves up to $1.01, you're now up a penny if you put a buy in. So this equals 0.1 cent gain or loss. And then we'll go up to the 10-cent lot size to show you guys the math. A 10-cent lot size means you're getting a 10-cent gain or loss with every tick the chart moves up and down. So, and as we go into the trading, we start doing the charts, all this information is going to come together for you guys. And if you guys want to learn more, you already know, you can go to the free signals group. I always give advice there. And I'm not going to be going live here as much teaching, but I'm going to be doing it on the Zoom calls for everyone in the group. And I'm going to be giving the lessons there. But just to get it out here, I want to do it here for you guys. And then the next lot size would be, it's the lot size most people want to use, is the 1.0 lot size. Because this is when you see most big traders making 30K, 40K days. Everyone sees that. So that has $1 gain or loss per tick. So if the price is $1 on a coin and it moves up to $2, you made $100 quickly. So just off 100 ticks. So that's how that works. I'm not going to teach a pip conversion and stuff like that because it might get confusing, but 1 cent gain, loss per tick. So this is per tick. And then actually I will teach this so you guys can know the math. And then 1 tick, 10 ticks equals 1 pip. So that's important to know. Most traders talk in terms of pips, like, oh, we're up 1,000 pips. That means they're up 10,000 ticks for the week. So that's good to know. Next, you need to know your stop loss and take profit. Every time you take a trade, rule number 1 is must have a take profit. And rule number 2 must have a stop loss. if you're in a trade without those two things, then you're not really trading. You're just gambling. You're taking risks, and there's no such thing as trading if you don't have a stop loss to take profit, because you're not growing your account over time. You're not building your equity curve, as we talked about before. The whole win loss thing is your stop loss and take profit. So my stop loss risk reward ratio and stop loss take profit is the same thing. So you need to put that in every trade, how much you're risking and how much you're making. And once you set that, you can jump in your trades for the week. Say you have 10 trades for the day, you can take all 10 and walk away and check it when you come back home or whatever you do. Come back, see how much out of 10 trades you hit. Say you hit like 7 out of 10. So let's do the equity curve simulator. Let's say we risked I like 3%, and then we took 10 trades and we hit 7 out of 10. So we hit 70%. So it takes your 10 trades for the day. You come back home, your account will be up $200, even though you lost 3 trades. Up $300, even though you lost 3 trades. You'll still be up over time because you're not thinking trade by trade. You're thinking over a series of trades. So that's super important with risk management. And equity curve, I'll give you guys a link in the Discord and everything. I'll give you guys a link so you guys can track your equity curves, build equity curves, and you guys can do all that type of stuff. I'll add the link over to the link in the bio. I'll put the link there too. But this is risk management. This is very important, and it must be understood before trading. So always use proper risk management. If you ever find yourself not having a stop loss take profit, understand that you're risking, you're gambling at that point. So after that, toward risk management, I want to go into teach trading psychology. Give you guys a breakdown on that, and I teach this stuff in detail also in the courses and stuff. I teach in detail. It's just the courses cost like over $3,000, so a lot of people won't get to spend that type of money. So I'll give a little breakdown here for you guys, and if you guys want to learn more in detail, you guys can get the bundle for like $97 and learn everything. But if you're here right now, you're probably lucky because you're getting a lot of free sauce. A lot of people are gonna miss out on this, but whatever. Trading psychology. So, talking about trading psychology, I'm gonna start off with emotional trading, logical trading. It all boils down to these 2 points, and just to keep it very simple so it's not overcomplicated. And there's other tips I teach too, but to keep this very simple, emotional trading. What is emotional trading? You hope a trade is going good. Hope is an emotion. What's another emotion? Fear. Fear of missing out on a trade. You can have fear of getting in too late. Fear of just have fear in trading. That's one of the emotions that pop up. Greed. You can get too greedy. You can be in a trade and you'll be up a lot of money and you'll be up past your risk reward. You have good money in your account, but you just get too greedy. You stay in it and you give back all the money that you just made because of greed and stuff. So greed is an emotion. Hope is an emotion. Fear is an emotion in trading. Also, pessimism. Slaughter that word. Hopefully, I can fix it. Pessimism is an emotion too. Like just thinking that you're not going to be good enough, that the trade's not going to go good, stuff like that, because it's going to stop you from taking trades and taking action. When you trade, you want to just leave your emotions away from the workspace of trading. Once you start getting emotional, just leave trading for the day and just go breathe and just get your emotions out and come back when you're in a logical brain. Another trade emotion that I see is revenge. A lot of traders go after revenge. They'll lose money and they'll come back for revenge. Like, oh, I'm going to make all that back. I got to make all that back. They'll get in this revenge mindset and they'll get stuck in a rabbit hole of emotions. So understanding these emotions is, if you feel any of these emotions, you know that you're emotional trading. So always keep a track of how you're feeling. Let's go into logical trading now. Now we go into logical trading. So trading off risk reward, which we just taught. Trading off math. Having a stop loss. Following a trade setup. You always take. These are examples of someone who's trading in the logical mode. They know their risk reward. They're like, okay, I'm risking 1% of my account to make 3% of my account. I'm risking 1% to make 4%. I'm risking 1% to make 2%. I'm risking 1% to make 5%. They know how much they're risking and how much they're gonna make every trade. If you never not know that, you're in emotional trading. Trading off math it goes down to knowing your equity curve. Like they know over time how their equity curve is gonna look if they keep taking trades with this risk reward. That means you're in a logical state of mind. And we just taught risk reward management right before this, and we also teach it in the groups and stuff. Having a stop loss and having to take profit. That's an example of logical trading because now you know for a fact every time you trade you're gonna have a stop loss, you're gonna have a take profit. You know where your stop loss is gonna be. You know where your take profit is gonna be. You know, so every trade you take is gonna be the same trade. It's like, okay, my stop loss goes here, my take profit goes here, and that goes into step D, following the trade setup you always take. Every time you see this setup, every time, for example, look at this trade we call here. Every time I see the trade bouncing off the average, I know it's about to bounce all the way up. We call it the trade up. Also right here, see this setup, I know it's so far away from the average, it has to come back to the average price. Trade right back down. I'm not in the trade because I'm teaching. I wish I would be trading right now, but I'm going to finish teaching so I can start trading. I really don't want to miss too much moves in the market. In like 30 minutes an hour, we're going to start looking for our trades, but market is taking a nice move down right now. All right, so you always want to have a trade setup that you always take, and once it hits your take profit, cash you out, so you don't have to watch the charts. Like example for this trade, it hit take profit, it automatically collected my profit, and there's no worries. There's no like, should I take my profit or not? It's your money. Once the money's in your account, it's your money. Now your risk changed. If you're up here, you're up $100, or you're up however much money in your account. You could be up 20K, you could be up 30K. That's your 20, 30K. Like, why would you leave it in the market to come back down like this? And this happens all day in the New York session. They'll go one way, come back the other way, and they'll take everyone's money who don't have take profits, who don't have stop losses, who not trading logically. If you're not trading logically in a New York session, you're gonna get slaughtered. But that goes to trading psychology, and then I teach more trading psychology over here. I'll put it here. And then link in the bio. You guys can learn trading psychology here. You can learn risk management here. Or for my birthday month, you guys can get the bundle. Like the first 10 people will take advantage. Get all these courses, every course I teach for $97 instead of paying like $40 for some, 100 for some, 30 for some. You can save a lot of money and you can get the premium signals. So you can go deeper in trading psychology there. Next, I'm gonna go into chart patterns. This is super important too. So to teach chart patterns, first, what is a chart pattern? So you need to know what a chart pattern is, and I'm gonna give you 3 chart patterns right now. You top 3 chart patterns right now that I love to take, and it's gonna be important. So, what is a chart pattern? A chart pattern is this, for example. That's a more advanced one. Let me see if I can find one that's simplified out. That's a really nice chart pattern though. Okay, I'm gonna show you guys this chart pattern. Take that off right now. Use the red outline tool. And while I teach you, I'm gonna change the colors of the charts for you guys, so you guys can see more. Alright. So this is a chart pattern right here. I'll zoom in, make sure see it crystal clear. This chart pattern, it uses this line right here. The price comes all the way up here. It comes up away from the average. And then it finds a price that's just way too high away from the average. It gives you a rejection signal. It's like, oh, we don't like this price. It'll go up and it rejects. And then it'll start coming down. It'll try to come back up. And then it rejects again. And then you get these big moves like this. So this is a really advanced pattern right here. You can make a lot of money with this pattern. I'll show you guys. Let's see if I can find it on another chart that's happening right now on gold. I don't know what this box is. Move that on gold. That was a trade we caught earlier. All right, here, perfect. So we called this trade last night on gold. We came through. It came down away from the average, and then it came up. Tried to go down. It failed, and then it came right back to the average price. Same chart pattern. So that's one of my favorite chart patterns. You can catch that over and over. Let's see another chart pattern I can teach you guys. Let's see this chart. This chart right here, perfect. This right here is a rising wedge. So the price comes, pushes up, it breaks it, retests, and then takes a fall back down to the moving average. That's another chart pattern, very advanced, and it happens over and over. So every time I see this happening, I know my risk reward, I know where to put my stop loss, I know where to put my take profit, and I take my trade using it. So I'm like, okay, I see this happening. My stop loss is right here, right outside. Take profit is going right here, 1 to 3 trade, and then it hits it perfectly to the T. Over and over, and you guys can back test this. You can try it out a lot. You're gonna see me trade live. You're gonna see me take these chart setup patterns. That's 2, and then I'll give you guys another chart pattern. I'm gonna clear that. This one right here is a really good chart pattern. It's called a support or rejection. It's called a support or resistance rejection. When you see multiple wicks just keep rejecting a price, you know you're gonna get a move up. So make sure you guys can see that on TikTok. So you see all those wicks, it just kept rejecting, and you see so much rejection is that you know the price is going to change directions. Right here you see it again, right next to it. Price just rejects and reject, and it takes off in the other direction. Comes down, reject, comes up. It does that all day. Price moves like that a lot, and the reason why it moves like that is because the bulls and bears are fighting each other. So sometimes the bears are in control, sometimes the bulls are in control, and when the control is changing, you see a lot of rejections. Like the bears can't hold a price, they can't go down. It just comes out wicks, and then you know the bulls are taking control. So every time you look at a chart, when you're thinking advance, you want to be like, who's in control? Is the bears in control? Or the bulls in control? And then how can I make money with them? And those are the thoughts you want to have when it comes to chart patterns. Very advanced topic. If you want to learn more about chart patterns, you can do chart pattern mastery. Market cycles is an extremely advanced topic. Let me teach you guys market cycles. This right here is going to take your trading to the top level. I don't teach this for free normally because it's really advanced and it's really hard to teach. But we're going to do it right here. So I'm going to have to close this for that. Close that. So this is a chart pattern right here. We got, this is perfect. I can show you from here. So make sure you're seeing it. The chart does 4 things over and over continuously. Again, if you know these 4 things, you can just find what part of the market cycle it's in, and you can trade it just the same way. So these are advanced things. These are like things that not taught to anyone, and a lot of top traders hide this info. So we got this part of the cycle. I call it part number 1. That's supposed to be a 1, guys. That's a 1. Then we got this part of the cycle. 2. And then we're gonna have this part of the cycle right here. That's 3. And then I'm gonna teach you guys what each part is right now. Then we got the come back over here. This is 4. And the price is gonna come back up because it's in a cycle. This is the cycle of the markets, and it does this over and over again. And you guys are gonna see this a lot. So we'll see where we're at right now. So part number 1 in this cycle is a trade-in range. You see a trade-in range, it's in a 1 state. The next state you're gonna see is a breakout. It can break out up, it can break out down, and you guys gonna know how to trade both ways and know where to put your stop loss and take profits as you go through the private Discord and get mentored and stuff like that, or take the course. But it can break out up or down. Then you got a flag. At the breakout, it's gonna probably see a flag. It's gonna flag, find a support, and then you're gonna see at the flag part 4, it comes back up and forms a trading range again. So 1, 2, 3, and forms a trading range, comes back up into a trading range, and then the cycle starts all over again. Now you're in a trading range again, and after the trading range, it's gonna go right back to a breakout. It's gonna break out in one direction, and you guys will see this over and over. So you see trading range, breakout, try to come, flagged up, it came back, it broke again. So I gotta find the start of the trend for you guys. So this is a trading range right here. I'm gonna draw it on it. This is a trading range. It broke out, it flagged up, it came back to a trading range. So now it formed this new trading range. It broke out of the trading range. Not enough strength, fell back into it. It's very minute. I really have to zoom in. So it broke out here, came back, tried to break out again, came into a trading range. Breakout flag, trading range. Trading range, breakout. Let's see, this is one of the toughest topics to teach. That's why I recommend taking the course on this, but I'm trying to do it on a small phone screen for you guys. So we see a trading range, breakout. After the breakout, see flags come back, and then we see it form part 4 of the next trading range, come back, try to get this price, a can does it, then from there, after this trading range right here, the trading range looks weird, but let's consider the trading range is kind of sideways. Then it breaks out again to the upside. As your eyes train more, you're gonna see more of this, and I'm gonna teach you more in market cycles. But these are market cycles you need to know: trading range, breakout. You need to know how to trade trading rate, how to trade a trading range, how to trade a breakout, how to trade flags, and how to trade. And then 4 is a trading range again, but it's like a sideways trading range, but it's a trading range nonetheless. And it comes back to a trading range. And the reason why I separated these two is because this is a sideways trading range. Sideways. This could be diagonal. And this is very advanced. Like traders don't teach this, so I don't know if you're gonna be able to learn it somewhere else, but you guys can learn it in the market cycle mastery, where it will be taught in more detail for you guys. Gotta minimize it. You guys can learn it there, market cycle mastery. Next up, we'll do how to grow a small account next for you guys. So let's say you have a small account of, what's a small account? $100, $10. Like how much is a small account for you guys? $1,000. Someone said they had like $50 yesterday. So, and I have the video where I grew the $50 account to 3K, so you guys can see it. But say you have your $50 using the risk management skills that we learned, that you guys learn in the video, early in the video I taught risk management. Using those skills, you know your starter equity, you know your win probability, get out the way. So if you're an amateur trader, you want to keep it like 50%. If you're using the tactics that we teach and you learn, you can have it to 60%, 70%. And then you want to know your risk reward ratio, how much your risk compared to how much you're going to win. You can keep it at 4-to-1 right now, or 3-to-1, 2-to-1. You can test them out. If you're growing a small account, I recommend staying 3-to-1, 4-to-1 area. 2-to-1 is like, you might as well go work a job when it's 2-to-1. So 3-to-1, 4-to-1, and then you want to take your trades. So you take 1 trade a day, 30 trades, or you can take 10 trades a day, however you trade. If you're trading a premium, you can catch the trades, and then you have your risk. So you risk 3% of your account, and over 30 trades, that $50 is went to 180, went to 200. Right here, $50 went up and down. So this right here is not a profitable strategy. So you have to get your win probability up to 60% if you're gonna go for 4-to-1s. And when you do that, that $50 turns into 400. And this looks like the scenario where we traded, and you see on the TikTok, we grew the account to 3K. The count just goes up. It has no choice but to go up over time, because as long as you're hitting all the goals of your win probability is 60%, and if you're trading using the signals, you'll be at 70, 80%, 90% trades, and then your win loss, you're going for 4-to-1s, and you're risking 3% of your account, which is high risk. That $50, just risking 3% of your account, that $50 turns into $450. So it's really easy to grow a small account, and this is how you grow an account. And for a large account, it'd be the same thing. You have 50K, or if you guys get the $1 million accounts, let's say you have your $1 million accounts, you go get funded, and you take the advice, you go get funded, you have $1 million in your account in 1-2 days. Literally this week, you have your $1 million in your account now, and 60% accuracy, going for 4-to-1s, and you don't want to risk 3%, you risk 1% of your account now, because you have so much. Now that mil just went to 1.8 mil in a month. Went to 2 mil in a month. This is how you have $1 million months, guys. When you get to $1 million month levels, this is how you're trading. You're going for the trades. And then when you're up like this, you don't even have to go for 4-to-1s. I would go for 3-for-1s. And just go for 500K months, because it's 500K in a month. Like, there's a lot you can do, a lot of property you can buy, and you're just gonna find yourself cashing out and buying, hopefully, assets and not liabilities. But you can buy whatever you want, treat yourself nice. And this is how you grow a large account, guys. You lower your risk to like 3 to 1, and you risk 1% per trade to make 3% per trade. So 1% of $1 million is $1,000, and every trade you make 3,000. And if you lose a trade, you only lose 1,000. And all you have to do is be 60% accurate. Which I teach you guys with the setups I have. Those are solid setups that are accurate a lot of the times. 70% accurate on some of them. Some are 90%. So you have a lot of accuracy, and you can grow any account using that method. So this is really advanced. If you want to learn more, go into how to grow a large account. I'm not going to teach the trading setup, so I can go into the indicators here right now, but I'm not. I'll do a 5-minute chart. I did the indicators yesterday for you guys, but I'm gonna keep that for the paid people, because a lot of people have paid for that, and I don't want to do them injustice by giving it away. So I made this page right here for you guys, where you guys can do stuff like get funded accounts. You can get the free signal group here on this page. The link is in the bio on TikTok, and the links in the below for you guys. But you can get free signals. You can get the free signals, basically 1 to 2 signals a day. You get those signals, and you can grow an account at a fair speed. Paid signals, I give out 10 plus signals a day. So now you're growing your account way faster than you would on free, 5 times faster, 6 times faster. So you can grow account faster with the paid signals, and it's a little bit more bonuses with that. But then on top of that, you guys can get funded accounts. So you can get funded for $2 million on using this link right here to fund your account for $2 million. So let's say this week you don't have money, you don't have millions of dollars, but you want to make 60K a week. Instead of getting a leveraged account or using leverage, I would prefer you get a funded account, and it's still leveraged and same rules apply, but you'll be able to make more money and actually cash it out. So you can get funded for 2.4 mil. You use both of these, sign up for both. In 1 to 3 days, you get funded for 2.4 mil. There's no credit checks, none of that, anything like that. You can get funded, and now you have a 2.5 mil account. And you can grow it. We grow accounts 10% a week. If we do a 10% a week on 2.5 mil, you're getting 250K on an account. If you grow your account just 1% that week, you're making 25K. So if we hit 2 trades, just gain 2% gains. And you guys see the trades we did on the free signals, they're bigger than that. But those 2 little trades would have made you 50K this week. So you can make 50K a week easily. That's how traders make 50K a week, 60K a week. They're buying cars, buying houses and stuff. That's how they would do. The trading lifestyle is very lucrative once you understand the math and you know how to make it pay for itself. So I recommend that. Got to drink water. See what else we got. This is the leverage trading. 1,000x leverage they give. So you get 1,000x leverage, and you get the bonus on this one. This one's for a trade copier. So if you don't have much time to trade a big account or something, whatever, put your money in, deposit, take the same trades that I take on my account, and you can grow an account that way. It's a cool way to grow. Then we got risk management, and the risk management is where I go over the math. So if you go there, I have books, I have typed up the numbers. I made a cheat sheet for you guys, so you can use the cheat sheet to do the math simply, and you'll learn everything about risk management there. We got trading psychology for the mindset you need to have to be trading, chart pattern mastery, market cycle, how to grow a small account is good too. It'll teach you how to do the math also in that. Indicators, charts, YouTube channel and stuff. All right, so the risk management. I'll explain what a pip is. So if you guys don't know what a pip is, you can go over there and learn exactly what a pip is. But one pip equals 10 ticks, and a tick depends on your broker. So different brokers have different tick sizes. Sometimes a tick is 1 penny. Sometimes a tick is 10 cents. Sometimes it's $1. So you want to a tick is each time the chart moves one click up and down. So you want to look at the chart, see how it's moving, and understand what a tick is. So now this goes into the next thing. Now you guys understand the tick. Let me know in the chat if you want me to explain it better. So now you, you know what a tick is. This video is how I would make 10K a month as soon as possible if I had to start all over again from zero. So this is gonna be a really good video. Put this together for everyone. We got the cool meme. We put this presentation together for everyone. So let's jump right in. Step one, capital. This is the first thing you're gonna need if you're gonna even consider making 10K a month. How much capital do you need? In 1 month, if you go for a 10% account increase, you have a better chance of reaching it than trying to go for 1,000% or 10x increase in your account. So let's say you want to make 10K a month, you have $1,000 account, and you want to do it with $1,000, it's going to be harder than if you had 100,000 to start with. But everyone doesn't have $100,000 to start with, and we understand that. So if you don't have 100K to put in your trading account, we recommend getting a funded account. We'll leave the link to that below in the description. But pretty much, you pay $300 for a 100K account, and you pass like 2 challenges, and you have 100K to trade with. And with that 100K now, you have the capital. You spend 300, so you have the capital. The next thing you want to do to make your 10K a month, a trading plan. So now you have the capital, they gave you 100K or you have your own 100K. Successful businesses, they have a business plan. Successful traders, they have a trading plan. So if you want to be successful in trading, you need a trading plan. And I'm going to give you a trading plan that I would use to make 10K a month. If I had to start all over again, I would trade Monday through Friday, take 1 trade a day, which is going to be 20 trades for the month. 4 weeks in a month, 20 trades a month. I'll risk $200 per trade. So if I lose more than 200 that day, I'll stop trading and I'll be looking to win 1,000 for the day. And I'll do that every day. And if my win percentage is higher, but let's just say that you're someone you don't have a high win percentage. Let's just say you have a 50% win rate. You win. It's like flipping a coin. Like you win in 1 trade, you lose one. So let's say you're not even the best trader, but you have a trading plan. You'll be able to make your goal of 10K in a month or 11K in a month. So you see, we started with 100K. Our win probability was 50%. Risk to reward ratio we went to was a 5-to-1 on this. Took our 20 trades, we risked just 2% per trade. And this is all the stats. We had losers, we did lose trades, but the winners made up for it. And we talk more about that in this free video course we have on our channel. You guys can check that out. Called High Probability Setups. But all we did was stick to our plan over the month, and we were able to make 10K off of $300. So I know it looks confusing, but if you need help getting to 10K a month trading, you never traded before, or you're not good at it, don't worry. We're gonna work with 5 people who like, comment, and subscribe to this video and get them to 10 to 15K a month trading. No trading experience required. Our automatic copy trader uses our premium signals that we use to grow our own accounts and then link it to your account. And you must have a minimum of 2,000 to start, and you won't have to do anything. We'll set up everything and oversee everything, and you can just sit back and you can get to 10 to 15K a month in trading. But we're just choosing 5 people who like, comment, and subscribe to this video. To do that, to let us know that you did it, join our free signals Telegram group, t.me/verbose trading. It's going to be in the description below if you're interested. And I'm happy to see everyone join again. I can't wait to see you guys. Peace.
Hi. I am still having trouble calculating risk ratio and profits to losses. Can you show when we join DC?
Yeah, I'm gonna break down. I'm gonna do a lot of breakdowns for everyone. What all you guys need help with for the week. I was here to set up the. Let me see something right now. I'm about to set that up now.
Like IDK, how much profits it'll make if it hits TP or SL?
You said I don't know how much profits I make if it's TP. Oh, all right. So boom, I know exactly what you need help with. Actually, that's a common problem I helped a lot of people with. And normally once they get that math, they're able to grow their accounts. That's why you're not able to grow because the math. It's the math. It's not. It's help. It's affecting your growth on your account. Hey, what happened to the cam? Why is it not? Oh, okay. All right. So now we're getting the Discord set. So let me send out the Discord link first to
There is
everyone in
zero
Premium.
volatility.
And I always got to keep a chart open today. We're gonna keep a chart open. Keep that on this side. That on this side. Oh, forgot we're live on YouTube. No more music.
Hello.
Yo, what's up? I'm saying, what music you guys want today? You guys want jazz? You want? Let me know what music you guys want. Royalty-free music, FIFA inspired music. Sounds cool.
Friday, it's the best time to trade, my bro.
Yeah, Friday's the most volatility. That's why we're really about to get into it.
Play us something good.
This is all royalty-free music, so
I am playing
I don't
FIFA
know.
RN.
All right, so you're playing FIFA right now. This is the FIFA playlist for streamers on Twitch.
Scalping on Sideway?
All right, now I'm gonna get you guys. Yeah, we're scalping. So this is how you scalp sideways. All right, so where's the tool? I'm gonna teach you guys some really advanced right now. When you guys are in a trading range like this, this is gonna take everyone to the next level. What you want to do in a trading range, you want to divide your trading range up into thirds. So this line right here will be your sell line, and this line right here, the bottom third will be your buy line. And every time the price comes down to the bottom of the trading range, you look for buys in the bottom third, and then you sell at the top. And you can all day you can grow an account in a trading range. Like most people don't know how to trade trading ranges, but you can grow a whole account just up, down, sell line, buy line, sell line, buy line, sell line, buy line. So I'm gonna delete that. But yeah, this is a little bonus for everyone trading. I appreciate you guys trading with me, so I'll give you guys some bonus. All right, so right now, everyone in Premium, you guys are getting a Discord link, and then
Nice idea.
you're gonna get a live on there. Yeah, you guys can grow accounts in any market. Like that's what in the bootcamp what I wanted to do.
Only gold.
Nah, only for the free members I trade
My
gold.
message not reading out.
For the free members, these pairs right here, I'll show you. It's a lot. It's like 27 pairs. I'll jump between them certain days, but we got Bitcoin, ETH, XRP, Doge, BNB, Sand, all the crypto coins that I like, US30s, GJs.
Price on compression.
It's
Good
a lot
luck,
of
bro.
pairs. It's a lot of pairs. our long-term trades, we've been in Bitcoin since like 16K. Like our long-term trades, we all slap. Scalps are more volatile, but we slap our scalps.
New trade posted on Telegram.
200%
Message at
trade,
ChatGPT
300.
millionaire on Telegram to join.
I haven't started calling out. I trade futures too on for Kucoin app. I want to start calling those trades for premium, but we just set up our Discord, so we're gonna be able to do more. We got like people coding bots into everything. All right. Just want to use the Mac too. You know. All right, so we'll just set up everything right now, guys. Yeah, so in Discord, it's broken down like this. We got your 10 trade. We got our 10 trade commandments. Those 10 trade commandments are going to teach us how to grow account no matter what. If you're struggling, you feel anything, read the 10 commandments. It's going to get you back in a place of mind to catch your trades and continue to grow the account. It has all of, there's more rules, but the top 10 that I spent a lot of time putting these 10 together. The 10 trade commandment section. So check that out. We got a risk management section where I give you guys cheat sheets and rules for risk management and like tools you guys can use to calculate the risk better and faster and become more accurate with it. You got the psychology section. You got the psychology